and start off slightly lower today. Pre-open rates will come in, of course, but what are the stocks on your radar today?
So still going with a hedge position in the sense one long, one short. On the long side, you've got a cash stock, Kirloskar Pneumatic. Now this one's had a 4-month long consolidation period, with a 200-point range. Last week, it's broken out of that range on the back of very strong volumes. I think, on the upside, this momentum could continue up until 1775 and 1850. And your stop loss comes in at 1600, 1625. That's the support zone. So that's where your stop loss comes in. On the short side, you've got Berger Paints. Now the stock's been reeling under the 200-day moving average pressure for a while now. Every rise has been taken as an opportunity to sell around the 200-day moving average of 545, 550. So this one's a sell. On the downside, you're looking at a target of 522 and 516, and 535 acts as your stop loss.
That's a couple of buy calls coming in, or one sell call and one buy call coming in from Kush. Remember, crude has been fairly volatile, and that could be one reason why Kush has the call that he does on Berger Paints. Well, the Nifty is expected to see a flat to slightly lower start, and we're sub 24,200 now on the Nifty, and that could be worrisome for a few who've been tracking the index closely. The Sensex, on the other hand, is expected to see a flat start, so don't expect too much in the early minutes of trade. Sony, auto will be in focus this morning. Largely on back of pretty fantastic numbers that have been reported. Any trades in the auto pack, also keeping in mind that October was rough for auto stocks. A technical bounce back cannot be ruled out with fundamentals supporting the sector, right?
So absolutely, Samina. So on technical parameters, if you look at the auto stock, which is looking, and lucrative from a short-term perspective, trading idea, then I think one should look at Eicher Motors. So Eicher Motors has been continuing to hold above a 2050 exponential moving average on daily charts, which is above its 4,800 support level. It's very good, strong support. A lot of put writers have built their base around those levels. So on a positional basis, the stock may test 5,100 odd levels. Any break above 5,100 gives you a fresh breakout on charts, and the stock may head towards 5,300. So I think these are the two levels to watch out for, with a support of 4,800.
Okay, well, so that's on a specific name, but I think a bucket of stocks which will focus, which will be the oil marketing companies. Now, oil has largely been soft, which probably is a big trigger for them for their October to December quarter income. But there is more news today because there is a hike in commercial LPG cylinder prices. Mika Johnson, you tell us what is the nature of this hike and possible impact of the same. Mika, good morning.
Good morning, Neeraj. So OMCs have hiked the 19 kg commercial LPG cylinder prices by 62 rupees, and the 5 kg free trade LPG cylinder prices have been increased by rupees 15. But the 14.2 kg cylinder, which is actually the retail cylinder, the prices for this remains unchanged. Now, when you talk about the city-wise update in key metros, well, Chennai, we have the highest rates at 1,964.5 rupees. This is the current commercial LPG price opposed the hike. Delhi, it stands at 1,802. Mumbai at 1,754.5. Now, when you talk about the potential impact, well, the LPG hikes could offer some relief to the OMCs. Higher prices lead to higher revenue realizations, and it's something that's known that the OMCs have been facing heavy losses on LPG sales this year. Now, this total H1 FY25 OMG LPG losses range from 4,000 to 8,000 crores, depending on which oil marketing company you pick. But while the commercial prices have been hiked, the companies are facing the losses on the retail LPG cylinder part of it, which is currently being sold at a subsidized rate due to the Ministry of Petroleum's mandate. So while we don't know the breakup, there could be some relief from the total sales realization front, but the LPG retail prices that have remained unchanged is a key pain point still. When you talk about if the price hike is enough, well, not really. The support, all the companies have said that they need the support from the government in order to recoup these losses. This was expected. A possible allocation was expected for this phase in budget this year, but we did not see that coming through. The prices of the retail LPG cylinders remain unchanged. Like I said, it's a key pain point, and these prices need to be hiked by at least 200 rupees per kg as per Hindustan Petroleum's management in order for the companies to even reach the zero under recovery.
That Mahima, that explains why some of these OMCs are going to be in focus in today's day of trade. Sony, one more stock that caught your attention, I'll come to Chakri as well on it, is Zen Tech. Very solid numbers coming in from their stable. I know it's not an F&O stock, but on the charts, how good does Zen Tech look?
So Samina, on charts, the stock is above its 10 and 20 exponential moving average support. So I think around 1790, 1800 range lies multiple support, and it's very important that it holds on to the support. On the higher side, it can test 2000. That's the immediate resistance one can see. If it's breaking above 2000, it becomes a fresh breakout on daily charts, and the stock may head higher towards 2150 odd levels. I think one can accumulate on small dips around 1800, keep a very strong support of support stop loss of 1780 from those levels, and then look for higher targets of 2000 and above that 2150.
Okay, well, this doesn't surprise that Zen Tech is doing this. It may do 10%, it may do 8%, it may do 6%. Don't quite know what will happen at the end of the pre-open or what it does today. But because he's already, as Samina was highlighting, he's done 500 crores of revenues already. He's surpassed last year's profits in the first half itself quite convincingly. And therefore, it'll be interesting when Ashok Atluri talks to us today at 12:15 p.m. to try and understand from him what's next. But I'll tell you what Goldman Sachs believes is next, because they believe M&M could do well because they have a buy call on the back of the strong SUV order backlog with EV launches. Harsh Johnson with a slice of that report. Harsh, good morning.
Good morning, Neeraj. 27% upside is what Goldman Sachs sees on M&M. They believe, of course, the pipeline remains very strong, both on the PV side of things as well as on EVs, which launches should keep the growth number buoyant, especially for M&M going forward. They believe both launches as well as backlog will drive growth, and growth will be better than peers, so it'll outstrip growth on peers. The other piece is they're constructive even on the cash cow business, which is with regard to the farm equipment. They believe that improving underlying market dynamics, including a good monsoon, will aid the numbers for that particular space as well. So it's going to be a twin engine which is going to drive growth. They're expecting a 20% EBIT and 100% free cash flow CAGR over FY25 to FY27. Very, very bold in terms of the numbers itself. And they're expecting 11% beat to the average analyst on Bloomberg as per EPS estimates as well. So a far cry in terms of the way they are estimating numbers versus how some of the other analysts on the street are. Very, very constructive, Goldman, and a 27% upside.
Right, that is a few brokerage calls coming from Harsh. Thank you for that. Constructive on M&M is the view coming in from the brokerage. Well, Chakri, we didn't get a chance to talk to you about Zen Tech. You want to share your views with us on how you feel about the company? It's a little bit of an outlier in the defense pack, and I know while the sector, PSU defense, has been a sell trade for most fundamental analysts too. This one being in the private sector with its very interesting product offering, and the fact that the numbers have been a beat quarter on quarter, would you recommend a buy call on Zen Tech?
Being a private company and it has various levels of qualifications to be able to sell into the defense sector, which in itself is a big moat that the company has built for itself, and that moat affords it a kind of a multiple which you would not give to other companies. And second, in terms of their revenue beat, it shows that the order momentum continues to be strong, giving confidence that the company can grow for the next 3-4 years with that, and that's what the multiple requires. So I think, yes, you could potentially nibble into a stock, but mind you, the stock has actually done very, very well.
After the pre-open session, pre-open rates have settled, and I would say not half bad, frankly. IT stocks under pressure this morning, and that I suppose will continue for most of the week until the air clears on who is the next US president. But the Nifty and Sensex ending pretty much flat. The Bank Nifty in the green. In terms of movers, not too many. Max Health doing okay. It's all about auto, I would say. Look at Hero, look at Maruti Suzuki, look at Bajaj. Bajaj auto numbers there on your screen. and seems pretty flat, frankly. Total two-wheeler sales are up only 2%. It had a bit of a spike, but then it's paired off compared to a Hero, maybe not that great. Let's pull up what Hero has done pre-market, pre-open as well, as we should see M&M too. I want to see what Ola Electric is doing. Hero Motors about 2% up. Good set of numbers in this month. We should look at TVS very quickly. M&M is down about 1%, so the numbers were pretty robust. Ola Electric about 2% up. They've regained their top spot in terms of market share. TVS Motors also slightly up in the green. Kush, anything interesting that you're spotting after the pre-open session?
I'll stick to the auto pack. M&M for the most part has respected that very strong support zone of 2650, 2700. So as long as that is intact, I think there's a long trade to be had on Mahindra & Mahindra. The momentum indicators are a little sideways, so that could be missing. But from a medium-term perspective, this is shaping up very well. So M&M, let's say with a stop loss of 2650 and for positional targets of 3000 and 3200 is something that can be considered. But mind you, this is a positional view.
That's coming on the auto pack that's been on the sell side all through the month of October. No major relief, at least in pre-open tricks that we have. Sun Pharma is another stock. There's a little bit of a negative news flow that could be impacting the counter in early minutes of trade. If you can quickly pull that up, not too bad. 1% off is what we have on the stock. Apart from that, Bank Nifty once again will be in focus. Metals will be something to track as well. So you've got lots of moving parts across the universe of the markets. HDFC Bank looking slightly better off in early trade this morning. Chakri, I think largely barring maybe one or two banks, most banking earnings are now behind us. What was a standout for you? Which is the banks that you would buy from a one-year perspective that you're constructive on post what you saw in terms of earnings?
If you look at bank earnings across the board, largely, as expected, their NIMs went down. Their provisions kind of improved, which provisions going up is a good thing. NIMs going down brings the overall provisions volume not good. Look rates and deposit growth rates, there has been a match depending upon the type of the bank. But where has been more consistent is actually in the PSU banks, whether you look at Canara Bank or State Bank, their numbers are stronger. So I think, the value, and they were corrected also. So those are the companies that I would buy into.
Well, that's the view coming in on some of those banking names. Another few stock, just a quick check on the Nifty. We've got a couple of minutes to go as we gear up for pre-open trade. It's expected to be a flat start. Don't expect too much in terms of market move, but it's a far better picture than what implied Nifty was indicating too. The Nifty expected to start at 24,300. Kush, if we hold on to 24,300 for most part of trade this morning, would that give you enough confidence to initiate a long? And if yes, what would be your target on the Nifty if you do so?
So at the current juncture, the risk-reward ratio from a positional standpoint may not be as attractive. And the reason I say that is because 24,000 is the broad support zone. And on the way up, you're looking at a 24,600. So we're bang in the middle of, that range. But let's say from a daily perspective, as you said, if 24,300 is held, then you will see some sort of an up move towards, 24,375, perhaps 24,450, those kind of levels. So from a daily perspective, that's the number that you're looking at, 24,450, another, let's say 50 or maybe even 100 points of an upside if this is held. However, there is still a mix of red and green. It's not all green on my screen as well, in the pre-open. So I'll be a little cautious. Maybe any dip towards 24,250, 24,225 should be a more attractive level rather than, at a 100-point gap up.
Right, you've got a few of those auto counters that are performing and supporting the Nifty in pre-open trade at least. So Maruti is up 2%. You've got Eicher Motors, it's up 1%. Pharma Major Cipla is also looking okay in early minutes of pre-open trade. So all in all, it's not looking too bad if we can call it that, right? It'll be a steady, stable session. Chakri, just extending our conversation from banks to the earnings season so far. What were your standouts in earnings reporting in the second quarter? What did you like and what would you buy?
If you look at the earnings, basically there were earnings downgrade, and this was because of a revenue slowdown. So, which kind of indicates that, companies, they were growing at best only. On the other hand, you had some of the industrials where actually the earnings revenue growing faster than the inflation, which was growing faster than the real. On the other hand, IT companies actually held out well. So if you sum it all up, IT as a sector, with its fortunes linked to the US, stock sectors have actually corrected, valuations are fine, so they're looking good. Some of the power companies, because power is not dependent whether on internal or external factors, there's secular spending. So whether it's an NTPC or power financiers or all the power related companies, I think are on a good wicket and good enough to buy.
Okay, I'll stay on all of you with just about 15 seconds left for the markets to kickstart trade. Keep in mind that we're looking at a small degree of large cap stocks which will be individual movers, maybe the likes of Sun Pharma, maybe the couple of OMCs and so BPCL on the Nifty, but a clutch of mid-sized names could be in focus as well, some for the right reasons. But here's how the indices are starting off, as flat can be really, or 0.2%, so nothing too dramatic. Banks are in fact very, very flat. Wonder what the mid cap and the small cap indices are doing. Nifty IT down 0.5%. So the Cognizant guidance narrowing, maybe that's impacting. Mid cap index 1/3%, small caps about 1/3% as well. Nothing too dramatically untoward. Let's get the heat map up on the screen, see if Sun Pharma is sulking in trade. Yes, it is. 4% lower for Sun Pharma on the open because of the US court injunction on the launch of a specialty drug. Bajaj Auto reacts negatively to its numbers, and IT has predominantly Infi, which is starting off lower. Not that all the others, so HCL Tech and Tech Mahindra haven't started off negatively. It's Infosys, which is essentially starting off lower. ONGC, Hindalco, BPCL are amongst the others which are down. It's a large degree of red because the Nifty is now quickly slipped to about nearly 0.5% lower in trade. I reckon heavyweights like Reliance are to be blamed for that. What's doing well? Mahindra and Mahindra, 3.5%. Goldman Sachs note. Cipla on an upgrade from Nomura as well as Investec. Eicher Motors up about 1%, and then Tech Mahindra and HCL Tech. So the news from the center, sorry, this is not a cricket match, and thankfully it is not because India has lost very shabbily. But M&M and Cipla on the upside, Sun Pharma on the downside.
You say news from the center, I hear something else. No, bad morning, and the index sliding quickly. Between the last 20 seconds, you've seen another 0.20% of the Nifty coming in. Let's pull up the sectoral indices this morning, and I suspect IT will be one of the worst hit. Apart from oil and gas, the LPG price changes are not quite helping, 1.5% down. Look at the wider markets and the broader markets crack as well. The Nifty small cap about 1.5% down as well. Only Nifty Auto managing to stay in the green, but just about by the skin of its teeth. The rest looking pretty dismal. Mid cap and small cap stocks also hurting. Individual stocks we could look at, a lot of them auto numbers and some of them that Neeraj spoke about. So Hero, M&M, just want to add Ola, Bajaj Auto, all of them reacting as per the numbers. M&M the only one doing okay. Hero Moto actually had a decent set of numbers, but the stock now down about over 0.5%. Let's look at Ola Electric and let's look at Bajaj Auto as well. Both down in the red. Bajaj Auto over 2% down. Azad Engineering, Premier, NBCC, all of them had order wins. Is that helping? Only for Azad Engineering, nearly 10% up. I think this is an outlier stock in a market today which is quite dismal. So Azad Engineering, with that 5-year pact with Mitsubishi, is the one which is doing okay. Zen Tech, great results. Is it being rewarded by the street? Just barely so, 1.5% up right now. Zomato was one which struck me. Is there some impact of Swiggy's IPO opening this week? Perhaps sentimentally over 2% down. And Max Estate is the other one. There's an Investec note out which was quite positive on Max Estate. Has that helped or not? I'm not too sure. But overall, Samina, I would say that this is a tough morning. It's a tough morning for the market. Nothing too much to celebrate, even in the broader markets. And I think the broader markets are cracking even more. Even Max Estate not being helped by that Investec note.
Another tough morning. We've been out for quite some time now. October was tough. The start of November, barring moderate trading, is not looking good. Remember, the broader markets had outperformed the benchmark in October, but at the start of November, the mid and the small cap space now is getting beaten down. Small cap index lost only 3% in October as compared to the benchmark, which was down 6.5%. So there was outperformance on mid and small. This morning, the trend is reversing, where mid and small are looking far worse than what the benchmark is looking. On that note, I want to do a quick check on Bank Nifty, because Bank Nifty has been resilient for October. And that for me was a clear standout trade, right? Because despite a mixed bag of earnings, Bank Nifty managed to gain with marginal, end the month of October with marginal gains backed by DIA buying. This morning, Bank Nifty doing relatively better, but in negative territory, 0.3% lower is what we have. Remember, Asia this morning isn't doing too badly. Wall Street had a record run on Friday. So despite very strong global cues, the trend in India seems to be sell India, and that largely seems to be what most traders are also doing. Nifty 500 is down 0.9%. Your top gainers, macro tech developers, are 5.5%. Gillette has been a trade last week. Remember, their earnings were quite impressive, on back of which the stock has been gradually gaining this morning, up 5%. Couple of order wins, NBCC, Premier Energies and Ashok Bilcon. If I can quickly get those up on the screen, and if see the markets are rewarding any of those, not at all. NBCC is actually down 2.5%. Premier Energies is down 0.5%. And Ashok Bilcon, while we're at it, let's do a quick check of how that stock is reacting too. More than likely, it's probably seeing a downtick. 2% lower is what we have. CAMS is having a pleasant morning, 2.5 to 3% higher. Asset management companies aren't doing too badly. So companies or financial institutions ex-lending are doing relatively better in early trade as we see it. UTI Asset Management up 2.5%, M&M is up 2%, Tech Mahindra 361 WAM are some of the positive movers in early ticks across the broader markets. On the sell side, Poly Medicure had it rough on motor trading day. It was very, very wild, right? So it had a gain of 15%, finally went home with gains of 7-8%. This morning, giving up everything it picked up on Friday, down 8.5% on Poly Medicure. KEC is down 5%, Triveni Turbine is down 4%, Star Health, Sun Pharma, Imami, Credit Access, Grameen are trading with a cut of 3 to 4%. Just a quick mention on Pondana Engineering. I don't know whether Tamanna highlighted that, but those earnings were fantastic. Whether the stock is rewarding or investors are rewarding the counter is what I'd like to see. If I can get Pondana Engineering on the screen, that should be helpful. On back of one, and it's trading flat. So nothing really. Sony, you want to quickly come in? Any sort of stock or trade you've identified, maybe on the sell side, if not on the buy side this morning, because it's just looking like a very tough morning again.
Certainly, Samina, quite tough. However, there's still a buy side trade that I have on my radar. It is Federal Bank. Now, on 13th of August, it tested a new high of 206.5 odd levels, and it's still sustaining above 200 as of today, even though the market is quite choppy, and it is heading to test those highs again. So if it breaks that 206.5 resistance, the stock can head towards 210, 214 as a next resistance level. And there's good, strong support of around 200. So I think, the stock may hold on to the 200 support and head higher. So it's even building some fresh longs as of this morning. So I think this is one stock that is in my radar for today.
Okay, that's on Federal Bank. What else? I mean, I was just, so one of the stocks that is likely to draw in some FTSE flows today is Torrent Pharma. I wonder, and now that the big block deal is behind it, I wonder if there is some merit in this one on the long side. Selective pharma names are coming up regularly as long calls. Kush Bora, any thoughts on Torrent Pharma?
Had a very steady run of consolidation, but then it's given way. So now I think on the way up, 3,300 will act as a bit of a resistance zone. So I think for now you could ward off that purchase. The likes of Cipla that are doing well today, perhaps something that you want to keep on the radar, but not Torrent Pharma particularly. 3,300 was a very strong support zone. So as I said, the supply pressure could come in. So you might just want to be a little watchful before you buy. Let 3,300 be taken out convincingly, perhaps a day of close, and then you can consider.
Just one very quick one. I want to come to you, Sony, on this one. Now, we are sub 24,200 on the Nifty. we were talking to an analyst recently from Nuvama, and they indicated that the Diwali week we may be slightly resilient, but once Diwali is behind us, November may continue to see selling pressure. Do you feel like after outperformance on the mid and the small cap index in October, even though I know the mid cap index is in correction phase, come November or in November and December, the Nifty may potentially go down to levels of 22,000. Does that seem possible? I mean, we're still looking at a 8% correction from here on. Likely or rather unlikely at this stage?
So, Samina, if we are looking at such a deep correction, it cannot be maybe from current levels, because, a lot of parameters are very close to getting into an oversold level. The possibility of the indices correcting that much or, testing towards 23,000 as a first level that it can test would only be if there is some short covering where there's enough space for, the FIs or maybe to add the fresh positions. Of course, come November, they have started the entire series with aggressive shorts. So they've not covered those shorts, and Nifty has corrected quite a lot. So there could be a bit of a covering first, and at a higher resistance, maybe around 24,500 to 24,800. So that level, maybe that range is where a fresh round of shorts, if at all it gets created, then one can say that, maybe November, it continues to remain as volatile. And there could be a possibility of the second half of the series to test the lower levels around 23,500 odd levels. So I think that is how it can be looked at. Current levels, even if it has to fall and break below 24,000, it may find a support around 23,800, 23,700 immediately, because 23,700 is where the 200 EMA is still intact for Nifty on a positional basis. And by the time it tests around those levels, it would have entered a lot of oversold parameters. So the covering would be as sharp and strong from those levels as it can go from current levels. So I think it's better not to go aggressive shorts at current level, maybe remain hedged, of course, for the second half of the series. But any fresh round of selling should only be seen in the second half of the series once it has reached the resistances, and then there's a there's a high possibility that it can test the 23,000, but maybe it happens on a positional basis.
Certainly corrective moves out there, all right, today, and a lot of individual sectors and a lot of strong names too are correcting in trade. Chakri Lokpriya, a lot of people would have bought in the Samvat session, and a lot of people would be in a mood that, okay, now that the Nifty is closer to 24,000, which seemed almost impossible when we were circa 26,000, but we are here now, here and knocking on the door. Is this the level to nibble, or even the nibbling level is a bit lower, Chakri?
Actually, when uncertain events happen, the markets always tend to overreact. If you look at the current correction, and the Nifty has probably corrected about 5, 6, 7% in the last one odd month, earnings downgrades have been more or less been in line with that. And some of those high-flying stocks in the defense and all are down 40, 50%. So that way, the froth has largely gone out. Companies like sectors like IT, I think those, whatever is the outcome globally in the US, would still be easier to buy.
Right, Chakri, that of course is the trend in the market. And just a quick check of how the broader markets are performing in trade. Nothing seems to be helping the Nifty, at least in terms of trade. 24,100 being 24,100 has broken on the Nifty. We're down quite sharply now, 0.8%. So struggling. We did dip below 24,100 just for a flat second, and we've tried to recover from that, but nothing material, as you may say. 24,096 is what we have on the Nifty 50. The broader markets looking as pain. The small and the mid cap space are down. Stocks are getting beaten down despite there being no major sort of reason to sell any of those counters. So case in point, Kirloskar is down 5%, Poly Medicure is down 7%, JB Chemicals is down 5%, Star Health is down 5%, Blue Star is down 4%, KEC is down 4%, Sun Pharma, of course, there's a stock-specific news trig on that one, is seeing a 3% cut. The Nifty 500 itself is trading lower, down about 1%, with Gillette being the only counter that is supporting the broader markets to some extent. But that chart on the screen is worrisome. I don't know, Sony, you want to come in on this one? I mean, this is not what we were anticipating this morning. We've slumped, broken 24,100, which was, I assumed it was quite the level of support, assuming that 24,300 was tested on Friday when we closed markets. What is going on? Who is coming and dumping us this way?
So, Samin, I think the support is still continuing around 24,000, and that would be quite crucial on a closing basis, perhaps. Of course, on intraday basis, if 24,017 spot breaks, then there could be a possibility of that another 50 to 70 points dip, and it can test 24,000 on an immediate basis. It's very important to watch out for these levels. Now, if it pulls back from 24,000, then there's a good support one can say, and there's a possibility it may again recover towards 24,200, 250 odd levels. However, if that support also breaks, and especially on a closing basis, then it'll certainly bring a lot of alarm, and one would have to continue with a very aggressive hedging positions when it comes to indices. So all eyes on 24,000 for the day, and certainly that's a level where even bulls would be fighting to defend, and that's the level to watch out for, because that's going to be a very serious fight between bulls and bears to make as a make or break level for the day.
Tough morning. Kush, what's the trade here? And so, of course, Bank Nifty is feeling pressure quite intensely in the last few minutes. And let me talk about the top loser on the Nifty 500 as well, Poly Medicure, company which you said you should look at buying at lower levels. Are these the lower levels?
So, Tamina, first of all, in 4 days, or rather 3 days, the stock went from 2,600 all the way up until 3,400. So, had a stellar run. And, in a market like this, the higher they go, the harder they fall. And, that's what we're seeing. So, we did mention that, buy on dips close to 3,000 levels. It's below that. Now, my suggestion would be to hold off that purchase. The only reason being that, the ferocity with which it has come down is a little too much for my comfort. So, you might want to hold, let the consolidation happen, because in 4 sessions, the stock's been very volatile. Maybe a session or two of consolidation, and then perhaps this can be looked into as a buy trade again. So Poly Medicure very much on the buy side, but if you're buying fresh, then perhaps hold off for some consolidation to kick in. Now just to come to Nifty and Bank Nifty, this move, at least from how the morning was shaping up, is a bit of out of the blue. But now do you go short on the Nifty or even the Bank Nifty? I don't think so. The reason being that 24,000 is a strong support zone. We spoke about that in the morning. That 24,000 was held for the most part of the last week. If that is broken, that's when you will see some more pain coming into. Sure.
Closing below 24,000 or an interim drop sub 24,000 becomes a short trade.
So technically speaking, closing below 24,000.
So that's what you need to watch
because what
today.
can happen is you could very much get a rebound or short cover trade from just below 24,000 levels. So closing below 24,000 will be more troubling for the bulls. And even the Bank Nifty 51,000 was respected for a good part. So that's the level. Both the indices close to support zones. You don't want to go short at these levels at least.
It's recovered 24,100. I mean, even if it's a minute or two, we should be, I guess, marking that. But Sony, Chakri, Kush, thank you for joining us. It's a tough day of trade, and I guess that makes it even tougher for all of you who've got to go back to work and track these markets very closely. Well, let's move on to a management conversation. TTK Prestige has reported numbers. It seems like it's a mixed bag. There has been some pressure on their margins, and their exports have also declined quite sharply. But let's understand the outlook for the second half of the year. Mr. Venkatesh, MD of TTK Prestige now joins us. Venkatesh, good morning, happy Diwali, happy New Year. Just let's talk about how the quarter has been and what's the outlook going ahead. Despite a 3% increase in revenue, EBITDA decreased by 10%. Margins have dropped from 11.1 to 9% in this quarter. I do understand that there is some pressure on back of higher raw material prices. You want to give me a sense of are there any other reasons why there's been a drop in margins? And going into the second half of the year, how do you plan to mitigate rising raw material cost?
Good morning, happy Diwali and a happy festive season ahead. Yeah, we've seen sort of a rebound of top line happening. On the cost side, there have been pressures from the raw material and packing material pricing. There's been sort of a sharp ramp up that's happened in the last quarter. We believe it's consolidating, but the impact of that is to be felt as the year moves ahead. We focus more on mitigating this cost through internal cost re-engineering focused on automation in terms of manufacturing. Some of our plants are getting automated and digitized, and that should hopefully mitigate a little bit of the cost as we move forward. We've also been investing in sort of strategic initiatives, ramping up our R&D costs, and that probably also has a little bit of impact on the costs as you look at. Overall, we do believe that as we move ahead, the market is sort of bouncing back, and that should help us as we consolidate our costs, and that should give us a way forward that's looking much more better.
Venkatesh, margins has been a concern, and hopefully it does settle as we go into the second half. Exports have also declined substantially, 26% year on year. Can you talk to us about what the challenges are in the international market, and also what can we expect going into the next few quarters? Are you expecting exports to rebound? And has the problems been geography specific, or has it been more broad-based in terms of the decline that we've seen on exports?
It's been broad-based, and one of the key reasons is for the macroeconomic situation outside the country today. A combination of logistics, a combination of freight availability. Orders are robust. We do see that the orders coming in are robust, but supplying them and fulfilling the orders has been a concern. And that's one of the reasons that you see exports being a little subdued than what it should be. Would it bounce back? I think it's going to take some time, primarily because of the macroeconomic situation. As that improves and availability of freight support increases, we should be able to sort of supply better. But we do believe that overall the robustness of the demand is something that we're starting to see. Quarter two, we've seen a good demand in terms of exports. Fulfilling them is becoming a challenge.
Mr. Venkatesh, hi, Tamanna here. I'm just wondering how you are looking at the pressure coming from e-commerce as a method of people buying. Is this something that you think gets worse going forward, and what is the outlook that you're seeing? This was, what has festive been like for you, and is the outlook now looking better in terms of consumption?
So if you want to look at from e-commerce perspective, e-commerce is one of the fast growing channels as far as the industry is concerned, and TTK Prestige in particular. The demand has been fueled by the ability to fulfill demand in the tier 2, tier 3 towns. So there's a geographical expansion that's leading the e-commerce growth, which I think is good as we move forward. There have been pressures in terms of pricing, which is sort of being now controlled. And we do believe that a good mix of general trade and e-commerce would be helping us to grow much faster. E-commerce and quick commerce are two channels that are sort of growing fast compared to the general trade. And that I think would continue to happen as the channels, as the e-commerce players expand into tier 2, tier 3 towns.
Right.
Okay. What is the kind of outlook that you're seeing now on margins, sir? Are you expecting commodity prices and input prices to go on impacting you, and do you see margins at least improving by the end of the financial year?
There is pressure on pricing in terms of raw material and packing material. That continues to be on the higher side. Mitigation efforts are on, but that pressure, in my view, would continue through the year.
Right. Venkatesh, a couple of things that we want to get an understanding from, right? From what we understand, the trade channel is also experiencing some pressure from e-commerce platforms. And I believe that is another, while revenue has seen an uptick, that could be something that becomes a concern going ahead. Are you adopting your sales distribution network, implementing e-commerce? Because the smaller players are largely based there, right?
Yeah, as I said, e-commerce is one of the fast-growing channels.
How much has it grown, Venkatesh, and how much will it improve your revenue in the second half of the year? If you can quantify that, that would be useful.
It has been upwards of 20% across the industry. So we do believe that growth continues to happen for the e-commerce channel. However, having said that, I think it's important to balance both the channels, because general trade continues to lead the expansion of the industry into geographies. It leads into numerical distribution expansions. So we, as a company, we focus on balancing both general trade and e-commerce in a very smooth manner. Pricing is a very critical element of this game, and that's something that we tend to control along with our e-commerce partners. So one channel would not grow at the cost of the other. While consumption definitely, yes, is moving towards the e-commerce channels, particularly in the towns, we do believe that the general trade will ramp up faster as they move, consolidate, and that should help growth as we continue to invest in both the channels.
Mr. Vijayaraghavan, good morning, Neeraj here. The sound bites that are coming in from various consumption companies about what the Indian consumer is doing are perplexing in some fashion, simply because some companies have gone out and said that they've experienced a rural revival, but it's difficult to call that whether it's sustainable or no. Likes of Pidilite have said that they've seen rural doing well for the last 2 quarters, and therefore it doesn't surprise them. You've kind of focused on premiumization. So I would love to understand from you, what is your belief about what the rural consumer is doing versus what the urban consumer is doing? And would it be idiosyncratic to you because you are focusing on premiumization, or would that hold true for the entire sector in which you are present in?
So I think we need to look at it as 2 bits. Premiumization definitely is happening at one end of the market. However, as I mentioned, there is another end of the market, which is a mass market that continues to keep growing as well. So India is actually witnessing sort of a dichotomous situation where there is a premiumization that's happening at the top end. There's a substantial growth that's happening at the mass market end, driven by, in particular in this category, driven by Tier 2, Tier 3 adoption very fast. So I tend to believe that the 2 opportunities are independent of each other and need to be addressed by a very different go-to-market that companies would adopt. This category in particular, and TTK Prestige, focuses on both the ends, and we are therefore adding on to a mass portfolio as well as we move forward. Our mass brand is doing well, and we do believe that both the opportunities are presenting themselves for a scale-up as we move forward. The concern, however, has been in rural, which is beyond the urban towns. If I were to look at beyond the top 2, Tier 3, Tier 2, Tier 3 towns, I do see that there is a little bit of a demand weakness that is there today, and that is something that probably is also impacting us in the current quarter numbers. As you look at, we've been serving rural through a different model, and there's been a challenge of demand from deep rural, as I would call it, beyond the towns. That is something that is a challenge that we see in the industry and we see in particular.
Okay, and would you believe that's holding true only for your industry? Because one of the large FMCG companies apparently said that there is no middle class now, per se, to cater to. In some sense, the middle class has gone absent. I mean, what's your sense there?
So if I were to look at it from the lens of segmentation, I think there's a very sharp segmentation that's happening. Therefore, the earlier scenario of taking a mid path sometimes for brands do not exist today. The segmentation is actually therefore making brands to be very sharply focused on premium, mass premium, and the mass market as well. So a mid path of catering to some part of the top segment, some part of the middle segment, that I think is vanishing as an opportunity today. So I wouldn't say middle class is vanishing. I think the segmentation and the consumption patterns are getting diverse, that each opportunity is actually becoming unique by itself. So companies which have brands, which have a portfolio of brands which cater to multiple segments, have a sharper opportunity to grow faster.
Mr. Venkatesh, just wanted to know about, you're sitting on about 850 crores of cash. What are your plans to deploy this? What is the kind of strategic outlook now for the rest of the financial year?
So we've sort of engaged with some external partners to evaluate these opportunities at this point of time. As we move forward, we will have a sharper view and a framework on where do we sort of look at some of these acquisition opportunities. But long term, we do believe that acquisition opportunities are an integral part of a growth strategy as we move forward. You would get to see some of those opportunities pan out maybe a couple of quarters down the line.
No, so just to reiterate and simplify that, there are acquisition opportunities you are actively looking at right now.
No, we are not actively pursuing at this point of time, but we do believe that we would come back with a very strong framework to look at some of these opportunities.
Okay. So it is on the horizon, maybe 2 quarters
it's
down.
On the horizon.
Okay.
Yeah.
Okay.
Right. Thank you very much, sir, for joining us. Good luck. And hopefully the second half of the year, like you said, should look better for the business. Remember, margins have also come under pressure on back of rising raw material cost. Exports have seen a decline of over 26%. But the company, of course, strategically working on improving the way they sell, and of course their distribution network too. Rural's been a problem. It's not just been a problem in this quarter, but the last quarter as well. So rural demand not seeing too much of a pickup in that sense. But from one company to another, we have with us the management of Sheela Foam, who will be joining us shortly to talk to us about their quarter as well. It was a tough quarter. Despite a 33% increase in revenue, net profit for the company has seen a 79% decline YOY. We will, of course, try and connect with the management to understand what's going on. Remember, they've also recently made some acquisitions that are revenue accretive as we see it. Rahul Gautam, Executive Chairman of Sheela Foam, now joins in. Hi, Rahul. Good morning. Thanks for joining in. Rahul, let's start with the numbers on the face of it. We've seen a 33% increase in revenue, but net profit is down 79% year on year. What were the primary factors that contributed to the significant drop in profitability, and what measures are you implementing to see that change and improve in the second half of the year?
So thank you. I'm sure that you are aware that we are going through a process of integration. We acquired Kurlon about a year back. It was October last year. And during this process, the streamlining of the back end, the front end, and all the services that has been taking place. Happy to announce that integration is almost nearing completion. And the impacts of that are getting reflected on the sales part of it. As far as the profitability is concerned, if I look at both the companies and compare it to that from the previous year, we have improved. However, all the benefits of the synergies and the other things are yet to come in, but they are in progress. And as I have advantage of looking at October too, that process is well on track.
Mr. Gautam, good morning. Neeraj here. Been a while. A happy new Samvat to you. I wonder if the Samvat could turn out, the start of the Samvat, which is the first 6 months, could turn out to be good, because a lot of people believe that the government spends which haven't happened thus far are impacting both consumption as well as capex, and that turning around, if the government does indeed decide to go down that path, will improve the economic growth and thereby consumption as well. How do you sense this for your business as well as for consumption at large, sir?
So thanks, Yar. I'm in complete agreement with you. I think this shift towards a higher growth was just waiting to happen. Now, if it coincides with the somewhat changing, so be it. But as I see the next couple of months or 6 months, at least for our trade, for our business, for Sheela Foam, Kurlon combined, I see that as positive. One thing which is, of course, giving us some tailwinds is also that the acquisition is about now a year old and the integration is nearing completion. So as a company, we have a little bit of an advantage compared to the segment per se.
And Mr. Gautam, so therefore, if this indeed turns around, would that help operating leverage and therefore operational metrics as well? Or is the margin hit for completely different factors? And would the new normal be what you've done in Q2 on the margins? Or could those improve as well with improved sales?
The margins will improve. In fact, the trend or the trajectory is upwards as these synergies kind of come in. And in the coming times, we just see that improving.
Right. So let's, I don't know whether you've moved on from margins. Can I go back into Kurlon? Let's talk about volume growth. Sleepwell volumes have grown 40%. Kurlon's volumes have grown 26% YOY. Would it be a fair assumption for us to make that this is the pace of volume growth we can expect from the company the second half of the year, with a clear bias that there could be upside risk to that number?
So the order of growth will not be very different. However, the numbers may not be as high as this because we must appreciate that this is just when the, as I said, that the integration is in its final lap. However, we would continue to see the full impacts of it happening. And the percentages may not be 43 and 26, but more like 20% as we go forward.
Let's assume that that level will moderate, of course, because the heavy lifting has already been done in this quarter. With Kurlon, which you mentioned that the integration is on track, the anticipated annual recurring savings is expected to be 100 odd crores. You want to tell me whether those cost savings are being realized already, or when will they be realized, and what is the sort of timeline you've set out for yourself to achieve that?
So this 100 crores is based on the current run rate, and some of it we would have seen in the quarter which has kind of gone by, but the real benefits would come in the H2 part of it. We expect the entire 100 crores to be at the full run rate before the end of the financial year.
Mr. Gautam, so I believe you cited that you will probably grow at a 15% CAGR for the next 3 years. Correct me if I'm wrong. Would FY25 also turn out to be a year like that? Can we start off with that? Do you believe 15% in FY25 can happen?
So our expectations were really from FY26 onwards. However, we would see something which is not too far away from there, at least on the volume part of it, we would see growth of the level of between 10 to 15% as far as this FY25 is concerned. But we will be on track of it for the 15% CAGR from February onwards for sure.
Okay. The other is a slightly broader question. I mean, and because you are present, and again, correct me if I'm wrong, but at the premiumization end, that belief was that the Indian premiumization story, with the per capita being what it is, will only see a non-linear hockey stick effect. One, I see you talking about 15%. Two, I hear a corporate after corporate coming out and saying that it is not turning out to be as simple, and the categorization needs to be very specific for even premiumization companies to log in growth. So some will log in growth, some won't. What's your sense here on this?
So I'm quite in agreement with majority of them that premiumization, though that's a constant effort that we do as a company, however, is not so easy to do, and it is definitely category specific. So, for example, for our category, which is really not a top of the mind category, it's a mattress is a mattress. I mean, to say that a good mattress and a bad mattress or a not so good mattress, to differentiate between the two, to communicate that, to let the people understand, experience it, it does take some time for that to happen. And in the last couple of years, there have been two major factors which have really tried to bring the ASPs down. One was which started off with COVID. Now that is kind of bottoming out. But the other one that is actually impacting is the e-commerce side. I was always thinking that e-commerce is not something that would impact us as a product, because it's a voluminous product. Sizes have to be accounted for, plus something which is not easy to exchange. I mean, I know companies are giving a 100-night free trial, etc. But e-commerce, as it grows, per se, people believe that you should get a better deal, and therefore that keeps driving the average selling price, and which is very contrarian to premiumization. Having said that, it's our job as a company, and now that as I said, we are settling down, our process will be to get back on this journey of premiumization. It will be slow, but it will happen.
Rahul, just one more question, because we do understand that you're trying to enter into new segments in newer markets, so Australia and Spain, where, of course, your top-line growth has been slower due to lower raw material prices as well. Could you tell us what are the plans for Australia? What are the plans for Spain? How is this going to, sort of help your top line and your bottom line going ahead?
So both Australia and Spain are very different from each other. Australia, we've been there for almost 17 years. It's a very matured market, settled market. Population does not increase. Everyone has mattresses, and it's only once in whatever 8-10 years that that you change your mattress. However, it's an economy where it's going to be stable. It's not going to grow too much, but it does create a lot of advantages for us to, as far as technology is concerned, marketing capabilities are concerned, product developments are concerned, and that's what it gives us. When we shift to Spain, and in Australia, we are a large market, probably the largest player in that market, almost about 35%. But when we go to Spain, we are a very small speck in the entire European market, which is the largest market in the world. There, we will grow. And in fact, if I will see the last quarter and plus any subsequent time, we have been growing at about 14-15% on volumes. The top line may appear a little subdued, and that's only because the raw material prices have gone down. But as far as quantum is concerned, so we see that as a good, steady growth market that will continue. Of course, both of these places being developed areas, we do cross-learn a lot from each other. We see them as steady and progressing. We don't expect any more acquisitions or anything like that. The focus is going to be on the Indian market. And I would say that if I look at the last quarter, what used to be once upon a time, the India versus the Australia and Spain together, a ratio of about 65-35. Today, we are already at 70-30. 70% is Indian market. And the focus is going to be on this market, on the Indian.
Got it. Got it. Mr. Gautam, great talking to you. Thank you so much. And we do hope that the hopeful recovery happens sooner rather than later for the industry at large and for you in particular as well. Thanks so much for taking the time out.
Thank you. Thank you very much for inviting me.
Thank you. That's Mr. Rahul Gautam of Sheela Foam with his thoughts on the space at large and on Sheela Foam as well. Hopeful of a 15% CAGR. This year's growth should not be too far away from that number. On that note, and on the note that the markets are not looking very good. In fact, the small caps are down about 1.7%, with the large caps being down 1%. We call it a day on this edition of India Markets Open. Thanks so much for tuning in. Up next is Talking Point. We start off the conversation with Bajaj Auto and then move on to a market guest, Rahul Arora of Nirmal Bang Johnson, to talk about the market picture. Stay tuned.
Market veteran Ramesh Damani puts on the cephalogist's hat to get you the insight you need on the US presidential battle of the century. Will Kamala Harris claim a historic victory, or will Donald Trump march back into the White House?
According to polls, if Biden and Trump were running, I think Trump would have handily won. He was almost measuring the drapes to the White House even before the election.
What are the stakes for India and its investors?
The road to the 1600 Pennsylvania Avenue goes through Pennsylvania this time.
Tune in to US Election Watch with Ramesh Damani, exclusively on the NDTV network.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow, the newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple.
If you think the market is moving upwards, just buy Nifty call option. But if you think the market...
Thanks for tuning into Talking Point. I'm your host, Neeraj Shah. With me is Tamanna and Afcons Infra. Just mark that one before we get into the conversations, because a large IPO, the price band of 440 to 463, which was subscribed about 2.77 times, likely to start off on a tepid note. About 425 or thereabouts is where Afcons will possibly list, which is about an 8% downtick to its issue price. And you could argue part of it is on because of the markets, but you could probably also argue that at a point of time when the Nifty is down 8% in one series, the market mood isn't in the best of shapes to really reward new kids on the block. The kids may be large size names like Afcons. The management out there ready to ring the gong. Unfortunately, the listing will not be a very strong one. So the prices come on your screen in just a moment out there, about 7% lower. Unfortunately, not the best of starts for Afcons. But, well, long game. Let's see what it does over a period of the next 6 to 12 odd months. Good morning, Tamanna.
Good morning. You know what I found, and the market will do what it does, but what I found very emotional was a comment from Shapur Mistry, who you see there ringing the bell, talking about Cyrus Mistry's strategic leadership being transitional in completely changing Afcons in its journey, and saying it's helped Afcons shift focus to global ambitions from domestic ones. So Shapur Mistry, remembering Cyrus Mistry today is also something which is important, and at the end of the day, a very, very solid company. Let's be clear about that. Yeah. A very solid company. Maybe it's a bad time for it. The issue was also undersubscribed, and yes, it has had a bit of a dismal listing, no doubt about that. But let's talk about auto sector in focus, Bajaj Auto in focus. Rakesh Sharma, the Executive Director, joins us this morning. Mr. Sharma, pleasure to speak with you here at NDTV Profit, and thank you for giving us your time. Let's come to the numbers that we've seen for October. And, let's start with what's happened with two-wheelers. A bit of a slide there, something that you were expecting? Or was this a little disappointing when you compare to what you had penciled in for the month of October?
Good morning. Actually, the outcome in October has been a smashing success, frankly speaking. Yeah, because, let me just decode the October outcomes as per how we are looking at it within the company. Foremost, the important thing is to look at retails and retails during festive. The billing numbers, which is what we say is the sales to the dealers or wholesale, there's the time when we've gone into a destocking mode, because we were stocking up in August and September, and then there is a surge in retails because of the festive, and therefore the billing to dealers drops in October and will continue to drop a little bit also in November, because we are all preparing for servicing the high peaks of the festive demand. Now, to understand how the festive has gone, it is important to compare apples and apples. So it's important, the right thing is to compare this year's festive, retails in this year's festive with retails in last year's festive, which are different calendar days. This year, it's from 3rd October to, let's say, 31st October, though there is a little bit of a festive in the north, which will, in the Bihar and UP, which will continue. And last year was 15th October to 12th November. So to understand how the industry and how the company has performed, we look at festive sales, festive retail sales in the festive period this year and in the festive period last year. So now when I look at this frame of reference, it's been a smashing month actually, both for us, and I think the industry has also got lifted up with particularly the last 2 weeks of performance. Our area of focus, as you know, is the 125cc plus segment, which is almost 53% of the motorcycle industry. We have grown in retail terms upwards of 20% in that. And at overall retail sales has growth is there of about 11-12%. We have sold 200,000 plus pulsars, and our overall festive sales is post-COVID the highest ever festive sales we have recorded. In our premium end, we have had the highest ever sales of both Triumph, and when you put Triumph and KTM together, then the premium bikes have done very well. At retails of 36,000 units or so, Chetak sales have also recorded an all-time high. And finally, the three-wheelers has come in with quite a smashing performance with retails of almost 56,000 units. You know, the previous high was somewhere around 45, 48. In that, there is an all-time high retails of 7,000 units of EV three-wheelers, which is all driving, our towards leadership in that segment too. So actually, just looking at the billing data, as we call it, really clouds the thing. In fact, it.
So let me come on that point, Mr. Sharma, because you make an important point. The way you look at data, I suppose, matters. And today, perhaps the way the street is looking at the data, as far as Bajaj Auto is concerned, is we are seeing an 8% drop in domestic two-wheeler sales year on year. You're saying that is the sales to dealers, retail sales are even better. But it seems like it's exports that have driven this month's sales. And if I look at it in view of what you said in your con call after your last numbers, where you looked at festive sales outlook a little dimmer than what the street is expecting, how do I juxtapose the two? It's becoming difficult to get a clear picture. Is the two-wheeler auto industry under pressure or not?
Well, we have always said that the way to look at the market is retail sales. Billing sales is all about, every company, including ours, has their own approach to building up stock and managing stocks in the channel. And that doesn't reflect what is actually happening at the ground level. So in our internal discussions as well, or when we talk to analysts or to the media, our primary focus is always on how retail sales is happening. And that is all we are doing. Now, the only thing which is different this month is that the frame of reference is comparing retail sales of this month with the festive period of last year. Because if I simply compare October 24 retails with October 23 retails, you will find that our growth is in 30% plus, because last year in October, there was only Dussehra and Diwali fell in November. So we are comparing like for like. And in that, so this is nothing new. It is always, if we have to understand the industry, it's important to understand the ground level consumption. And that is actually suggesting that the festive did start slow. The Dussehra run up to Dussehra was a bit slow. We exited Q2 a bit slow. And our annual outlook was between 6 to 8% growth for the industry. It was dipping down to 5 to 6%. But the last couple of weeks in the Diwali markets particularly have been smashing. And that has lifted the whole industry. It has obviously lifted our performance up. And as a result of which, I think the forecast going ahead is back to, a healthy 6 to 8%.
Okay,
So I think
that's an important point, Mr. Sharma. Can I just come back to you on it? So the forecast, which was 1 to 2% after the numbers were out, the quarterly numbers were out for Bajaj Auto, and now that you have seen how festive has paired through, is back from 1 to 2% to 6 to 8%. Am I understanding this correctly?
Quite frankly, I don't know where and what this number of 1 to 2% is. We have always
has scared the market, this 1 to 2% number, and it's quoting you from the con call. So which is why I want to just put it into perspective.
No, it may have been for, there are many questions which are addressed. Now, if people are selective, then I cannot do anything about it. But it could have been, the September month. It could have been a week into the festive. I'm not sure exactly what that 1 to 2%, but we had felt that the growth will be between 5 to 8%. I think that is a point which we had been making. And in fact, the last 2 weeks, what is more important actually is how things stand now. And how things stand now, given the flourish of the last 2 weeks, I think it's been a very, very good festive period.
That's an important clarification from Mr. Sharma. It was always 5 to 7%, and the last 2 weeks of festive period have been very, very good. Is it possible for you to quantify it, Mr. Sharma, on how the last 2 weeks have been? And then I'll just add one more question to it, do you see this sustaining? Is this a festive bump, which of course in the entire industry, you see a bump during festive period and then you sort of peter out. What is the kind of numbers that you see sustaining through?
As I said, I quantified it by saying that in our area of focus, which is the 125cc plus segment, in this 30-day festive period, compared to the similar period last year, our growth in retail terms is above 20%. And at an overall level, it is, 11 or 12% in motorcycles. In electric vehicles, it is in triple digits. Now, so that is what the festive is. Now, obviously, a festive period, if the average sales in a month is about 8.5%, 9% for the year, arithmetically speaking, the festive period is about 12%. So obviously, there is advancement or postponement of sale, which bumps up the sale like in the festive, like you're saying. But when you start to see, the festive could have gone worse, and then that would have put some question marks about the months to follow. But I think the customers coming back to the purchase cycle in such strong numbers indicates that after the sort of dip, which is expected in November and December, things should be looking good, back to the kind of forecast we were doing of 6 to 8% for the fiscal, for the industry.
Got it. So, Mr. Sharma, one would presume, and good morning, one would presume, or am I presuming it correctly when I hear you right now, is that forget October because that would have two festivals bump up, but the trend seems to suggest that October plus November, or October, November, December put together could well have this 6 to 8% average growth rate YOY over the OND quarter of last year. Would that be something that you would believe could happen?
Yeah, for the industry, I would say that it should be in that zone.
And for you?
Difficult to predict exactly. But a good festive brings back, a slipping estimate which was slipping a little bit. It has brought it back very, very strongly. And I would say, yes, it is, we should be looking at, and it's important also to, if we have to understand the industry, to not just look at, 1 week or 2 weeks and be so sensitive to that. These trends unfold over a few weeks and months. So just taking a week out and seeing how it is growing is very, very misleading. So, but I think what you're saying, I would sort of support that kind of a thing. I would, in fact, extend it to the whole fiscal rather than, because again, you will see in November, there will be an impact. December is a low month because, people sometimes wait for the new model year, etc. And therefore, it is important to, at least from our perspective, it is important to look at the next 6 months. And this kind of exit from April to October creates confidence for the next 6 months.
Just one point, Mr. Sharma, on market share. So in October, at least in the domestic segment, there seems to have been some slide in market share. Do you see that coming back, buoyed by new launches? What is the outlook there?
See, again, the market share, I would, even for our internal analysis, I would wait till middle of November or end of November, frankly speaking, because the best way to look at market share is from Vahan. And the crush of sales is so high in the last 3 or 4 days that it does take time for Vahan to be updated. But having said that, but our estimate in our chosen segment, which is 53% of the industry, which is motorcycle industry, which is the 125cc plus segment, like I said, we've grown retails by 21%. And sooner or later, it will reflect in Vahan, like it will for everyone else. We believe that this part of the industry has grown less than 21%. It is, of course, grown, but less than 21%. And because we have grown faster, I would actually say that we have garnered some market share over there.
Okay, fair enough. We'll wait for those numbers. Thank you so much, Mr. Sharma, for coming in and speaking to us. And we'd love to have another opportunity to talk to you when we have clearer data on the last 3 or 4 days, since you've mentioned that the last 3 or 4 days have been important. Rakesh Sharma, ED of Bajaj Auto there. The stock feeling some heat, but then frankly, so is the entire market. I mean, it's really looking worrisome. Neeraj, in the last 20 minutes or so, 15, I think 10 odd minutes that we've been speaking with Mr. Sharma, you have seen the Nifty give up 24,000 with completely no resistance, nothing to hold back. The Bank Nifty really hurting right now. Heavyweights on the Nifty. Look at the top contributors. The Reliance, they're maybe the biggest drag on the Nifty, if I'm not mistaken, would, yeah, that definitely the top drag on the Nifty, ICICI Bank, Bharti there. There's just a clutch of 1 or 2 auto companies which are holding up the flag. But otherwise, I mean, I don't like it when this term is thrown around, but this is the time to use the word bloodbath, perhaps, because of the severity and intensity of the fall in the last few minutes.
Yeah, VIX is up 8%, and frankly, it's not the banks or the Nifty IT which have corrected as much as some of the others. So Reliance clearly taking the baton off the losses, because 1.4% for the Nifty, banks 0.75%, IT 0.5%. So the two heavyweight sectors are not correcting as much. Rahul Arora, CEO of Nirmal Bang Institutional Equities, with us as well. Rahul, you would argue, and thank you so much, Rahul, for agreeing to this request, because I know it was a bit of a last minute for you. So appreciate you accommodating this, but it's kind of playing out as per script for you. The Indian cricket team and the markets, both of them are not quite faring as per what people would want.
Morning, Neeraj, and thank you for having me on the show. So I think, Neeraj, this was, I mean, you've probably heard it enough and you'll probably get bored with my answer, but I think this was long overdue. I think there was a certain reality check that was required in the market. Fundamental earnings growth was never supporting where the valuations were in the first place. And, we saw that beginning with the defense sector about 4 months back. It went on to the EMS side, consumer durables, electricals. It slowly moved into IT services, then consumer staples again after the results, and now it's percolating into auto. So I think you're sort of seeing, Neeraj, as we were discussing the other day on motor trading as well, this is probably the worst earnings cycle that we have seen going into a Diwali in a long, long time. What is very evident, Neeraj, is that the rural economy is in a mess. I think when you have Hindustan Lever coming out with 2-3% kind of volume growth, two-wheeler manufacturers giving you the kind of numbers that they are, DMart just about getting into teens in terms of top-line growth, and even certain consumer discretionary plays like PVR. I mean, you look at the stock of PVR today. I think that's also taken a bit of a knock on the chin, despite a big ticket Diwali release. So I think the problem, Neeraj, here is the biggest earnings growth in India over the last 10 years has come in because of margin expansion. And over the last 5 years, because of balance sheet deleveraging. So you've had debt come down, interest costs come down, and therefore profitability growing. From here, I think, Neeraj, the entire onus is going to be on top line growth, and the visibility of that seems to be lacking. And I think the market is now adjusting to that new order reality. I still don't think we're going to fall off a cliff. I still think that, somewhere around 22,000, we will find a floor on the Nifty. But I think the move to 26,000 now from where we began this fall could be a very challenging one.
22,000 is 2,000 points away, Rahul. So that is actually a worry, because we've cracked 8% odd in a matter of a month and some days. So that's been, as much as people would like to say that it's been a sideways move now, we had a very swift pull back because not too many people anticipated this in some fashion, even if the valuations were high, because the domestic flows kept on keeping the market afoot. You reckon that pillar and those numbers will come out in a matter of a few days would be a very important gauge of what the markets do? Because if the retail investor blinks and those SIP flows get impacted, that could be an even bigger problem, if you will.
So I think you've raised a very important issue, Neeraj Bhai. And I think, the point is a lot of investors who've come in for the first time in the market post-COVID haven't really seen a correction. So I think you've raised a very critical point as to how they react in the face of a correction, because they've just seen the Nifty go from 7,500 to 26,500. So this is something new for a lot of first-time investors as well, and flows will certainly be tested. But I think the fact that you use the word retail, Neeraj, I think, if you look at the defense, infra, a lot of PSU stocks, a lot of these were bought by retail and HNI. There was not a very large institutional holding that, propped up these stocks. Now, the interesting part is all of these results are stacked up in the second half of the result season, starting now to up to the 15th. So it'll be very interesting to see what kind of results they declare and the reaction of the retail side of the market to that, because that is where the maximum ownership is. That being said, Neeraj, I think, while you're saying that, okay, we're down about 10%, but look at the earnings cuts that have happened. I think in some cases, the earnings cuts are 10%, in some cases 15%, in some cases even 20%. So I don't think the market is not doing anything that is not making sense. It's cutting in line with the earnings cut. So let me give you a classic example. IndusInd Bank, right? We cut our own estimates by about 17% for the current year, and the stock was down 20%, and most brokers cut between 15 and 20%. So I don't think what's happening is senseless, for lack of a better term. I think there's a method to the madness. People were pricing in extrapolated growth, thinking that it will keep getting better. But I think a reality check has hit. So I think the one thing also that happened, Neeraj, is, as you went into the general elections, earlier this year in May, I'm guessing the rural spending to the bottom of the pyramid would have begun in March, April. That effect has waned off. Now, there was a fund manager who recently told me, but VMart's results were good. But, the counter argument to that was VMart's results were good on such depressingly bad numbers that they should actually have been growing 40, 50%. So, I think if you have a situation where consumer discretionary plays are only going to be giving you the kind of earnings growth that we've been talking about, it goes back to the point we were making the earlier, a couple of days back, that, maybe money will keep chasing those and expensive will keep getting expensive. But, I think, Neeraj, just look at the banking data that came out over the weekend, right? The sectoral deployment data that came out over the weekend. Credit growth is down to 13%. Housing growth is down to 12.5%. Services credit growth is down to 13%. So you are having a situation where credit growth in the banking system is also struggling to just about hold on to teens. The only thing that grew well in the sectoral deployment credit growth was the loan against gold, which grew by 50%. And gold has been a hot topic of discussion across the board over the last 1 month. That's the only thing that actually probably held up that 13% growth. So if banks are not going to contribute, if FMCG is not going to contribute, IT valuations are starting to look expensive, Neeraj. Large caps are now trading at 30 or north, and mid caps and IT are trading at between 40 to 50. You're pretty much down to Reliance having to hold the market, because that's 75% of the market. So if three major pillars of the market don't take it higher, it's very hard to make a challenging case for the Nifty to go up. Again, like I said, I don't think the market's going to fall off a cliff. I think flows will continue to come. But I think if the Nifty was to head down to 22,000, and I'm not saying it will, I said it could find a floor there, it could become a fairly more attractive entry point for retail and institutional investors.
To play the devil's advocate, Rahul, just trying to understand, wonder, government spending has trended lower in the first 6 months, arguably the first 7 months of the current calendar, right? Maybe because of various factors, including for whatever reason, but it's way lower than what the averages should have been based on the capex spend target at the start of the year. If that picks up, and even if it goes back to trend from a 50 odd thousand number that they have it right now to the 90,000 number that should have been the trend number, does that help capex spends and therefore earnings recover? Trying to understand if what you've seen in the results thus far is a trend which will go into quarter 3 or quarter 4, or is it difficult to say if the government spending comes back?
No, so I think, Neeraj, the finance minister has been very clear in her last 2 or 3 presentations to the country that she expects the private sector to pick up the baton. And I think if you see the rate of growth that she has projected for capital expenditure, it's, sort of been just about in line with what they have actually been doing in the past. She's actually made no bones about the fact that she wants private sector to pick it up. Now, as you rightly pointed out, I think there are political compulsions, and I think some allocations have been made to align states like Andhra Pradesh and Bihar. But I think even if government spending was to revive in a material way, Neeraj, you're talking about these projects coming on stream with a long dated timeline, right? So let's say a chemical company or a cement company announces a 200 or 500 or 1,000 crore capex. Chances are this capex is going to come on stream only 18-24 months down the line. So you're going to be looking at, revenue contributions only post FY 27-28. So I don't know whether the market in this environment is ready to digest earnings that far out. So I'll tell you, Neeraj, before this correction started, the entire street was on FY 27, valuations. Now the point is they've moved literally a year forward saying, okay, these are the kind of upsides we have on FY 26. So it all depends on your starting point. But I don't see a very major revival in capex from the government. And I think the finance minister has made no bones about it. And even if you do have that, it's slightly long dated. But Neeraj, I think that the point here being, if you take a look at railways or defense or capital goods companies that are government driven, these have healthy order books even today. It's not like they don't have healthy order books. The question is, will the execution timelines be met? Once they are met, will the government offtake those things that they have booked? And how will working capital and inventory be managed? So all of this, sort of feeds into your ROE, ROC, and therefore into your valuation. So, it's a great long-term theme to play, but I wouldn't be too immediately excited, with it as a short-term theme.
Okay. No immediacy. Rahul, 60-second answer if we can. Are you disappointed with the FMCG names? 60-second answer, the way out of time completely. Is their lunch? Are other companies, including e-com companies, new age companies, coming to eat their lunch? 60 seconds.
Extremely disappointed, Neeraj. I think there is something structurally changing in the consumer sector. I think Gillette has been a spectacular set of results. P&G was not too bad, but I think if you're looking at consumer as a basket, Neeraj, I would still be aligned towards consumer discretionary, which is hotels, alcobevs, and selectively QSRs. Staples is underweight for me, and we could potentially look at names like Gillette and P&G, which have come out with good results, and the stocks have been rewarded accordingly.
Okay. Rahul, out of time on this show, but would love to do a deeper conversation with you on what the structural changes are underway for the staples space, if you will. They've enjoyed high ROCs over the recent past, and you track it as closely as anybody that I know. Would love to get your thoughts there. But thank you so much for accommodating this interview request today.
Pleasure is mine, Neeraj. Thank you so much for having me.
And that's all at the time that we have, viewers, on this leg of Talking Point. The market's not in a good shape. Volatility index has spiked 8%. Keep an eye out on the India VIX as well. Thanks so much for tuning in.
Market veteran Ramesh Damani puts on the cephologist's hat to get you the insight you need on the US presidential battle of the century. Will Kamala Harris claim a historic victory? Or will Donald Trump march back into the White House?
According to polls, if Biden and Trump were running, I think Trump would have handily won. He was almost measuring the drapes to the White House even before the election.
What are the stakes for India and its investors?
The road to the 1600 Pennsylvania Avenue goes through Pennsylvania this time.
Tune in to US Election Watch with Ramesh Damani, exclusively on the NDTV network.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow, the newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit. Market veteran Ramesh Damani puts on the cephologist's hat to get you the insight you need on the US presidential battle of the century. Will Kamala Harris claim a historic victory? Or will Donald Trump march back into the White House?
According to polls, if Biden and Trump were running, I think Trump would have handily won. He was almost measuring the drapes to the White House even before the election.
What are the stakes for India and its investors?
The road to the 1600 Pennsylvania Avenue goes through Pennsylvania this time.
Tune in to US Election Watch with Ramesh Damani, exclusively on the NDTV network.
Benchmarks declines to a 3-month lows. The Nifty falls sub 24,000, while the Sensex falls to 78,600. Broader markets underperform the benchmark. And it's a sea of red across sectors. Oil and gas, real estate and consumer durables drag the most. In October sales in focus, two-wheelers continue to see strength, while CVs remain the pain point. Meanwhile, IGL and NGL trade with cuts as the price of commercial LPG cylinders in major cities is hiked by 62 rupees. And it's a muted debut on the exchanges for Afcons Infra shares listed at an 8% discount to its issue price. Welcome, this is Samina Nalwala. Now the next 30 minutes will take you through all the action in the F&O markets. It's a very disappointing morning. The start of November has been weak for D Street, barring moderate day trade when the market saw an uptick in trade. We are back in the red and selling is across the board, with the broader markets underperforming the benchmark after seeing an outperformance in the month of October. Nifty 50 is down 360 points, down about 1.5%. We are well under levels of 24,000. 23,945 is what we have. The breadth of the market also looks weak, with most counters declining on the Nifty 50 in trade today. M&M is one of the few counters that's trading higher with a 2% gain. Cipla, Tech Mahindra, IndusInd Bank and HDFC Bank are trading muted. A quick check on how the Bank Nifty futures and the Nifty futures are trading. As we set up trade this morning, there was, remember, a premium and long built-up seen on Nifty and Bank Nifty. That equation now very quickly giving way. If I can just get the Nifty 50 futures picture, that should be helpful. Still trading at a premium with an increase in open interest of 6.5%. But the mood on the street is somber. It's a weak trade. It's an event-heavy week as well, with the Federal Reserve and an election outcome that the markets are closely going to be tracking over the next few days. Broader markets are looking as bad. The Nifty 500 is down 5.5%, and pain is across the board. No sector or stock is being spared, to say the least. Amongst your top losers, Poly Medicure is down 7%. PVR Inox is seeing a 7% cut. Chennai Petroleum, IOC, Hindustan Zinc, Blue Star, PCBL, Jubilant, Brigade are all trading with cuts of 5 to 6%. On the buy side, the picture looks slightly better. Sirma is up and about 5.5% higher. Motherson Sumi, Max Healthcare, V-Guard, AU Small Finance Bank are seeing marginal upticks in today's trade. We had a new listing. Afcons debuted on the exchanges this morning. The counter was well subscribed by the time it closed out its subscription window. But remember, the grey market was indicating to a discount. The discount was far worse in terms of what the counter opened up at this morning. Recovered quite a bit from its day's low, but still trading in negative territory, down about 10 points, 2.5% lower on Afcons is what we have. So largely speaking, the mood is weak. It's unsettling, to say the least. We did catch up with the management of Afcons Infrastructure. Hear out what they had to say as they talk about what lies ahead for the company.
About the market's reactions, we are not the experts, so I would not be able to say how the markets would react. But on the performance of the company, we are going to work on it, and markets will see substantial improvements. And we are excited to be a listed company, because we will be, whatever happens in the company will come in the market, and both plus and minuses will be reflected. So there is more accountability, there is more corporate governance. Overall, we are excited to be a listed company.
Yeah, and what we have seen is, like, as far as the subscription of the IPO was concerned, it only picked up on the last or the third day. Before that, it was slightly muted. What could be the reason? Do you think pricing of the IPO was one of the challenges because of the market volatility, which had affected it?
In our assessment, our pricing was advised by our BRLMs based on extensive international investors and domestic investors' feedback. And we could have had, along with the bankers or otherwise, more than 150 plus investor meetings. And our entity is compared by most of the investors with that of L&T. And if you look at some of our accounting principles like accelerated depreciation for TBMs and others, if you really look at it, and we are priced roughly at cash profit level at 1/3 discount to L&T, and at EBITDA level at nearly 50% discount to L&T. So we believe it has a definitive upside possibility for the investors. And we have been following strict corporate governance for the last 17 to 18 years, in spite of our not being an unlisted, and in spite of not being a listed entity. Therefore, our own governance, which is kept private now, would come public, and I am pretty sure investors would value the governance standards of Afcons and the execution excellence of Afcons going forward.
Right. And with the visibility, more visibility, and also with this kind of listing, do you expect some kind of strategic partners or growth partners coming your way, or even investors in the company?
No, the listing would give us some few advantage. One, as we talked about our corporate governance and other thing, which was confined to Afcons, is something which will be known to the outer world. And second, it is perceived in the market, this thing with the international people, international companies, investors, everyone, a listed entity is far better corporate governance as compared to an unlisted entity. From that perspective, it creates a perceptual shift in terms of companies, international companies, and also others. And for international markets, especially if you look at going to developed markets, this could help significantly.
Okay. And he spoke about depreciation, faster depreciation. But if we look at the profit numbers, your numbers are like, slightly lower compared to the total revenue that you make. So what is the reason why you are looking at this kind of depreciation? And also, can it be increased going ahead?
No, our EBITDA margins, if you look at, they are the highest. The issue comes with the net profits. And net profits is, as explained by Mr. Paramashwan, due to the accelerated depreciation we follow for our tunnel boring machines. Okay. If it is a normal depreciation policy is adopted, there will be 150 to 200 basis points upward number as far as net profits are concerned, and that is quite good considering the space we are in and the kind of projects that we do.
Okay. Going at the kind of proceeds that you will be making from this IPO, where you said that you will be utilizing in corporate and also for equipment purpose, buying more of equipments. What are these equipments that you are investing into, and what's the role they are going to play for your company?
No, as far as use of the proceeds is concerned, 600 crores would go towards debt repayment. Okay. And another 320 crores would be for working capital requirements. 80 crores we have kept it for investments in equipments, okay, and 250 for general corporate purposes. But this year we are investing in 3 major tunnel boring machines for our high-speed rail project, okay, which is a project which is unique for the country. 21 kilometer underground in between Chilpata and BKC, and 7 kilometer below the sea. 3 tunnel boring machines worth 600 crores we are investing, but that would be a special investment this year.
So that will be separate from your...
Well, that is the management of Afcons talking about the outlook for the company going ahead. Well, we do have Vinay Rajani, CMT Senior Technical Analyst at HDFC Securities, and Brijesh Ayal, both joining in of IDBI Cap. Brijesh, I'll start with you. How are you feeling about the markets? I mean, the fall is just not abating. I know implied Nifty was indicating to a flat start, but pre-open didn't look too bad, and now we are sub 24,000 with a broad-based brush in terms of selling pressure. Any strategy on the Nifty and Bank Nifty, either on the short side or long side?
Hi, morning. So the view would remain slightly cautious to negative bias. Definitely the way the India VIX is rising at 17.18, I believe this is going to be much more volatility will be there. And the way the Nifty has today broken 24,000, it opens up for the 200-day moving average, which is again close to 23,450 mark. So somewhere closer to those points, almost another 400 points or corrections from the current level. So my understanding is that there will be a sell-off. So at least this follow-through selling will be there. So any bounce we see, I think maybe in the money put option, that should be the strategy. So bias is negative. It doesn't look like it is going to cool off very soon. Over and above, we are done with 9% of correction from the all-time high levels. So I think somewhere closer to 10-12% kind of a correction, we should be forming a base. I will not be talking of that level as of now. India VIX need to settle below 13.5 level. So once we see those formations, then we might talk of the bottom or maybe the short-term support. But right now it looks weak. It is opening up for 23,500 mark. So today already the Nifty is down to 385 points. So by any chance during the end of the day, if we see some bounce or something, we can use that opportunity to get fresh shorts from the trading perspective, 2 to 3 days kind of a time frame. So bias would be negative from the Nifty.
Right, the bias remains negative for Brijesh. Vinay, what about you? How do you feel about the street? Do you feel like there's still some more pain to come and hence would avoid any long trades on the Nifty?
Yeah, good morning. Yes, so definitely setup is weak. Nifty has already registered a fall of almost 2,300 points from the all-time high. So in the October series, Nifty has fallen by 7.7%, which is highest series to series fall since March 2020. So it is a huge fall after the COVID times, and definitely it is a weak setup only. If I go by the data, FIs also aggressively have been seller into the cash market. In October series, they sold around 1.25 lakh crore. So aggressive selling in the cash market was also there. FI's long to short ratio reached to 0.29, though it is considered to be as an oversold sign, but still we can see after getting oversold, we are witnessing Nifty is falling by 400 points in today's session. So what does this mean? This means that FIs have actually rolled over their short positions in the November series from the October. So still they are actually see weakness in the markets, and whatever consolidation we saw in last 4-5 trading session, Nifty has actually broke down below that consolidation and fresh breakdown can be seen. And if we go by the technicals, Nifty has been trading below its 5, 10, 20, 50 and 100 days exponential moving average since long, and it has been sustaining below it. The only moving average which is still intact is the 200 days moving average, exponential moving average, which is currently placed around 23,500. So that is the only support as per the moving average setup. So we are below 50, 100 average, and now the next support is at 200 days average, which is placed at 23,500. So definitely the setup is weak only, though the positions by the FIs have been into oversold territory in the index future, but still I feel that this momentum could go down, because in India VIX we have seen a jump of 8% today, and tomorrow is a very important day, very crucial event, US elections. So that is going to be the uncertainty about the market. So the way momentum is picked up in today's trading session, I think very soon we are going to see Nifty reaching a target of 23,500 on the downside, and whatever low which was there previously, which was acting as a support, 24,073 or 24,100. That will act as a resistance now. So now it will change its role as a resistance from the support. So according to us, 24,100 becomes the strong resistance, and with that stop loss one should remain on the bearish side only, and I'm expecting that gradually Nifty would reach to the target of 200 days EMA, which is placed at 23,500. So definitely derivative data and technical setup is on the weak side, and we should remain with the trend, and 24,100 is the strong resistance, while 23,500 is the next downside target for the Nifty.
That's the mood coming in. It's a weak day of trade, and the sentiment is also down and out. Brijesh, I don't know whether you shared with us your call on Bank Nifty, but you haven't. If you haven't already, can you take our viewers through it?
Yeah, so, but somehow when I'm saying that Nifty, I'm seeing the weakness, I'm not seeing the same weakness in the Bank Nifty. So probably the Bank Nifty may not fall the way the Nifty is falling. So Bank Nifty, to be very precise, it is a very opposite view. I can see a bullish W formation in Bank Nifty, and even though when the VIX is down and Nifty is down, the Bank Nifty is hardly down by 380 points, and it is not breaking below 51,000. So my sense is that it is 51,000 or maybe 50,500. It's a very strong base for the Bank Nifty. It might remain sideways for maybe for some more couple of days till the time Nifty finds a base. And Bank Nifty may not break 50,000 is what my understanding is. I may go wrong also, but then this is what the technical structure is saying. The way the 50-day moving average and the RSI is placed. So it is saying that it is more of a time-wise correction more, as compared to price-wise. And to be very, I believe sooner or later this Bank Nifty will see an upside breakout. There were a lot of shorts there, 52,000. Definitely there is a call writers are active, but somehow it's too early. But then I believe once we form a base, Bank Nifty will be the one to see the upside breakout. And whenever there is a breakout, this will be a very sharp breakout for sure. So 52,500 is the trigger which I'm keeping a watch on. Lower side, as of now, I believe 50,000 will not be broken. So by any chance with the market volatility, if the Bank Nifty comes to 50,500 or somewhere closer to those points with limited risk reward ratio, I think somebody want to take a risk can take the long trades in the Bank Nifty.
Vinay, what about you? Do you feel like Bank Nifty may potentially warrant a long trade? Because all through October, it's been fairly resilient. In fact, it's outperformed the Nifty to quite a great extent. And it seems to be a consensus call that BFSI probably is best placed as we see it. Do you think initiating a long Bank Nifty trade is a good idea?
Yeah, so along with the Nifty, Bank Nifty is also falling, but it is relatively falling less. So setup, the technical setup is stronger than the Nifty, we can say, but we have to wait for the reversal. If market sustains and consolidates, in that case, we can expect some outperformance from the Bank Nifty. Data-wise also, if we go by the results-wise, the large-cap private sector banks like ICICI, Axis Bank, these banks actually are looking stronger on the charts, and downside seems to be limited in those stocks, and that's why Bank Nifty is sustaining very well. So we have to wait if some adverse outcome comes from the US election side or for any other reason, then the Bank Nifty will also fall. But as of now, in normal scenario, and we can say it can outperform. Definitely, it is looking strong. It is also placed above the long-term moving averages. So we can expect an outperformance, but taking a long trade as of now, it's not advisable because right now it is falling. It is almost at the 4 days low. So once market starts consolidating or some sort of recovery can be if there, then one can play a long trade in the Bank Nifty. So if you get a chance of pullback also in the market in the intraday session or in the coming days, then you should prefer going long in the Bank Nifty than Nifty. So yes, in that case, we can expect outperformance, but in the falling knife case, we should not try to anticipate the bottom. Let's see how it goes, but I am waiting for some pullback to come, and if it comes, then I will prefer going long in Bank Nifty, but till then I will wait.
Brijesh, let's get down to stocks then. Any trades on the long or short side? I know this would be a tough exercise to do right now, but nevertheless, let's give it a shot.
So basically today this healthcare and the pharma stocks are showing some kind of strength. Divis is one which is showing strength, so maybe probably some bounce can be. This is again a trading bet, not the directional call. So one can take the long trade in Divis Lab. The stop loss will be 5,880 for the target of 6050. And the second bet is on the Motherson Sumi. So this is precisely from the derivatives point of view. At 180, there are put writers who are active, and that is giving support to this particular stock. So it is corrected, and I believe this 180 might be protected. So with the stop loss of this 180, I would take the long trade in the Motherson Sumi, and maybe 190 is the immediate resistance. But I think if everything goes right, then this 190 will be taken out, and closer to 200 would be the target for this Motherson Sumi.
Right. Vinay, what about you? What are your top recommendations coming in this morning, either on the long or short side?
So I would like to go short for both the recommendation. The first would be from the IT space, the technology space, LTTS, L&T Technology. So this stock has formed a bearish head and shoulder pattern on the medium-term chart and looks weak. It is trading below its important moving averages, so setup is quite weak. And the IT as a sector is also underperforming for last couple of sessions. I think this underperformance may continue in the IT sector, and LTTS is looking weak. So November future can be shorted here around 492028. Can go short. I would recommend stop loss at 5010, and on the downside I'm expecting a target of 4800. The second pick, I would take it from the NBFC space, the Manappuram Finance, the gold finance company. So previously we witnessed, because of some reason, it fell with a significant volume previously. Then we saw a pullback rally. Pullback came and it found resistance in the gap area and started correcting again. So I feel that it is a sign of resumption of a downtrend in today's trade. So one can go short in the Manappuram Finance November future around 154.50. Stop loss can be kept at 157.50. And on the downside, I'm expecting a target of 149. This is a short-term trade for 2 to 3 trading sessions. Both this stock futures can be sold with a recommended stop loss and the target levels.
Well, those are the calls coming in from Vinay and Brijesh. It's a tough market. That's the least we can say. But time to take up our queries. Jay Patel writes in from Gujarat. He's holding Berger Paints 560 calls at a strike of 10. If I can quickly get Berger Paints on the screen, that should be helpful. We'll get a quick check on the cash price and what the 560 call currently trades at. It's out of the money, but not doing too badly. Brijesh, you want to have a go? The 560 calls Jay has purchased at 10 strike. 7.5 is what it's at right now. What do you recommend Jay should do?
Technically, tomorrow there is a result, and for the last 3 days the stock is correcting. On the way up, 540 and 545 is going to act as a resistance. So I think the aggressive U-turn is not visible as of now. So I think if he's holding a position, any bounce post the tomorrow's announcement closer to 545, whatever the premium, I would like to take the exit in that particular stock.
We have another query coming in from Prachi, who's holding SRF 2340 calls at 24. If we can just quickly bring up SRF and see what it's getting up to, the 2340 call would be interesting. to see where it's at. It's actually interestingly in the money. Vinay, this one's an easy one. Very rarely do we have trades that are trading are in the money. This one is one of those. What do you recommend Prachi should do? Marginal profits or pretty much at cost? Hold or sell?
I think despite the fall which we have seen in today's trade, the SRF actually is showing strength. So for last 4-5 trading session, it has been into consolidation and normally, and we've in the past, in last week also, we saw a bounce back from the lower level. So selective chemical companies have been doing well. So I feel that one should take a chance and hold for some time, because right now Nifty is 400 points down. SRF is not looking that bad on the week on the charts, and it is likely to outperform, and it is looking resilient only. So I would recommend that one should continue to hold the call position in SRF. Right now the level of SRF is 2230. Support I see is around 2200. So 2200 is a strong support in spot market. So with that stop loss, I would recommend to take a chance that it can show some recovery from here. Considering this 2200 level as support holds. So this is a stop loss for the spot SRF level. If that is holding, then we can definitely take a chance to hold on and wait for a pullback to come. And in that case, in trailing basis, one can wait for the upper side target. So right now, market support is not there. The trend of the market is weak. So that's why I'm recommending that if SRF breaks 2200 on the downside, then the long position should be squared off. Otherwise, one can wait for pullback.
2200 in the cash market is a price you want to track. As long as that holds, we are okay. But a breach of that, in that case, Vinay recommends selling or exiting the calls that you own on SRF. Thank you, Brijesh. Thank you, Vinay. Great having both of you on the show. From equities to what's happening in commodities, that universe looks far more volatile as we see it. We have it as Tejas Anil, who joins in to talk to us about his view. Tejas, very quickly, what are your top trades? Do you have a trading call on crude this morning?
Crude looking still on a positive note, as it took the support at 5500 mark. Now reach up to the higher level, and again the roller coaster ride is still on. Fusing from the international cues, there is a good support at 68 mark, and in a current market scenario, we from the M6 segment, we are recommended to go buy on the lower level at 5870. It's a mark could be seen. The good volume could be seen in evening session, keeping a stop loss of 5800 and looking forward the target up to on a higher level.
Tejas, then let's talk about gold and silver. I mean, with so many events lined up globally, it seems like the risk-on nature of what's happening in equities may be rubbing off on gold and silver too. Any trading strategies on gold and silver?
Definitely, as this election is going on in the international market, the US could be the near about positive steps for the gold and silver. The precious metal are looking forward to go for the long side, but on the trading perspective, we see the gold and silver both going for the selling side. The evening session, we are targeting the level up to the going for the selling side at 78,670 is the selling level. 78,920 is the stop loss, targeting for the 78,000.
Right, that's the view coming in on crude, gold and silver. Remember, you have got the couple of big events lined up, and on back of which those are the trading strategies. They just say, I believe you've also got a sell call on copper and natural gas. You want to tell us, how do you feel about both those commodities? What are the levels one needs to track technically?
Yes, after the when these precious metals are taking the selling pressure from the international market, the global clues are still impacting the all commodity market. When we see the copper from the base metal pack, it's again showing the selling pressure, since from the it's not reaching up to the 900 mark and keeping continuous selling from the further contracts also. In the last contract also, we seen the high pressure coming, selling pressure from the high level. Again, we expecting the November contracts are getting again the pressure rise from the all indicators, technical indicators are on the overbought situations. And somewhere the selling pressures are continue for the further session. So 850 mark would be the selling, and the keeping the stop loss of 858. targeting for the 846 and 842 for the evening session.
Well, largely sell calls coming in from Tejas, technically in the commodity universe as well. Thank you, Tejas. Have a good week and we'll see you soon. With that, we leave the markets in a very down mood. The Nifty is trading under pressure with a cut of about 1.5%. Over 1.5%. 23,900 also seems to be getting threatened. It's at the day's low point with no material buying helping the index just yet. We'll take a break. We'll come back, but there's a lot more programming on the other side, so keep it with this channel.
Market veteran Ramesh Damani puts on the cephologist's hat to get you the insight you need on the US presidential battle of the century. Will Kamala Harris claim a historic victory, or will Donald Trump march back into the White House?
According to polls, if Biden and Trump were running, I think Trump would have handily won. He was almost measuring the drapes to the White House even before the election.
What are the stakes for India and its investors?
The road to the 1600 Pennsylvania Avenue goes through Pennsylvania this time.
Tune in to US Election Watch with Ramesh Damani exclusively on the NDTV network.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Well, pressure is the word of the day. Welcome, you're watching the Smith Show here on NDTV Profit. I'm Harsh Saita, with me is Mihika Barve. And pressure on markets, Mihika. You're seeing the Nifty, which is down 1.5% as we speak, 1.7 now. We've slipped below 23,900 as well. We've given that up. In terms of contributors, far and few in terms of positive contributors. Let's pull those up. And we're at the day's low, of course, but just M&M, Kotak, Cipla, Tech Mahindra and IndusInd Bank are the top contributors in terms of positives. Other than that, you're seeing 45 stocks contributing negatively to the Nifty 50. So the breadth of the market not looking good at all. And let's pull up the advanced decline as well. That will give us better perspective on what's happening in the broader markets as well. The Nifty mid cap is down 1.6. The Nifty small cap is down 2.2%. And the breadth of the market, there you go, looking absolutely weak. Less than 300 stocks in the advances to nearly 1900 stocks in the decline, as you can see on your screen. And the Nifty mid cap, small cap also trading at their day's low. In terms of sectors as well, there's pressure across the board. You're seeing the Nifty bank probably a bit better off versus others. But outside of that, you look at the Nifty PSU bank, which is down 2.4%. So likely insulation coming in from the private banking side. That's on financials. But you look at all the other sectors, and if we can pull up the heat map to give us better context, pretty much all sectors in the red, 2.7% on Nifty Realty, 3.3% on Nifty Oil and Gas, 2% on Nifty Auto as well. Nifty IT slightly better off, 0.8 odd percent. So Nifty private bank, Nifty IT, likely pockets where there is place to hide. But otherwise, you're seeing carnage across the board. 1% lower pretty much across all indices other than these two. In fact, the Nifty FMCG, let's pull that one up, should be an interesting one. 1.5% down, that one as well. So the defensives not spared even in this market. I'm looking at certain stocks as well. Something like a Zen Tech on the back of very strong numbers. We'll speak with management as well. So stay tuned on NDTV Profit for that chat. But Zen Tech is one of those stocks down 1% despite being higher and well higher at the start of trade today. But now a lot of those gains given away with the way in which markets have moved. Some other stocks which are in focus, something like an Azad Engineering, we'll speak with management right away. 10% higher, Gensol Engineering as well on the back of order wins. These two are buzzing. NMDC is up around 0.5% thereabouts on the back of production numbers coming through. But outside of that, you're seeing Hero Moto down 5%. Auto sales numbers coming through. Sun Pharma down 5 as well. Coal India down 4. Among the large caps too, the carnage seems to be really deep. So you're seeing a bit of a sell-off across the board. In terms of quickly looking at and zooming in onto a couple of indices which we discussed. One is the Nifty Private Bank. Let's pull up the constituents there, because there seems to be that pocket which seems to be doing not as bad and seems to be in some form outperforming in this market. 0.8% lower. And you're also seeing some, there you go, those are the constituents. So AU, Federal Bank, likely in the green, but outside of that, you're seeing red across the board. Flattish on an HDFC Bank, ICICI Bank down 1%, SBI down 1.7% thereabouts. So that's one pocket I wanted to highlight. The other one was the Nifty IT pack. If we can pull the constituents there as well and try and see which ones are the key drag. There you go. The Tech Mahindra insulating a bit of the pressure. But outside of that, you're seeing 1% to 1.5% down on a TCS, L&T Tech, Emphasis, Wipro, all of them down, beaten quite a bit, some of those large caps. But let's quickly move on. Abhishek Agarwal, ED at Godavari Power and Ispat, to talk to us about Q2 numbers. Welcome, Mr. Agarwal. I want to first quiz you with regard to what's happened in the quarter gone by. You've had a couple of hiccups with regard to top line, but it's not the right way to look at it. Talk to us about how quickly do these hiccups go away, and what's the full year looking like, and how quickly can you reboot?
Good morning to everyone. See, talk about the hiccups. I don't see as a hiccup because for two things. One is it was a planned shutdown. So usually the pellet plant operation, it is every 7 to 8 years, 10 years, we have to take an annual shutdown of almost 45 days. The last shutdown happened in 2013. So almost after 10 years. So it was a planned shutdown. That's why the pellet volumes are much lower compared to Q1. The production has resumed, end of August, and Q3 onwards, we are confident we will be able to achieve the given guidance in terms of pellet volume, because the pellet volume drives the major top line as well as the EBITDA for Godavari. So that is one. Second is, of course, mining is on the lower side again because of heavy monsoons. The monsoons have been very unusual this time compared to previous years. But we are confident even in the mining volume, we'll be able to catch up in Q3 and Q4.
Good afternoon, Abhishek. Mihika this side. In terms of your realizations, like there has been pricing pressure all across the board. But in terms of for the second half, how do you expect the realizations and the pricing outlook as a whole to pick up, especially for iron ore?
See, on the pellet pricing and the iron ore, it is still, I would say, not very low compared to the other steel, supply chain prices. Because the iron ore supply into India and the demand of pellets is much strong compared to the export market. But usually Q2 is a weak season for steel because of monsoons. Once now Diwali is also over, and going forward November onwards, it's usually a peak period for steel consumption in India. So we are confident, Q3 and Q4 onwards, the prices should go up and the demand should come back.
Got it. Abhishek, I want to take a step back again. I want to try and understand whether Pellet Plant 1, has production commenced for you?
It has in August end. It's already almost more than 2 months now. Okay. So both the plants are running at full capacity.
So both plants running at full capacity. Q2 should be a clean quarter for you?
Q3, not Q2.
Apologies. Q3 should be a clean quarter for you?
Yes, it will be.
Okay. And iron ore production also resumed fully, so everything behind is my assumption here.
Yes, if compared to Q2, so the iron ore production in the mining side as well as the pellet production will be in line compared to our given guidance for Q3.
Got it, Abhishek. And in terms of your expansion plans, you have 7 projects underway. I want to first focus on the iron ore mining and the pellet plant because these are the expansions that are relatively to be commissioned earlier, Q4 and Q1 of FY26. In terms of the outlook for FY26, once these expansions come into play, how would the trajectory for these two segments go going forward?
See, in terms of expansion, the pellet plant construction has already started, and we should be able to commission the plant by end of FY Q1, 26 Q1. So that is on track. For mining, there is a slight delay in terms of approval. Earlier, we had assumed we will get the approvals by end of Q3, early Q4 of this financial year. But now we have revised the guidance of iron ore mining as well. Hopefully, we should get the desired approvals by end of Q4. And for FY26, we should be able to ramp up the mining capacity in tandem with our pellet plant production as well.
All right. So for viewer context, Abhishek, give us perspective. How much of capacity gets added and how much will that contribute to top line?
See, for FY25, mining will be at about 2.35 levels. Pellet production has given guidance about 2.4, 2.45. We will be able to achieve that. And any additional volume of mining or pellet will only happen in next financial year.
And in terms of the integrated steel plant, which is a large part of your future capex plans, almost 6,000 crores, could you give us the update on that? And in terms of the long-term advantages that the steel plant would have, could you give us more insight on the same?
On the new 2 million steel plant, so we have already given a first presentation to MOEF, which is the last stage of getting the environmental clearance. And hopefully by end of Q3, early Q4, we should have the approvals in place. And once we have the desired approvals, we'll start the work at the ground level. Already parallel working is going on in terms of equipment supplier and stuff like that. So hopefully by early Q4, end of Q4, we should be able to start the groundwork.
And in terms of, I want to talk about the demand outlook as a whole. We have the China stimulus coming in. How is that? Are you seeing any green shoots in terms of demand for the company?
See, as I said, we are not in the export market anymore for last almost 9 months. The iron ore demand in India is quite strong, especially the iron ore pellet demand, because a lot of DRI capacity has been added. So we are confident the pellet supply and the demand will remain strong going forward as well.
Your margins keep getting better. I want to try and understand where you expect margins to go over the medium term. Of course, this quarter, sort of an aberration, if I can call it. So where do you expect margins to lie on a normalized basis, say FY26?
See, if the market remains intact, and the iron ore demand remains strong, we should be able to, maintain the desired EBITDA, which we've been achieving last couple of years. So anything about 22%, we should be able to achieve, given the current market scenario.
Right. And on top line growth, what's the guidance like? FY26, you have a new plant coming on stream. And you have very, very strong expansion plans as well, almost through this decade. What's the sense like? Where should your top line go to over the next 2 to 3 years?
See, for FY26, assuming the pellet production will commence, in end of Q1, so we can say a 50% production volume will be added, which is about 1 million ton. So when a price about say 10,000 rupees, so we can see an additional 1,000 crores on the top line for FY26. See, the new steel plant of 2 million, it will start, commence production hopefully by, say end of FY28 or, early 29. So that's a long way to go. I say for FY26, the top line should be additional 1,000 crores on account of pellet production.
In terms of, you have captive mining and that provides you with an edge. In terms of the, benefits that it could have to your margins, what's the outlook on that?
See, currently we are able to, consume about 80% of our iron ore mining with increase in pellet production and increase in mining capacity. FY26, we expect 100% to be captive. Once that happens, we can, easily, maintain the current EBITDA levels in terms of pellet, which is about, 4 rupees on average for the yearly average.
And, you've increasingly gone downstream, higher up the value chain, which is clearly a positive. What plans on a broader basis, what plans to go even more downstream in terms of other products as well as existing products? Is there a plan there?
No, so we got the approval for an enhanced DRI capacity, end of Q4 last year. That's why you can see in Q2 the sale of DRI in the open market is much higher, because we will be able to produce additional 1 lakh ton compared to previous year. That is one reason. And on the downstream side, we have just commissioned a new structure cum strip mill in Araspat, which is under trial stage. And starting of Q4, we should be able to achieve the desired production. So further, the value addition will happen from Q4 onwards.
In terms of your entire capacity utilizations, the FY24 capacity utilizations did range out. In terms of how you expect these utilization rates to close out for FY25, what's the outlook on that front?
See, we are almost operating 100% of capacities from last few years. And in current year as well, the guidance we've given, we will be able to achieve that for sure. But in terms of DRI, 0.594 for steel making, 0.5 million, and for down rolling, about 0.4 million. So we should be able to achieve that going forward as well, in this year as well.
And you have 7 expansion plans underway, but are there any other sub-segments that the company might feel that they need to work on more capacity expansion plans, or more integrated plans could come into play?
No, as if now, I think once already the Araspat mill has been commissioned, which is further value addition, parallelly the pellet plant, the mining, and the new steel plant. So as if now the company have plans for these 3 projects at the moment going forward.
Got it. You've got around 7,000 crore odd of capex lined up. I understand that a large chunk of that comes from your integrated steel plant, and that's probably some time away at least. Just talk us through and you've guided that you will not take on more debt. All of this will be funded through internal accruals. Talk us through possible downside of that actually translating or not translating, if I can call it. Is it possible at all that you may have to actually take on debt at all? Is that possible?
See, it is possible, depending on the current market scenario and when we are able to, start the new project. So we might, have to take some debt, on books. But even if we do, probably it will be much below, 0.5 compared to debt equity ratio. So we're very much comfortable at the moment. Depending on, when you have to infuse the money, we will take a decision then only. But at the moment, we're confident we should be able to achieve with our internal accrual. But given a chance, we might have to, we will take it. We have no issue in that.
Understood. And how quickly will the integrated steel plant begin? At least when do you expect environmental approval to come through? Is there a timeline in mind?
So end of Q3, early Q4 of this financial year, we should get the entire approval.
Okay.
And from there onwards, another 36 months. So we can say end of FY28 or early FY29, we should get the commercial production.
Okay, thank you so much, Mr. Agarwal. Always a pleasure speaking with you. Breaking this down, always a candid conversation with you. Thanks so much.
Thank you so much. Likewise.
Right.
Bye.
Let's quickly switch focus. Let's bring on board the management of Azad Engineering. We have Vishnu Malpani, who's the whole-time director at Azad Engineering, to talk to us about, of course, the most recent order win that has come. But even outside of that, in terms of Q1 as well as Q2 numbers, how things are shaping up in terms of results as well as numbers. Welcome, Mr. Malpani. Just talk us through how today's order win, especially, or rather the weekend's order win, is going to play out. What's the kind of timeline like in terms of execution?
So, first of all, thank you for having me on the show. I think it's a pleasure, like always, to be here and to discuss our business. See, Azad's relationship with our global OEMs has been there since our inception. So we started our journey with Mitsubishi. Talking about the current order, we started a journey with them, but in 2012, and 2012 till today, I think there are several milestones that we've hit. The business that we are into, we manufacture critical parts that are mission and life critical. So the qualification cycle is really long. So over the last about, so many years, we've spent a lot of time trying to qualify part after part, engine after engine. And today we've reached a point where we've qualified most of the parts for Mitsubishi, and, we are quickly ramping up. And as a commitment to our clients, we set up a foundation stone. Mitsubishi had laid a foundation stone for their new plant, which we are dedicating for them. This is a testament to it. So this long-term contract is them tying us into capacity, because for them, we are a growth supplier. Our wallet share is barely anything today, about a 1% of our overall addressable market. So we are looking at building this up from here and quickly growing from 1% to 2 to 3 to 5%. So this has been, our thing. And this is a significant one because today, as a best cost and quality supplier of critical parts to Mitsubishi, I think we are in the beautiful position where we're catering to the likes of, these engineering companies, these large engineering companies, to cater to their global demand. So I think the market is huge, and I think this is just, beginning of how we are able to scale ourselves, we'll be able to scale ourselves. So this is where it is. And this is not just with Mitsubishi. If you see this in our business, we've been signing long-term contracts across our product portfolio, whether it is in energy, aerospace, defense, or oil and gas, all the sectors that we are operating out of, because now the capacity is coming up. We are building the 10 times larger capacity, and sometime in the next financial year, we'll start producing our parts out of the newer facility. So it's all linked to what we've been talking about for these many years.
Okay, Mr. Malpani, Anushi joining in here. I want to understand more on this order side. So this order, if I'm not wrong, is divided into phases. When is the first phase of expected to be completed, and is this the 700 crore for the total phase is that we are looking at? And considering this, what is the order book value that one should be looking at for Azad Engineering? This last quarter it was at 3,300 crore. So can you break that down for us?
Absolutely. So one is, I think this is a long-term contract. This is a long-term contract and pricing agreement. So this is us getting clarity and Mitsubishi getting clarity on how we are going to be working with them over the next 5 years. So when we are saying phases, this is one of the product portfolios that we work with them, right? Obviously, there are other critical commodities that we are also exploring with each of our customers, which could be combustion parts, which could be, additional parts in comparison with this. But this order book, 3,300 will add, if you noticed last week, we did come out with a announcement on Honeywell, and this is addition to this. So in total, I think our order book should be anywhere around 4,000 to 4,500 crores as of now. And we believe that these orders will be executed over, say, 3 years, 5 years, and 7 years. So these contracts are different periods. And most of these contracts are long-range contracts because, there's a lot of effort that the organization and the OEM has put together to sort of qualify these parts. So we are looking at that. And we are building a plant for for Mitsubishi, which should be ready in about 2 quarters. And 3-4 quarters, we should start generating revenue out of the contract that we've signed. So that is how it will be looking.
So revenue from this contract will start 4 quarters out.
So this is in conjunction with the independent plant that we are building for them.
Right.
So they are essentially trying to block our capacity and give us visibility over the next 5 years so we can invest ahead of the curve. So this is this is relating to that. But however, even out of the current facility, we will be doing some production for this contract, but largely it will come out of the new plant that we're building.
Got it. So okay, got it. And it's difficult to, I understand it's difficult to ascribe an exact timeline for execution of your entire 4,500 odd crore order book. But just talk to us about visibility with regard to top line growth. Therefore, maybe that's the better metric to help investors as well as viewers understand how the numbers will play out for you.
So I think we have, so with our customers, we have an understanding where they give us the demand that they are seeing in the industry, and we plan our capacity basis that. And that is why you see that, we were looking at a surge in our volumes, and that's why we're coming up with a larger capacity. So it's all linked, right? So we are building capacity because we see that the, order book is also obviously, this is just the beginning of where we want to be, right? So this will all be converted soon to, our visibility. So if you look at the next financial year, we would have absolute clarity on what we are going to be manufacturing every month, every quarter, because this is how detailed the entire, order planning that happens between an OEM and, a growth supplier like us. So from our perspective, we have absolute clarity on what we will be doing in FY26, FY27 and beyond as well. So we are working towards that, investing in the business, creating capacity, hiring more people. So we are preparing ourselves as an organization to cater to the, growth that we see in the business. So that's something that we're looking at.
Mr. Malpani, you explained about increasing capacities as you go forward. Now, if we go to the last conference call, you mentioned about 10x the capacity that you're striving for in FY26 onwards. So from FY26 onwards, what is the incremental revenue that you seek for the business? And will this support the 25 to 30% growth that you've aimed for this year? So is this the medium-term outlook also for the company, 25 to 30% of revenue growth along with a 40% of a PAT growth that one should look out for?
So I would really want to address this question, but because we're in the process of finalizing our numbers, audit committee and board meetings is going to happen. So I would wait for maybe a week or so to sort of give you a response to it. I think by 15th of this month we should be coming out with the results, and I should be able to give you more color and great. We can delve into greater numbers, but I think I should not talk about it right now. But give me a week or 2 weeks, and we should be talking about numbers in detail.
Got it. When I'm looking at maybe the 3-year horizon, right? 340 to 350 crore in terms of top line currently. Where would you sit maybe 3 years from now? Give us that visibility.
So I would take you back, say 5 years. You should say we were doing about 100 crores when we started, right? About FY21, FY20, that area we were doing about 100 crores in the entire year. Now we're doing 100 crores a quarter, right? So we've been able to build capacity 4 times and also able to utilize it. And that's why, and this is all a plan, a planned move where we know the order book is going to convert. We're finishing qualifications. We're moving the qualifications into production and slowly ramping up. So you would see this continue in our view. And I think anything that we've said in the previous investor calls or guidance calls, I think stayed true. So, and we can delve into greater detail, like I said, in about 2 weeks when we come out with the results for the quarter.
Mr. Malpani, now I want to focus on some of your key segments. If you take aerospace and defense into consideration, last quarter was phenomenal in terms of numbers. What is the sustainable growth rate that one should be looking forward for this, considering FY25? Because last quarter there was about more than a 200% growth that we had seen. So what are some of the key developments happening here? Is it because of higher execution, or there are more contracts or partnerships and pictures? Can you give more clarity on this division?
Yeah, so see, largely we are not a company that focuses only on one sector, right? So we are very well positioned to be catering to, all of these 4 sectors. So energy, aerospace, defense, and oil and gas. So we are very well positioned to sort of cater to the demand that's existing in each of these. And as an organization, we work on, our strategies, look at customers, contracts, capability, capacity, and consistency. So we have a 5C approach towards our business. And if you look at ourselves, so we are at the same time, while we are building capacity 10 times, we are also building capabilities. You would have seen we made 2 announcements where we've acquired, companies that are adding special process capabilities and larger parts manufacturing capability to our business. So we've focused on capabilities. We've focused on building longer visibility of revenue through a long-term contracts. We're talking about consistency in our business. So we generally follow a 5C approach, which is leading us to this point. And moving into these verticals is also because as a part of a diversification strategy where we want to be, a credible player. So globally, in the products that we manufacture, there are companies that have done revenues of $2.5 billion and so.
Right.
And those companies have been around for several decades. So Azad has just started up, and we believe there's a lot of headroom for us to sort of grow and capture, and we are just preparing ourselves for it.
Sure, yeah, no doubt that it's very interesting. Just talk us through margins, therefore. Sustainable between this 32 to 36%, you've done it for 6 quarters. Is that kind of a range sustainable?
I would say we haven't done it for 6 quarters. We've done it for far more than 6 quarters. You can look at our margins since FY21, 22. We've consistently maintained our margins because the way we take our orders and execute it, we ensure that our margins are sustained. At a blended level as an organization, we do not, go beyond lower than whatever. We are very, very choosy in where we have to do. So, and it's a result of that. So it's not just 6 quarters. I would say it's a period beyond that as well. And we would want to keep it sustained at that point. That is something that we strive for.
Okay, thank you so much, Mr. Malpani. It's great having this perspective. Wishing you all the very best for H2 as well as for your Q2 numbers.
Thank you. Thank you. Thank you for having me.
Right, with that, completely out of time on this edition of the SMID Show. From myself, Anushi, as well as Mihika, all 3 of us, as well as everyone who puts the show together, thanks so much for watching. Stay tuned to NDTV Profit. More action on the other side.
Market veteran Ramesh Damani puts on the cephologist's hat to get you the insight you need on the US presidential battle of the century. Will Kamala Harris claim a historic victory, or will Donald Trump march back into the White House?
According to polls, if Biden and Trump were running, I think Trump would have handily won. He was almost measuring the drapes to the White House even before the election.
What are the stakes for India and its investors?
The road to the 1600 Pennsylvania Avenue goes through Pennsylvania this time.
Tune in to US Election Watch with Ramesh Damani, exclusively on the NDTV network.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the long street deals, finance and policy news that could shape your tomorrow, the newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Well, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Hi, thanks so much for joining in. You're watching Ask Profit on NDTV Profit. My name is Alex Matthew. With me is Mahima Vajrajani, and we'll take you through the next 1 hour of trade. And it's a tough day to trade in the equity markets here in India. Let's take a closer look at where the markets are right now. You have the Nifty 50 that's trading at sub 23,900 levels. And in fact, the close on the Muhurat trading session was in fact, significantly higher than that, 24,304. So we've given up 427 points. Believe it or not, we're off the low point of the day, close to about 50 points or so off the low point of the day. At the lowest point, we were down about 2% on the benchmark Nifty 50. And in fact, you're seeing selling across the board. The mid-cap index currently down about 1.6%. The small cap index, if anything, is off the low point of the day. It was down about 2.2%. It's now down about 1.9% or thereabouts, but it's still deep reds across the board. And we'll try and give you some insight as to what is leading to this. For now, let's take a look at the contribution, because actually in today's fall also you have Reliance Industries that is leading and is contributing quite a bit to the declines, but across the board you're seeing quite a bit of a crack. In fact, very little green on the screen in terms of the Nifty 50 constituents, most of the stocks in the red, and that is the case for the broader markets as well. In fact, let's pull up the advanced decline ratio, because that will give you a sense of the texture of the market, and there's a very wide gap at this juncture between advances and declines, and led, of course, in a very big way by the declines. All major sectors, in fact, all sectors are currently in the red. And you're seeing the India VIX, which is the only green mark on the screen, it's up as much as 8%.
So that should give you a sense as to what the texture is. Now, you're probably wondering what is leading to this, and Mahima, really, apart from a few earnings that have come through and maybe auto sales that are leading to declines for a few two-wheeler companies, which we'll talk about in a bit, it's no real fundamental trigger apart from the fact that there's a significant amount of uncertainty that's emerging from the US presidential election and the Fed. So a lot of uncertainty at the global stage and continued selling by FII. That's the way I'm seeing it.
Absolutely, Alex. And that's the way I think the traders and the investors are also seeing the markets at present. And we're seeing a quite bit of pressure on both the benchmarks as well as the broader markets, but some pockets that are seeing significant movement. Something that I would really like to highlight at this point of time, something like an Azad Engineering, a stock which is completely bucking the trend, where we're seeing broader markets falling as much as 2%. Azad Engineering is up 9%, and this is on the back of it entering into a 5-year pact and an order win of almost 700 crore with Mitsubishi Heavy Industries, and this pact is for power turbine engines, which is why the stock is seeing significant up moves. Some other counters which are buzzing in trade. Let's pull up Zen Tech. Zen Tech has seen good revenue growth. Revenue was up 3.6 times for the company. Margins have significantly improved to the 33% mark. It did see slight gains in early trade today. However, it's trading flat right now, down around 0.05%. Let's also pull up some pharma names. They've been in focus. Let's pull up Sun Pharma as well as Dr. Reddy's. The US Direct Court grants preliminary injunction to delay drug launch for Sun Pharma. The stock is under pressure, down around 4%. And DRL is trading flat, down around 0.07%. Lastly, let's also pull up Zomato before we move on to the auto stocks in focus, especially two-wheelers. Zomato is down around 3%, where investee company, that is Aronomo Private Limited, raises additional capital, and this brings down Zomato's shareholding from 19% to 17% overall, which is why the stock is seeing some pressure in trade today, and it's down around 3%. But the stock in focus, as Alex rightly mentioned today, is the two-wheelers pack, and this is on the back of October auto sales, and Puneet is joining us now to give us more details on that. Puneet, a good set of numbers, but stocks are seeing significant pressure. Why is that?
Yes, definitely. I think it's getting corrected because of the larger market downside that we're seeing today. And, mostly I think two-wheelers as well as, tractor makers reported really strong numbers. So let's focus on the two-wheelers first. Hero MotoCorp is the first one, reported roughly 6.7 lakh vehicles, sold to dealers in the month of October. Now that's, a very strong growth of about 18% compared to the same time last year versus analyst expectation of about 11 to 12%. Now, another key thing is that, that Hero might be under pressure today compared to the other players is build-up of inventory over the last 2 months. So in the month of October, they gave the dealers roughly about 6.7 lakh units as mentioned, but retails were about 5.7 lakhs. So that inventory build-up of about 1 lakh is going into November. In the previous month of September as well, there was an inventory of about 1,20,000 vehicles. So going into November, the inventory is significant. Although the company does sell a lot of bikes in a particular month, roughly 3 to 4 lakhs, I think that might be one of the key negatives for Hero specifically, but overall good set of numbers for Hero. When we move on to the other ones, which is TVS Motors, a really steady performance, about 12 to 13% growth over the last 6 months, and that continues in this month as well. Apart from that, the company has also regained its number 2 market share in the electric vehicle space, dethroning Bajaj Auto for the number 2 position. It currently has about 21% odd market share, and with the new lower priced variants such as the iQube, it essentially is looking to have better EBITDA margins in H2 as well. The third one is of course Eicher Motors, another big highest ever sales in one particular month for the company at about 1.1 lakh units. Now that's a growth of about 31% versus growth expectation of 22% by analysts. Now this is the first month of double-digit growth since April, so that's another positive for the company. And finally Bajaj Auto. Now there's a slight negative, domestic sales have fallen 8% for Bajaj Auto for two-wheelers specifically, and that might be one of the key reasons reacting negatively for the stock today. We spoke to the management and they have said that the festive season outlook is looking much better than they had anticipated. Earlier just 1 to 2% growth, and now they're anticipating 6 to 8% growth. But overall, all these players are seeing pressure in the market today, especially because of multiple factors that might not be in hand. But overall, the sales are quite positive for most of these two-wheeler makers.
All right, thanks so much for getting us those details, Puneet. We've joined now by Lancelot D'Cunha, who's CIO of ValueX, Wealth Connect, as well as Rajesh Palvia, Senior Vice President, Tech and Derivative Research at Axis Securities. Thank you so much, gentlemen, for taking the time. Lancelot, I'll come to you in just a bit. Before I do, Rajesh, I'm just wondering, we're going to be talking to a few more people over the course of the show, maybe around 12 o'clock. But just the texture of the derivative space, what are you seeing that is leading to the kind of crack that we're seeing in trade today? And I'm just curious about the way that people are positioning. Some buzz saying that margin calls are getting triggered. There are others that are saying that traders have been light on derivatives heading into a difficult week. What is the view?
So morning, Alex. So looking at this supply pressure, this is again, very first day. I think it's a very first day for the November series, and the intense supply pressure across the board, and most of the large cap stocks are witnessing the major supply pressure. Looking at the data, I think we have now broken the important immediate put-based concentration of 24,000 level. So I think some unwinding action is now taking place. Yes, margin calls are triggered to be major. Impact is coming on the large cap space. So I think most of the stocks from the derivative side is under supply pressure. But I think if it remains below 24,000 level, I think we may move further lower to 23,700. That's the 50% retracement of entire rally of 21,200 to 26,200. So that level maybe, we can see in the next 1 or 2 trading sessions. So 23,700 is the next level where we are focusing. And I think the way market is, still not showing any kind of, pullback, despite market is in oversold trajectory for near-term to short-term structure. I think market is sensing something else, there are a lot many, caution approaches towards the US election outcome, geopolitical and other things. So I think market is a little sensing something else, and the way market is nervous at this moment, we believe further more supply we could see in next couple of days. So 23,700 and 23,500 would be the next level on the downside. On the higher side, 24,150 is the 24,150 is the immediate supply zone until the stock Nifty not crosses those levels. I think sell on rise would be the strategy for Nifty at this juncture.
Ordinarily, we would have started the queries by now, but I think it's an important day to try and get you to understand the context, because you need to understand what is happening and why things are being sold into before you get into stock specifics. But let's get that very quick fundamental check, Lancelot, on the two-wheeler space. Hopefully you've heard what Puneet had to say based on the latest developments, and a couple of these stocks getting really hammered in trade. Bajaj Auto, Hero MotoCorp, among the top losers on the benchmark, and these stocks have lost, 13, 14% and 20% over the last 1 month itself.
Yes, Alex, I think, but at the same time, one must not forget that many of these stocks have risen by more than 50% or maybe even 100% over the last 1 year. And there has been this kind of exuberance on the two-wheeler space, and we are now seeing that it is becoming a bit difficult for rural demand is not picking up, and at the same time the kind of growth, even the overall industry growth, is only about 3 to 4% max, and it could look at, if it improves, it could go up to about 6%. So while that remains in single digits, and you have this switch to the electric vehicles segment, so you are going to see a little bit of pressure on this space. So when valuations are expensive, one needs to be cautious and avoid getting caught up in the momentum. And I think there may be a further downside, but yes, this space is something which one can accumulate when the valuations become relatively attractive again.
All right, so accumulation, if the valuations become attractive, is Lancelot's view on the entire two-wheelers auto pack. But moving on with the queries, for viewers who are just logging in, you can ask all your stock-related queries on the number that's flashing on your screen. I'll quickly pick up the first query. The first query is from Prakash, and he's from Chennai. He's a long-term investor, and he wants to understand and have a view on Galaxy Surfactants. He's been holding this stock for over 3+ years now. He had bought around 70 shares at 2825 a piece, and he wants to understand whether it's worth waiting going forward as well for the stock or not. Currently his profit stands at roughly 10,000 odd rupees. So Ransard, I'll come to you for this one. Long-term view for Galaxy Surfactants, should Prakash stay and wait and watch for the stock to perform better, or should he exit?
So I think, long-term point of view, the stock should look reasonably good, because going forward, this space is a space which will grow along with the FMCG space. And while you have seen growth in the personal care as well as the other care slow down a bit, this company should do well, over a period of time, and one should remain invested in this stock.
So hold is the view. The next question is on HDFC Life in the life insurance space, and this is a question from Mohit, who's writing in from Ludhiana. He's bought at a price of 599, and he's wondering whether to hold for the next 2 years. Stock is currently trading at 710, above his buy price significantly, so he's in the green and comfortably in the green. Rajesh, on the charts, would you suggest a hold for the next 2 years?
So definitely HDFC Life, if he wants to hold it for long-term perspective, I think he may hold on. Though a market is volatile, so some pressure from the higher level we have already witnessed in this stock. But this stock, we are bullish, and we have already recommended this stock for long-term perspective to our client also, and we are projecting target towards 840 to 860 on a longer-term perspective. So I think as till the stock is holding above 660, 665 zone, I think trend is likely to remain on the bullish side, and possible target towards 800, 850 we could see in the next couple of months. So our view is bullish for HDFC Life. He may hold out the position.
View coming in for HDFC Life. The next question is from Shiva Reddy from Guntur, Andhra Pradesh. He's having Tata Motors at rupees 880, and he has around 500 odd shares of Tata Motors, and he wants to know whether to hold them or sell them at the moment. Rajesh, your view on Tata Motors? The October sales numbers were flat for the company, but overall, how does Tata Motors look to you on the charts?
So this is the fourth consecutive month where we are seeing that Tata Motor is under supply pressure, and now stock has broken all its near-term, short-term moving averages. And looking at the near-term, short-term structure, we believe that until the stock not crosses above 860, 870 zone, sell-on rise would be the strategy. Weakness is there in Tata Motor for near-term to short-term perspective. Maybe in this fall, a stock may correct further, and possible down move can extend to 760, 750 kind of level also. So at this juncture, I would say don't buy at current level, wait for further more correction, and let the stock to settle down at certain level, then only try to buy the stock, as still trend is looking weak for the stock, and we may see correction in the near term.
Or rather, don't yet deploy for Tata Motors is the call in the technicals. But there's also a long-term fundamental question on Tata Motors from Vinay, who's writing in from Hyderabad. Lancelot, may take this to you. He's bought at levels of 1,049, so very elevated levels, and he's lost ground from that point, but he's looking to hold for the next 3 to 4 years. He's wondering whether to average his cost price at the current level, which is just above 800 levels. What's the view?
So I think, it's still a little expensive if one has to buy it at these levels. But maybe if it does correct, on a further 10 to 15%, then that would be a good level to add. From a 3 to 4 year perspective, they are going to be one of the serious players in the EV space. They have a head start over the other players. They've got a reasonably good market share, and we will see, electric vehicles, move into like vehicles move to electric as opposed to the combustion engine. You have seen, the Uttar Pradesh government is now even considering increasing the taxes, road taxes on internal combustion engines vehicles. So I think long term, yes, Tata Motors will perform and will be a good company to hold. But at this point of time, one can wait for another 10 to 15% correction, then buy into it.
All right, so that's the view coming in on Tata Motors. The next question is from Balwant Modi, who's from Rajkot, and he wants to know the entry level for Premier Energies from a long-term perspective. So, Lancelot, I'll stick with you for this one again. Is this the right time to enter Premier Energies?
So unfortunately, I don't track this stock, so I don't have a fundamental view on this company.
All right, Rajesh, then I'll come to you. Do you think that this is the right time to enter Premier Energies as per the chart reading?
If you have enough data.
So it's a recently listed company, and we have very limited data for the stock. But whatever data we have, I think 900 is the down move. If you get any down move towards 900 would be the appropriate level based on the limited data which I have. So 900 would be the level where I would advise to look for this stock if you want to buy in the decline.
You know, Lancelot, I asked Rajesh what he thought was contributing the kind of drop that we've seen, and he weighed in. But it's a pretty straightforward question that one of my viewers has. Vishakha, writing in from Bengaluru, is asking which quality stock would you buy today? And are we near a bottom? And I guess that's a very hard question to answer for anybody who has participated in the market, irrespective of how much time they've spent. But looking at the valuations, which I'm sure you have been looking at, and I know that we've spoken 2 months back and you've said that you're uncomfortable with the valuations in certain pockets. Is there any quality stock that you see right now that you would buy, that you're more comfortable buying at these levels compared with 2 months back? Even if it goes down another 5%, you'd be comfortable.
So I think, say a company like Nestle has dramatically changed. It's basically this quarter was a difficult quarter for them, and we've seen the stock correct from almost 2,800, 2,900 levels to the current levels. And I think from a fundamental perspective, valuations have got reasonably corrected to closer to the long-term averages. And if you look at the business of the company and what the management is doing about changing the current scenario, is that they're taking a lot more initiatives in terms of focusing a lot more on the advertising spend, the rural reach that is there. So I think it's just a matter of time before, again, their earnings continue to grow and we will see this stock again grow at that levels. So this is one company which one can look at adding even on declines at the current levels.
All right, so Nestle is the one pocket that looks positive to Lancelot in quality stock, yeah. In this kind of selling pressure that we're seeing in the markets. Well, the next question is from Satya from Chennai, and he wants to understand overall from a healthcare sector perspective, as well as he wants to have a view on Zydus Life, and he wants to know how it will perform post US elections. He's bought Zydus at 1100 levels and he's bought around 300 odd shares, and his current loss stands at around 29,000. This is more of a fundamental question, so Lancelot, I'll stick with you for this one. Zydus Life Sciences, your view on the particular stock?
So I think, the company has been doing reasonably well. The US markets have also started to open up and you are seeing some demand coming in from the US. I think if one looks at it from a 2 to 3 year horizon, one should get reasonably good returns from this stock, as both sales and earnings will continue to grow going from here. I don't think US election results may make any significant impact on sales, because at the end of the day, both the candidates are committed to bringing down healthcare costs in the US. And one of the ways of bringing it down is obviously to look at companies like Zydus or the Indian pharma companies who can provide medicines at lower cost as compared to US companies. So I think from that perspective also, it shouldn't be too much of a negative, and one can look at accumulating this stock.
All right. It's an interesting question coming through from Arun, who's writing in from Hyderabad. It's a stock that we discussed at the start of the program, which is contributing the most perhaps to the declines even at this juncture for the Nifty 50. I'm talking about Reliance Industries. And it's given up quite a bit of ground over the last month or so in particular. And there are quite a few rumors that are circulating as to why this is being caused. But let's talk about fact. And let's talk about whether or not it should be bought at this current juncture. Because Rajesh, if you look at the year-to-date chart, it is now currently just about negative. So would you say that it's now a good time to consider buying?
So for near-term, short-term perspective, stock structure is on the weaker side. We may see furthermore weakness in the near-term to short-term structure, but on the longer-term time frame, yes, it's an opportunity again to buy and accumulate in this decline. For trading point of view, I think 1250 would be the next target for the stock on the downside. Though stock is now approaching towards its critical support area, which is placed at around 1290. Almost stock is trading around those levels. So I think if it slips below to 1290, next target would be around 1250. But for long-term investor, yes, one can buy these dips for long-term investment perspective. On the downside, 1220 would be your stop loss for long-term. And on the higher side, the first resistance on the higher side, the major resistance is placed at around 1340, 1360 level. So that level needs to cross. Once the stock crosses those levels, then we may see some short covering action and some comfort buying may emerge in this counter, and then possible stock can start recovering from those levels towards 1400 to 1450 kind of level. But it may take time as the stock near-term structure has already turned bearish.
Right. Well, the next question is from Vinod Kumar from Kanchipuram. He wants to invest in Dixon Technology. Now, what he said is that he's already invested in a few shares of Dixon Tech, but he wants to understand whether he should add more or not. Rajesh, I'll stick to you for this one. How does Dixon Tech look to you on the charts?
So overall long-term structure is bullish, and yes, we have seen some profit taking in recent past from the higher level. But stock is now trading near to its 50-day moving average, which is almost close to 13,900 kind of level. So I think if it's not breaks below to 13,900, I think we may add the position as the stock has already corrected from its recent high of 15,000, 15,100 kind of level. So I think after a significant correction, it's an opportunity again for trading point of view as well as for the short-term investment perspective also. So 13,600 would be your stop loss. Yes, we may add the position. On the higher side, 15,000 to 15,500 would be the next target once the stock start recovering from the current level.
Okay, quick view on VRL. Logistics, the stock is currently trading at 554 thereabouts. We've got a question from Nadeem Khan, who's writing in from Noida. Lancelot, on the fundamentals, do you have a view and would you hold at these levels?
Yes, I think one should hold at these levels because VRL Logistics is a major player in the road transport space and is providing end-to-end solutions for companies basically primarily out of South India and Western India. So I think given the growth that we are seeing in the road transportation space as well as in the e-commerce sector and in the general economy requiring increased road transportation for goods and services, I think one should remain invested in VRL. Maybe if you're getting it at this price, start accumulating slowly on the way down, because over the next year or two we should see a significant improvement in its revenues as well as earnings.
All right, Lancelot, on that note, thank you so much for joining in. Rajesh as well, thank you so much for joining in, for answering all the questions that you did answer. An insightful conversation today, particularly important on a day like today. Thank you so much. All right, we have to slip into a very quick break on this program, but don't go anywhere because we're trying to decode for you what is happening in the current context, why we're seeing so much selling, and we've got two voices from among the biggest dealing rooms in India to give you some perspective on whether or not certain action on the derivative side is leading to selling in the markets right now and why there's such a spike in the VIX. Do stay tuned. We'll be back on the other side with a lot more.
Market veteran Ramesh Damani puts on the cephologist's hat to get you the insight you need on the US presidential battle of the century. Will Kamala Harris claim a historic victory, or will Donald Trump march back into the White House?
According to polls, if Biden and Trump were running, I think Trump would have handily won. He was almost measuring the drapes to the White House even before the election.
What are the stakes for India and its investors?
The road to the 1600 Pennsylvania Avenue goes through Pennsylvania this time.
Tune in to US Election Watch with Ramesh Damani, exclusively on the NDTV network.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Lord Street deals, finance and policy news that could shape your tomorrow, the newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
Market veteran Ramesh Damani puts on the cephologist's hat
Welcome back. You're watching Ask Profit on NDTV Profit. Now, we promised that we'd be delving a little deeper into what's happening with the markets right now. And who better to ask than individuals that are part of among the biggest dealing rooms in the country. We've got Deepak Jasani, Head of Retail Research at HDFC Securities, and Gaurav Dua, who's Head of Capital Market Strategy at Sharekhan by BNP Paribas. Gentlemen, thank you so much for joining in. A lot of our viewers are trying to understand what is happening at this juncture. And there are some explanations that are being floated, and perhaps a conversation with you will help them get some clarity. Deepak, I'll start with you. One of the points that is being raised is the possibility of margin calls being triggered, cash not being added by clients, and therefore securities being sold into. How plausible is that as an explanation?
Yeah, good afternoon. Now the Murat trading session of the last session, which we had, previous session, and that session ended with gains. So in that sense, margin calls this morning will typically depend on the MTM losses till yesterday. So whatever losses have been made on the Murat trading session or prior to that, for that the margin calls will be made today. But I don't think that was a very big amount in any case because Murat trading ended in the positive. Today, there is a fall in the market. So probably tomorrow morning, margin calls may happen in case markets don't recover by the end of the day and clients are not able to top up their MTM losses.
Gaurav, I want to understand that what is the kind of client exposure right now in terms of derivatives and how much of that allocation is towards the longs?
So, I think most of the clients are not over leveraged. That's what we have seen. System has become extremely tight. So it is not like past when markets will fall by 200, 400, 500 points and it will trigger a massive kind of, margin calls and, so I don't think we are in this, in this thing, that kind of this market where margin calls is a trigger for a sharp fall in the market. What we see is that, every year Nifty does go down by 8, 10%, 12%, and we have already, we had just had a fall of around 9.5 percentage points from the peak. So I think this is something which most of the investors will this thing take in stride. The problem is in the small cap, micro cap space, some of the overheated spaces where the fall has been much, the sharper. Stocks are down by 20, 25, 30% plus. And there you don't have margin funding. Okay, so I don't think margin funding or the squaring off is an issue as of now in the market. Yes, as the other participants said, tomorrow morning you might know the figures, and it will not. I don't see it as a very big issue unless the market keeps falling down like this for a couple of days, 2-3 days. Unless you see that, I don't see margins as an issue.
Fair point. Just help me understand further, Deepak, what the kind of behavior is that you're seeing with your clients right now. Because another kind of talking point has been that while we've seen the benchmarks drop, as Gaurav just pointed out, 9 percentage points odd for the benchmark Nifty 50, less so for the broader market benchmarks over that same period, we've seen a few stocks where you've seen sharper cracks. The point that is being raised is that positions are not being kept for long periods. Out of 10 positions, say for example, 2 are being kept, and so therefore this is not something that could exacerbate, and that lends itself to what Deepak is just talking about, or rather what Gaurav is just talking about. What would you tell us with regard to the behavior of your clients? Are they adding cash where required when margin calls are getting triggered?
So it will typically depend from client to client and their trade mix. So in case they are more sort of focused on derivatives or FNO, then probably at some point they will take a call that they have to get out, they have to square up and wait out for some time before they have a clearer view about the direction of the market. In case they are invested in the cash market, and most people will have money to sort of top up at times of weakness. So there also, I think typically people will continue with their cash positions. Very few will sort of want to exit their profit making and loss making both positions, try and square up them and sort of sit out for some time. But most cases, people will top up their losses, pay up their MTM losses, and wait out for better times to come. Unless, as Gaurav mentioned, the market keeps falling day after day for the next 5, 7, 10 sessions, at which point the patience of the cash investors will also get tested.
Gaurav, you said that you might expect further fall in the markets. So overall picture I want to understand. First off, do you think that the markets are oversold? And secondly, when do you expect this selling to, overall take a pause or maybe take a stop, and, thereafter we see a correction and we see some kind of positivity or some kind of green signals in the market going forward?
So yeah, I mean that's I don't have that kind of a skill to correctly predict the market for a day or half a day or 2 day. But then if you see in this fall, basically the large investors institutions are going short. That means there's likely to be more weakness in the market. Retail, on the other hand, today in the FNO have actually built up their long. So that is how the market is as of now looking. So I think if you expect some more weakness, that could be the case. However, where it will take the support is something I think we'll know in the hindsight only. But given the past history, as I said, 10 to 12% kind of a pullback in the Nifty happens every year. So that should not be honestly surprise to anyone.
Gaurav, just a follow up to you. Of course, you can't project or predict when things will turn. Nobody can do that, really. But the question to you is there some element of spooking taking place based on the kind of global events that are just a day or two away, particularly the uncertainty with regard to the US elections, particularly in the context of the kind of selling 1.25 lakh crore on a provisional basis by foreign institutions in the Indian equity market?
So you mean, I think we have been extremely lucky and blessed in this fall because there was so much of strong domestic inflows that 1.5 lakh crores have been got absorbed with only this 8 to 9% fall in Nifty. So I think markets have done this thing pretty well in that sense. Secondly, I think markets, if you look for a leading indicator where they're going to stabilize, one is that, as I said, the retail will have to stop building longs, which I don't see as of now. Secondly, the India VIX index is still in green. Okay, so volatility index is going up. Unless you see first signs of India VIX actually cooling down, you cannot expect markets to stabilize. Okay, so I think these will be two basically indicators for everyone to look forward to.
Right. Deepak, just for viewers' context, I want you to explain that why has the India VIX gone up so much, and what is the kind of, trend that you expect going forward as well?
India VIX has gone up. I think it closed yesterday at about 16. It has remained in a band of about 12 to 16, 17 for quite some time. So in that sense, volatility, now currently it is at 17. So 12 to 17 is a normal band for the VIX. We are at the upper end of the band, no doubt. There is a event because of which the volatility is high. The US elections and US Fed meet and the result season. There are three things put together. So it's not surprising that the VIX is inching up, but historically the VIX has gone up to much higher levels in the past. So compared to that, I think there's nothing to get overly worried about these levels of the VIX.
Fair point. Deepak, I'm just curious about the kind of selling that you're witnessing, whether it is concentrated in any specific pocket sector-wise, and in your opinion, are there any pockets that are poised for more selling where you anticipate that things could get worse?
So today, I think we have seen some weakness in the refining stocks because of a brokerage report which has sort of downgraded their rating on all the refining stocks. There is some selling in auto stocks, mainly because of the monthly sales number. Wholesale numbers have been good, but retail numbers, people are still awaiting as to how good or otherwise they have been. So from day to day, you will sort of get sectors which are under selling pressure or which are witnessing buying. Secondly, if there is a lot of FI selling happening, then typically it would be a basket selling in most cases, whereby all about 15 to 20 or 30 stocks will see selling pressure at a particular point of time, and the index will come under pressure. So a lot will depend on the near-term developments in the respective sectors, and that is how those sectors will get impacted either on the positive or a negative side.
But Deepak, I want to understand that the selling has been happening since the past few days. Do you see any sectors which has stood strong against the kind of selling that has already been happening in the markets? And do you expect those sectors to probably perform better as compared to what other sectors are seeing in terms of pressure?
Yeah, so I think two sectors stand out. One is BFSI and the other is IT. So they have sort of fallen less than the others, withstood the overall negative sentiments much better. And going forward also, I think we had slight negative news for the banking sector in the sense that the credit growth for the fortnight ended 18th October came in at 11.5%, which is at a multi-month low. So that is a slight negative for the BFSI. Otherwise, I think BFSI and IT could sort of outperform even in a downtrending market for some time.
Gaurav, do you want to add to that? And also, question is, how are you advising clients right now? Of course, it would depend on size, scale, and proclivity. But broadly, how are you advising your clients?
So, for about month and a half, we've been asking our clients to reduce exposure to small cap, micro cap stocks, momentum stocks, because, you have had a 17, 18 months of a one-way rally in the small cap index. And if you see the past 20, 25 years, on an average, a small cap rally lasts for around 18 months. So we had already had that. And maximum of small cap rally has gone for around 20, 21 months. So it was time where the risk reward was much better in this thing large caps compared to small caps, and this thing that is quite evident. Also, we were asking our clients to take home some profits in the spaces that has been doing well, like power, defense, railways, and stuff like that, where the valuations have become extremely overheated. So that has been our stand for past 1.5 month, 2 months. Now, talking about the spaces which are doing well, which are not doing well, I think they are very, very closely linked to what happened in Q2 earnings. We've been talking about events, but we haven't talked about how the earning growth has slowed down. Started in this in Q1, and it is very, very evident again in this in Q2. So the biggest disappointment which has come here is that the consumer spending has slowed down. Rural was supposed to pick up, which has actually not happened. Urban spending is also weak. So if you see, basically FMCG, autos have been largely underperformers. On the other hand, we have seen asset quality issues in case of NBFC. So that is also a space which have been the worst hit. So this is all linked to what have been the outcome of Q2 results. On the other hand, what we have seen is that some of these private banks, some of these this real estate companies, IT companies, which have shown decent numbers and given a better outlook of growth, have been the outperformers.
Right. Okay. And thanks for that summation, Deepak. Last thoughts from your side. I've asked Gaurav already what he's been advising, or his team has been advising clients. Do you want to add to that? What have you been telling your clients?
Yeah, so blind investing in the micro, small, and mid cap stocks to be typically avoided. That goes without saying. And but at the same time, one has to realize that small and mid caps will give you the best alpha. If you don't want to if you want to stay away from small and mid caps forever, then probably you should go to mutual funds, the large cap mutual funds or the index mutual funds. So you will have to be on the lookout for stories within the small and mid caps where the stocks have come to an attractive level vis-a-vis the growth expectation of their earnings, and take baby steps or do SIP investing in those stocks. Monitor them very closely, look out for any red flags continuously, and when you think that their valuations have gone beyond what the bull markets also deserve, then better to start unloading gradually from those stocks.
Deepak, Gaurav spoke about earnings. I'm curious about what you made of that, because there have been a few very key disappointments. In fact, if I look at the development today itself, and Gaurav did mention that in the auto pack, wholesale numbers are a bit of a disappointment in certain pockets, and that's evident in the way that the stocks are getting battered a little bit, right? So what did you make of the areas where you were most or most disappointed, and are there areas where you're seeing that it's a blind buy at this juncture based on the earnings that you've seen? They were better than you expected and valuations have corrected, and so it's a blind buy.
So earnings this time around, I think the profit growth will come at a multi-quarter, 16, 17 quarter low. So in that sense, there may not be any blind buys as such in terms of sectors. It is all very, very relative. Now, the commodity-based sectors have performed the worst, whether it is metals, oil and gas, cement, chemicals, etc. So they have performed the worst. So going forward, I think one will have to look at whether these commodity plays are reaching any attractive levels so that you can ride the bounce or maybe the next big run. And a lot will depend on how the Chinese economy starts behaving from now on, based on the stimulus measures which have already been announced and some of which are expected from here on.
I just want to point out very quickly that we are off the low point of the day, gentlemen. You're obviously looking at your screens as I am right now. We're down about 1.5% for the Nifty 50, as compared with 2% when we started this conversation, or thereabouts. Actually, at 11:30 or thereabouts, we're at 2% down.
Right. Yeah. I think, Alex, another pocket which is seeing significant pressure today is the oil and gas space, and it's down almost around 3.5 odd percent. But it, like markets are recovering. Even Nifty oil and gas has recovered from its day's lows and currently trading around 2.8% lower. But Gaurav, I want to understand overall, a lot of things are not working for OMCs. Brent prices have been up around 4%. Q2 earnings have been weak for all of these OMCs. Production outlook overall remains uncertain. So your outlook on all of these OMCs, and how does one play with these stocks at present?
Right now in the oil and gas space, what we have been talking about, recommending to our clients and what we like is the entire companies in this gas chains, okay, right from this Petronet, LNG to GAIL to this thing, IGL, MGL. So I think there is a space which don't get constantly or regularly affected by the regulatory changes. So that's where we see this thing value. Valuations are also on our side. So that's where we've been focused. OMCs have become extremely volatile because of the volatility in the crude oil prices, and that makes it very, very tough to take a buy and hold call.
That's a fair point. Deepak, Gaurav, thank you so much for joining in, for the perspective that you gave us, most insightful. And on a day like today, our viewers will certainly appreciate the time that you've spent with us.
My pleasure.
All right. Now, let's very quickly take you through what we have not spoken about while we were speaking to those two gentlemen. And the fact is that, and we were pointing it out very quickly, but let's take a little bit of a closer look at the patchwork right now that we were showing you on the screen in terms of sectoral performance. You'll see VIX is still elevated. It's up about 6% or thereabouts. But you have the Nifty IT that is currently, has come off. It's down about 1/3%. And that was what Deepak was just mentioning in terms of the stocks that have not gotten beaten out as much. BFSI not to that extent. It's still down, the Nifty Bank down about 1% or so. But you have oil and gas that is one of the pain points in trade today. And let's talk about OMCs as well as gas stocks. And this is also on the back of the commercial LPG cylinder price hike. That is also playing into the kind of reaction that you're seeing in the stock markets today. Mika is joining in to tell you about the potential impact on the OMCs if this hike, or rather of this hike. Mika, what can you tell us?
Good afternoon, Alex. So, you have the Nifty oil and gas down about 3.8% intraday. When you talk about the top losers, you have companies like IOCL, BPCL, HPCL, and Reliance Industries. And the Indian oil marketing companies have fallen over 4% intraday. Now, when you talk about what's not working for the OMCs, well, up first is the volatility in Brent prices. While they do stand lower on a one-year basis, they have seen almost a 4% uptick in the past week itself. And the OMCs also posted a weak Q2 earnings. They have extended LPG losses. Now, they did announce a commercial price hike by 62 rupees for the 19 kg cylinder. However, when you talk about, while this could offer some relief on the LPG losses that the companies have been facing, they have been facing majorly losses on the retail part of it, which is currently played on a subsidized rate. So the market's not, you can see while this would be positive for the realizations, the stocks have corrected. When you talk about what's not working for Oil India and ONGC, well, production outlook remains uncertain. The companies are yet to post their Q2 results. And lastly, when you look at the city gas company pack, well, IGL, MGL, GGL are all fallen 2 to 4% on an intraday basis. One of the major, headwinds for the sector is the lower APM gas allocation, which impacts their operating costs and thereby their profitability. Analysts also expect near-term margins to, remain under pressure, and the PNGRB notice to end network exclusivity is also a key overhang.
Yeah, thanks so much for putting that into perspective for us, Mika. And certainly those stocks are among the worst hit, particularly in the large cap space, if you were to look at it. And some of those stocks will play on the screen. But one key aspect this week, apart from everything that you're seeing in the global space, talking about US elections and Fed meet and everything else, action in the primary market in India is certainly something to watch for. And it's something that Mahima is tracking very closely. The Swiggy IPO, a lot of people have been speaking about it for so long, particularly because of the interest that celebrities have had over the last 3 or 4 months, people trying to get in early.
Right.
But that issue, the size of the issue has actually shrunk a couple of times. It is at 11,300 odd crore rupees, and it's a tough week for them to launch their issue.
Absolutely, absolutely. It's a tough week, but the interesting part is that Zomato will now have a peer to compare with. So it's probably good for the entire quick commerce and the food delivery space overall. Just to give a brief about the IPO details, the Swiggy IPO will open for subscription on 6th of November and end on 8th of November. The issue price is set between 371 to 390. It has a fresh issue of 4,499 crores, and OFS stands at around 6,828 crores. So the total issue, as Alex rightly mentioned, stands at around 11,327 crores. Now the market value as per upper band stands around 87,299 crores. Now in terms of how these proceeds will be used by Swiggy management, well, they'll be repaying the Skutsi borrowings of around 164 crores. Further, they'll be expanding their dark stores and will be investing around 1,178 crores there. They will also be investing in technology by around 700 odd crores. And further, they'll be investing in branding and marketing and promotional spends of around 1,115 crores. Now, in terms of the financial metrics, when it comes to talking about the Swiggy IPO, it's but natural that we have to compare it, to Zomato.
But the sticking point point, Mahima, is going to be the fact that they are not yet profitable.
Yeah.
And it's going to take quite a bit for them to be profitable. And so therefore, will the street have the kind of patience that they would anticipate or hope that the street would have to wait for 5-6 quarters for a profitable turnaround?
Absolutely. So analysts suggest that it's around 5 to 6 quarters away from being profitable. So that's one of the pain points for Swiggy right now. But the street might take it positively because it is coming at a lower valuation as compared to Zomato. So that's the plus point for the Swiggy IPO. In terms of financial metrics, as you rightly mentioned, it's around 4 to 6 quarters away from turning EBITDA positive. Currently in Q1, it had a negative EBITDA of around 544 crores. And overall, in terms of metrics also, if we see, they have been improving in terms of FY24 to Q1, even in terms of contribution margins. Swiggy's performance metrics have been improving. So that's a positive definitely for Swiggy IPO.
Let's see what
because with the kind of swelling that we are seeing, I mean, it'll definitely be an interesting thing to watch
out for. And even at this juncture, despite the kind of drop in prices, Zomato is still one of the stocks of the year.
Yeah.
So we'll have to see how Zomato also reacts once Swiggy comes through.
Absolutely.
But with that, we're completely out of time on this particular edition of Ask Profit. From Mahima and myself and the team that put the show together, thank you so much for watching. Do stay tuned. This is NDTV Profit.
Market veteran Ramesh Damani puts on the cephalogist's hat to get you the insight you need on the US presidential battle of the century. Will Kamala Harris claim a historic victory, or will Donald Trump march back into the White House?
According to polls, if Biden and Trump were running, I think Trump would have handily won. He was almost measuring the drapes to the White House even before the election.
What are the stakes for India and its investors?
The road to the 1600 Pennsylvania Avenue goes through Pennsylvania this time.
Tune in to US Election Watch with Ramesh Damani, exclusively on the NDTV network.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow, the newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day.
Welcome to NDTV Profit. My name is Varsha, and Biocon will be in focus today. So company came out with its Q2 FY25 numbers, wherein if you see revenue was up 4% while EBITDA was down 7%. Net profit was down 84%. Now this was on the back of higher tax outgo. Well, to speak about the numbers, I am here joined by Mr. Shreyas Tambe, who is the CEO and MD of Biocon Biologics. Hello Shreyas, welcome to the show.
Hi Varsha, thank you for having me on the show.
Well, Shreyas, weak generics performance have eroded overall growth and margin for the business. Can we see improvement in H2 FY25, and if yes, what are the levers? And I was just seeing that biosimilar sales were up 4% quarter on quarter. So what's the outlook there also?
Yeah, I mean, I wouldn't specifically talk on the generics business, but let me say that, we have commented about, there's a lot of promise in that business too, in terms of the product portfolio that we've got, the peptide portfolio that we are bringing to market. We're the only ones who have approval for that product at this point in time in the UK, and we're looking to launch that product. So I think we have a lot of promise in that. We have leadership positions in some of our immunosuppressant portfolio. But obviously, there is a pricing pressure in some of these generic molecules, and that's something that we will have to overcome. We've been very resilient over the years, and the generics business will pick up as time goes by. Coming specifically to biologics, which is the business that I can talk to you more specifically about, we have had a very strong quarter again, where business has grown 19% on a like-for-like basis year on year. And that is something that we're very happy about, because this growth was not just in revenues, but it's also been a strong, profitable growth, with our core EBITDAs being in the 30s and the EBITDA margins in the 20s, which has been a very strong performance, which sets us up very nicely for the second half of the year.
All right, understood. And also I wanted to understand this, as far as Biocon Biologics is considered, the core EBITDA margin has decreased, let's say, quarter on quarter. So is the OPEX which has increased quarter over quarter?
Well, actually, the core EBITDA margins move on a like-for-like basis is what you need to see. If you remember, last year, this time, we also had a couple of other businesses that we monetized. For example, the India branded formulations business was another business that we had at that point in time, which we have monetized. So some of these adjustments, when you look at that, our core EBITDA actually is comparable. It's in fact the gross margins are better than last year same time. So we feel good about how the business has grown, Varsha.
All right. Now, what insights can you just share about the traction in the biosimilar business? Now, considering the pipeline that you have got and the upcoming Stelara biosimilar for commercialization in Q4, what are the key catalysts do you anticipate over the next 3 years, particularly in FY27?
Yeah, and that's a very, very, very strategic and important question that you ask. Let me start by first talking about the products that we already have in the market. And that's a good way to answer the question that you've talked about. And we're very happy to tell you that the products that we've commercialized today, after we acquired the business from Viatris, it's coming up on the first year anniversary after we integrated that business at the end of this calendar year, has shown a very strong performance, where in the United States, which is one of the large markets, 40% of our business comes from there. We have seen a fifth of the market share has been with our products. So it shows that the oncology space that we have two products in, both products exceed 20% market share. The one insulin product that we've got, the insulin glargine, has close to 20% of the market. We've done exceedingly well in some countries in Europe, which is important for us for our adalimumab franchise. So we feel very good on the platform that we've set up in terms of taking us forward for growth. Emerging markets, we have decided to focus on 8 to 10 countries, and our market shares there also continue to grow. So what is it for us in the next 2 to 3 years? You've set a horizon on FY27. Well, the important thing for us is we are positioned very, very favorably at this point in time. We are one of the few companies at this stage in the industry which is looking to launch about 5 products in the next 2 to 3 years. So that is very unique. Biocon Biologics has always been a science-driven company. We have excelled and we've performed because we've been a science-driven company. We have several firsts to our name. And the next 2 years or 3 years that you see with the time frame that you said, we are looking to launch 2 to 5 products in that time frame. You talked specifically about Stelara biosimilar, and we have reached a very favorable settlement with the originator in this case, so that we can be amongst the first wave of products that are launched in the United States. We will look to launch this product in the UK, in EU, in Canada, because we've reached favorable settlements there as well, including in Japan. So we feel that this will be another product that we will bring in the immunology space, a franchise that we're very familiar with, given the performance of polio in Europe, and we look to build on that in the coming couple of years.
Understood. Also, any comment on the pricing aspects, as prices are more competitive as market is moving towards biosimilars?
Well, I think the first thing, Varsha, we need to be cognizant of is pricing is an artifact of the market, and it'll always be there because there will be competition. And if we are expecting to be successful, we need to be ready to deal with competition. We have, for a very large part of how we've grown the company, we've been a emerging markets player, which is very, very frugal in terms of how it approaches on its cost structure, and it's very price sensitive in terms of its affordability index. That is something that has driven us as a company. So we don't necessarily look at pricing as a challenge for us to move forward. In fact, we look at it as a differentiator because we believe that we have one of the most cost competitive setups and positions us better than most of our peers in this space.
Okay. Also, regarding your recent debt refinancing, now what is the kind of finance cost for the newly added debt? If you could, update us with that.
Yeah, and of course the finance cost is an important question because that is what you report on that. But let me tell you a little bit about this, because this is a very strategic development. It wasn't just for the coupon that is, of course, lower than what it was before. So we have a lower cost of financing than what we had in the past. But more importantly, if we look at it, why did we do this? It was important to do this restructuring so that it allowed us to focus more on the business rather than focus on servicing the debt. So the long-term debt that now we've got through the US bond, US dollar bond, which is now listed on the Singapore Stock Exchange, is also a confidence building measure where more than 50% of our investors are US based. And it's been oversubscribed for over 3 times, which tells you that there's a lot of confidence that the investor base that we've got has for the story that we are trying to build, the business that we have built so far, and the promise that it holds for the future. Now, specifically answering that question that you asked, how is the coupon placed? Well, the cost of the financing of this is, let me tell you, lower than what it was when we first financed the acquisition debt, and certainly lower in terms of servicing it, both in terms of the bond itself and in terms of the syndicated loan that we've now refinanced as well. So on all, not just the cost, but strategically, I think it has been a very, very important move for Biocon Biologics.
Understood. Now my last question, Shreyas, to you would be, can we expect IPO when it comes to Biocon Biologics? What are the timelines or any kind of guidance that you can give?
Yeah, and I know that this keeps coming up every other time, and there's a lot of interest in that as well. I think the bond issuance, of course, tells you that interest is very solid and strong. And we have guided in the past as well that we will be looking to unlock value in Biocon Biologics at the right time. We, of course, needed to first consolidate the business, which is what fiscal 25 has been. We have, of course, integrated it, which means whatever we acquired from Beatrice, we've integrated it into Biocon Biologics. But we need to consolidate it. We need to be in control of that business before we accelerate it for growth. And then we can talk about the IPO so that it creates value for all stakeholders. So it's not just about unlocking value, but also creating value for everyone who is invested in this phenomenal growth story.
Hello and welcome. Thanks for staying with us on Hot Money here on NDTV Profit. I'm Harsh Saita. With me is Anushi Vakharia. And over the next 20 odd minutes, we'll speak with the management as well as try and get perspective on many of the counters. Let me bring on board Ashish Maheshwari, Director at Arihant Capital Markets, to also talk to us and give us more perspective on some of the stocks which are buzzing in trade. First off, Ashish, I want to talk to you with regard to this reversal that's happened with regard to loan growth and deposit growth. We've seen deposit growth outpace loan growth, first quarter since 2022 April that this has happened. Stocks largely in the private sector banking space where things could change as a result of this. Just talk us through how big this is for you, or not as much. Give us your perspective and also tell us which stocks primarily will be on your radar on the back of this trend starting.
As far as this disequilibrium of deposit growth versus credit growth discussion and is there in the banking sector, in my view, now as the markets, as stock markets are taking slightly a beating, so maybe retail investors' deposit will again start flowing towards the banking sector as such, number one. Number two, now some deposit growth is envisaged because now deposit rates are also going up. When you are getting almost 7.5%, 8% fixed deposit returns, so surely some money will again go in the banking channel because other sector will start looking risky. Third is again, as the real estate prices and the gold prices are also getting higher, so I'm expecting that some reverse flow from other sector investing now will again flow in the banking sector as such. And the fourth is again, as rural economy is showing some offshoot of picking up while looking at the numbers of Mahindra and Mahindra tractor sales and other companies which operate in primarily in that area. So there a lot of money only find its way or the saving find its way through banking channels. So some of the deposit growth I'm expecting now will start coming in from this quarter. As far as credit growth is concerned, again in the MFI sector, like what your Jivans or ESAF or Credit Access Gram, etc., are showing a lot of stress there in these kind of unsecured lending. So in that particular sector, I'm not that upbeat for those companies and banks. But I think the frontline banks here like Axis, HDFC, ICICI Bank, they will continue to do well in times to come.
Okay, from the banking space, we shift our focus to the defense space, wherein Zen Technologies have reported their Q2 numbers yesterday and the revenue over this weekend. And the numbers, strong set of numbers we are looking at. Revenue about 3.6 times of growth, margins at 33.1% compared to 28.5%, and net profit up over 4.7 times this quarter. Orders stood at about 956 crores. But to discuss more on the outlook, on the results and more, we are joined in by Mr. Ashok Atluri, the Chairman and Managing Director of Zen Technologies. Hello and welcome to the show, Mr. Atluri. First of all, great set of numbers that we are looking at. What to understand from here on, what's the outlook forward? How is the quarter gone by for you? You've seen about 3 times of growth in your revenues itself. Do we expect to see a revision in the 900 crore of guidance that you've given for FY25?
Yeah, thank you so much. Yeah, we expect that 900 crores is the target that we'll be able to reach this year. And the strong numbers will continue to the next 2 quarters also. And again, we think additional orders will come during the end of third quarter and the fourth quarter. And that should give us growth for the subsequent year also.
Mr. Atluri, what keeps the guidance more slightly on the softer side? Because you've done 500 crore in terms of H1 top line. Likely, will you beat that 900 crore guidance that you've given for full year?
Last year, we said 450 crores, but we did 430 crores.
Right.
So, so I don't want to take the flak for that. So, let me be conservative here. Yeah.
Fair point. So fine. So being a little bit conservative, nothing wrong with that. But give us perspective. So your glide path is to do 3,000 crore by FY28. That's your essential guidance. In terms of new products, how many new products will come on stream in your view till then? And just in terms of what component or what mix will those new products command in that 3,000 crore top line?
So, one thing, just I want to reiterate that, we are in two segments. One is training and simulation, and the second is anti-drone systems. And again, again, the current scenario worldwide is, especially after the Ukraine-Russia war, Ukraine having the world's latest equipment, but still losing a battle against Russia, which is probably having dated equipment. The reason is again being saying that, it's the man, not the machine, that will help in a war. That means to say training has a very significant role in things. So earlier it used to be just focus on buying newer equipment, the latest toy in the thing. But now it has suddenly become worldwide, not only in India, the training is important. So we expect the training to really increase in demand. The second is anti-drone system. As somebody tweeted today, it is no longer a nuclear superpower, it is the drone superpower we are talking about now. Whoever has better drones will be able to do. So how do you protect yourself against these drones? We have seen it in Armenia, Azerbaijan war, we have seen it in Ukraine. So anti-drone systems that we have developed are absolutely top of the class in the world, and so are the simulators. So we are in this sweet intersection where the growth for the existing product is very, very huge. With respect to the new products that we are launching, we are looking at increasing the scope of the product that we have. So we have launched this anti-drone system, remote control weapon station, the camera which goes with them. So we are also finding the independent market for the remote control weapon station in addition to the anti-drone solution that we are offering. So we expect that the products that we are organically growing itself will be able to give us the 50% CAGR growth that we are seeing for the next 3 years.
Mr. Atluri, of the strong growth that you've reported in Q2 on the revenue side, want to understand what was the outlook on exports. Last quarter, there was no recognition of exports which had taken place. So just wanted to understand what's your outlook on exports, how the margin profiles differ between the domestic and the export orders. Can you just give us an outline on both of these aspects?
So we are saying that out of the 900 crores, at least 300 crores will be exports. That's why about one third will be exports. And the second is that your margins for the exports are a little higher than the domestic, because of the the distance, the ability to maintain, etc. We charge a little premium for the export market, and we think that premium will be commanded. Again, we compete there with a lot of foreign companies, and we are. Again, our objective is to supply the best product in the world at the best price to the customer. So the customers are very happy with the price that we are giving. We expect the export orders also to scale up in spite of the premium that we are charging.
Right, sir. Sir, tell us, you suggest that the current products will drive your top line from the 900 crore guidance in FY25 to 3,000 crore in FY28. What are the new products you're investing in? And what do you believe is the competition and the traction in those products that we can expect, and when do they come on stream?
So, the additional investment has been both in terms of, making some more simulators in for the new upcoming weapon system that we have. And second is the anti-drone system. We are looking at the evolving threats that are coming, that our customers are facing, and developing in collaboration with them based on the live feedback that they are giving. So, these two factors are helping us, scale the existing products. And we do think there will be some launches, some R&D is going on, which would be premature to announce now. But definitely products which will be associated with these two things will be launched in and definitely I've factored those products also for the growth. But I think the growth stands strong at this point in time.
So, Mr. Atluri, of these new launches that are expected to take place, what is the kind of contribution that they will have on the top line from next year onwards? Can you give us more details on that? And is the margin profile in the 33 to 35% for these new products as well?
So, as I said that, for anti-drone systems, we are just strengthening the complete thing. For example, the remote control weapon station and the camera, etc. So we are thinking that, ideal combination as of now, almost 40% is from anti-drone systems, 60% from simulators. We expect that this may go up to 50%, and that the demand for anti-drone systems is increasing rapidly. But again, I would be very surprised I would not be very surprised if large number of training simulator orders come, and the current skew in favor of simulator continues. But again, to be very, to say that I'm not very sure how the division between these things will happen, but they may be between 40 to 60% for both the products.
Right. Mr. Atluri, how much do you all spend on R&D as a percentage of top line? Or is there some kind of metric or thought process internally as to what kind of number would you be penciling in and spending?
So actually, as a percentage, it's generally very bureaucratic thing. People spend it, I'll say 8%, and then they go and fight, make it 9%. It's a typical bureaucratic approach. But what we are doing is we are very opportunistic, that we get a good product to develop, we invest. So, at this point in time, we have I think this year we'll be investing something like 30 plus crores. But the fact is that if we get a good opportunity, again, Zen is very focused in long-term growth of the company. And we have been spending, we have 150 plus patents that we have applied for. Out of that, almost 80 have been granted at this point in time. They're not only Indian, but global patents. So we are into this R&D mode, and we will spend whatever is required to maintain the edge for the existing product and to develop new products whenever they are required. But this percentage is a very, very bureaucratic term. So we don't fix a percentage. We are very, very open to good opportunities, and we are very opportunistic about that.
No, great to hear, sir. And the other piece, how do you all account for that? Is that expensed out completely?
Yeah, so we are very conservative. Again, we expense out in the same quarter that it occurs. So so there is no question of because that's a very gray area, and for us gray is basically black, so we avoid that.
Okay, Mr. Atluri, in the quarter gone by, your order book stands at about 960 crore. Want to understand what were the order inflows for this quarter, and are you in track to achieve the guidance of 1,250 to 1,000 crore of order inflow target that you've given? Because the H2 is usually stronger. You've said that Q3 and Q4 you expect a ramp up in this order. So just wanted to understand more on this side.
Yeah, so we expect the orders to come into, the last quarter we had a AMC order, I think it was around 40 crores. But we expect more orders to come in the end of the third quarter and the fourth quarter, which will help us to reach the growth target that we have for FY26.
Okay, thank you so much, Mr. Atluri, for joining us and giving us all of that perspective. Stock obviously doing decently well on an otherwise, pretty tough day for markets overall. 0.25% higher as we speak. I still have with me Ashish Maheshwari. Ashish, just talk to us about this one. 17,000 crore in terms of market cap, 85 times in terms of price to earnings trailing 12 months, looking to do maybe 4x of what it's done trailing 12 months top line. How's it looking in terms of valuations to you, and would you go in and buy a Zen Tech? Ashish, believe you're on mute.
I'll start with the disclaimer that this stock I'm holding in my portfolio also.
Sure.
So, as far as Zen Technology numbers are concerned or the valuations are concerned, I think numbers are in line with what market was expecting. And guidelines also, like how you have also highlighted, they have already done 500 odd crores, and next 6 months, in fact, should be better. So I'm expecting 1,000 crore they should touch in this year. In fact, should surpass that number first. I think only thing that market is slightly nervous on the company. Like in last few months, there's no major order win announcement from the company. So whatever the order backlog is there, I think company is trying to meet those numbers. So valuations are rich for this company as far as numbers are concerned. But if you see the kind of growth, almost every year they have doubled their profit. And I'm expecting in next 3 years also almost 35% CAGR will be there, because the kind of innovative products and this anti-drone technology company is working on. There's a very good market for exports as well as in Indian market. So I'm bullish as far as Zen Technology is concerned, with the price target of 2,200 in next 6 months.
Okay, so positive stance on Zen Tech, but another stock which is buzzing is Azad Engineering. Now, this is after the company has signed a 5-year pact with Mitsubishi Heavy Industries for about a 700 crore of an order consideration. Want to understand, Ashish, from you, what is your view on Azad Engineering, especially considering that the valuations over this one is relatively expensive compared to its peers?
Yes, valuations are expensive, but only thing is, as this is again a company working in a very niche area, so they will always get higher valuation, number one. And this, I think, this 700 crore order from Mitsubishi for long-term contract is again will keep some momentum in the stock. Though we have already seen valuations have subsided from the highs of almost 1900 rupees, stock came down to 1500 rupees. But still looking at the institutional holding and consistency in winning new orders as well as the performance, I think momentum will continue in this stock. So my suggestion will be to hold this particular stock, and in fact, it should be bought in any decline.
Okay, thanks so much, Ashish. It's been a packed show, frankly. Thanks so much for joining us as well as giving us all of that perspective. It's been a tight show, actually. But with that, out of time on this one, from Anushi, myself, everyone who puts the show together, thanks so much for watching. Stay tuned to NDTV Profit. More action on the other side.
Market veteran Ramesh Damani puts on the cephologist's hat to get you the insight you need on the US presidential battle of the century. Will Kamala Harris claim a historic victory, or will Donald Trump march back into the White House?
According to polls, if Biden and Trump were running, I think Trump would have handily won. He was almost measuring the drapes to the White House even before the election.
What are the stakes for India and its investors?
The road to the 1600 Pennsylvania Avenue goes through Pennsylvania this time.
Tune in to US Election Watch with Ramesh Damani exclusively on the NDTV network.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Nifty slips under 24,000 for the first time in 4 months as RIL and HDFC Bank contribute to the decline. Meanwhile, the rupee weakens further amid consistent selling activity from foreign institutional investors. All sectors trade in a sea of red. Nifty oil and gas is the top sectoral loser, followed by realty. Metals and banks down over 2% each. Nifty oil and gas tumbles over 3.8%. It is a top sectoral loser as companies face heat from soaring Brent prices and weak Q2 earnings. The post-Diwali week promises to be a bustling primary market as Swiggy, Sagility, Acme Solar and Niva Bupa prepare for a major IPO launch. Ruckus erupts in Jammu and Kashmir Assembly as PTA lawmaker Wahid Parra tables resolution against Article 370 scrapping amidst BJP opposition. The Assembly held its first sitting in 6 years. Hello and welcome. Good afternoon. I am Malika Mishra. You're watching Market IQ. The markets are in a feel-fall mode today, and Harsh is joining me to tell us what's happening with the market.
Well, 2% lower, Malika. It's a tough day for markets. Let's pull up the Nifty 50 intraday chart, and we'll see that the weakness has sustained. That's how it's really playing out. Let's pull up in terms of the advanced decline as well as in terms of contributors. Just about 5 advances on the Nifty 50 versus 45 declines. The advanced decline showing and reflecting that weakness even in terms of the breadth. The contributors, just about 5 contributors in the green. M&M being the top contributor in terms of positives, but outside of that, Tech Mahindra, Cipla, IndusInd Bank are just contributing marginally to the index. Of course, you're seeing some very heavy weights, ICICI, HDFC, Reliance, L&T, contributing to the negative side of the Nifty. And it's not just the benchmark itself. You're seeing even broader markets facing quite a bit of pressure. The Nifty mid cap is down 1.6 odd %. The Nifty small cap also down, or rather mid cap down 1.5%. Nifty small cap down 2% in trade. So it's essentially across the market, the breadth itself being extremely weak. The India VIX is up 8% in trade today. So clearly volatility spiking. In terms of sectors, you're seeing 1% lower on the Nifty Bank, but outside of the Nifty Bank and Nifty IT, which is down around 0.5%, you're seeing more than 1% in terms of declines across all other indices. So there's pressure across the board. You're seeing something like a Nifty Metal down 2.5%. You're seeing 3% down on the Nifty Realty, as Malika said, and even the oil and gas index is down 3% plus. So if we can have a snapshot of that in terms of all sectors, you'll see that pretty much all sectors in the decline and sharply lower. So you're seeing pressure across the board. Maybe on top of that, if you can see Nifty IT, maybe Nifty Bank in the top, on the top front row of that heat map. Outside of that, you're seeing pressure pretty much across the board. So not looking pretty at all. And Malika, that's currently how the texture is playing out.
Well, thank you so much for that market wrap. Now, the rupee today weakened by 3 paise to a record low of 84.11 against the US dollar. And this is for the second time in a row where it closed at 84.08 on Friday last week. Now, this fall is largely being speculated on the back of massive FII selling. To discuss this fall and more, I'm being joined by Anindya Banerjee of Kotak Securities. Sir, can you hear me?
Yes, I can.
Good afternoon. Yes, you are. Good afternoon, sir. Welcome to the show. As I said in my intro, rupee has been falling to record lows, and this is being speculated on the back of FII selling and the RBI possibly not as aggressively defending the rupee. What is your take on this?
Thank you for having me. A very good afternoon. Yes, the Indian rupee has hit a low, but if we take a step back and look at how the other currencies have done over this year. So Indian rupee has depreciated around 1% since the start of this year. And if you look at index called the dollar index, it has appreciated somewhere around 3%. So Indian rupee has actually done better than a lot of its peers. So it's kind of an outperformer yet, in spite of the fact that it's still at a all-time low. So because of the FPI outflows, it's definitely putting a lot of pressure on the rupee, because for the month of October, the outflows have been close to $12 billion. It's just reversing the entire flows which came in September. But at the same time, RBI has been selling dollars, and which is evident from the fact that the FX reserves have come down. So RBI has enough pretty large war chest, and they will continue to be on both sides of the market, because they are looking not to defend a particular level, but basically to target volatility. And they have been quite successful in that.
So apart from these two factors, do you reckon any other reason why rupee has been falling?
Right now, as far as the global macros are concerned, there is no such big issue, except for the fact that, yes, Chinese growth has been a huge issue, and we have the US elections, and the US elections are tomorrow, and that's going to have some kind of short-term impact on the global market. So I think this could be slightly attributed to the US elections, because generally around the US elections, you tend to see the nervousness increase and a bit of outflows accelerate. So I think those are the factors which at this point could be playing out from the global macro side. As far as the domestic macros are concerned, I don't think there is any issue, and the oil prices are low. So that's again not a problem for India.
Right. Thank you so much for explaining that to us and making the picture clear for us. Thank you for joining us on the show.
Thank you for having me.
Thank you. Now, moving on, let's also talk about the other trigger that is being closely watched, and that's not only one, but two. One is US election results, and the other is Fed's rate decision. They're both slated for this week, and it's also important to note that these two triggers are intertwined. Neeraj is joining us to tell us how is that exactly. Neeraj.
Well, some Gavaikal researchers put out a note, and in which they are analyzing what the impact of the Fed election, or rather the US election outcome would be on the Fed electing what to do, let me put it that way. So they have painted two scenarios, obviously. The first one is a Kamala Harris win, and they say that out here the Fed could choose to sit on its hands. This is verbatim, of course, but effectively what they mean is that after the first rate cut, the Fed can choose not to do anything, because Democrats won't bash the Fed for exercising its autonomy. In fact, Democrats have gone out and said that a Trump presidency would threaten the central bank's independence. So it's very easy to assume that Democrats won't go out and tell the Fed that, hey, the Fed is doing something wrong, because they are on the plank that they want the Fed to remain autonomous. In fact, they said that the Fed may signal that further rate cuts may be data dependent. The scenario, according to them, is bullish for the US dollar and possibly for treasuries as well as growth stocks. Now, this is scenario one. Scenario two is in the case of Donald Trump getting elected. They say that the Fed will deliver the expected November cut, possibly following up with a cut in December as well. Now, there is a bit of a converse logic out here to this, because Gavaikal says that if the Fed doesn't do this, then it'll open up the Fed to accusations of political meddling. And this is something that the Fed has fought very hard to dispel the notion of. So even if it is not warranted, pressures may compel the Fed to go out and do a further rate cut in the month of December. Now remember, this is now looking slightly iffy, simply because the data in the US is not suggesting that there will be a series of rate cuts, something that was believed to be the case about 3 months ago. Also, there will be uncertainty if there's a Donald Trump victory on whether Jerome Powell will choose to stay on. Remember, the relationship between the two was very icy in the first innings, so don't quite know if that will stay the case or no. And this might happen almost immediately as per Gavaikal as well. They don't rule out that possibility. Remember, so this is one of the views given by one of the houses, one of the research houses, but many more views exist, and it'll be really interesting to see how that will shape up, because this is happening, all of this is happening in a matter of 3 further sessions. The elections starting tomorrow, the FOMC decision or the verdict coming in on the 7th night. So very action-packed the next 3 days.
Thank you for that analysis, Neeraj. Now, the oil and gas index cracks as volatile global crude prices and weak Q2 earnings drag the index. Mihika is joining us with more details on this.
You have the Nifty oil and gas down about 3.8% intraday. When you talk about the top losers, you have companies like IOCL, BPCL, HPCL and Reliance Industries, and the Indian oil marketing companies have fallen over 4% intraday. Now when you talk about what's not working for the OMCs, well, up first is the volatility in Brent prices. While they do stand lower on a one-year basis, they have seen almost a 4% uptick in the past week itself, and the OMCs also posted a weak Q2 earnings. They have extended LPG losses. Now they did announce a commercial price hike by 62 rupees for the 19 kg cylinder. However, when you talk about, while this could offer some relief on the LPG losses that the companies have been facing, they have been facing majorly losses on the retail part of it, which is currently played on a subsidized rate. So the market's not, you can see while this would be positive for the realizations, the stocks have corrected. When you talk about what's not working for Oil India and ONGC, well, production outlook remains uncertain. The companies are yet to post their Q2 results. And lastly, when you look at the city gas company pack, well, IGL, MGL, GGL all fallen 2 to 4% on an intraday basis. One of the major headwinds for the sector is the lower APM gas allocation, which impacts their operating costs and thereby their profitability. Analysts also expect near-term margins to remain under pressure, and the PNGRB notice to end network exclusivity is also a key overhang.
Thank you for that update, Mihika. Now we shift focus on two-wheelers. On the back of October auto sales, Puneet is joining us to tell us more on this sector.
I think it's getting corrected because of the larger market downside that we're seeing today. And, mostly I think two-wheelers as well as, tractor makers reported really strong numbers. So let's focus on the two-wheelers first. Hero MotoCorp is the first one, reported roughly 6.7 lakh vehicles, sold to dealers in the month of October. Now that's, a very strong growth of about 18% compared to the same time last year versus analyst expectation of about 11 to 12%. Now, another key thing is that, that Hero might be under pressure today compared to the other players. Is build-up of inventory over the last 2 months. So in the month of October, they gave the dealers roughly about 6.7 lakh units as mentioned, but retails were about 5.7 lakhs. So that inventory build-up of about 1 lakh is going into November. In the previous month of September as well, there was an inventory of about 1,20,000 vehicles. So going into November, the inventory is significant. Although the company does sell a lot of bikes in a particular month, roughly 3 to 4 lakhs, I think that might be one of the key negatives for Hero specifically, but overall good set of numbers for Hero. When we move on to the other ones, which is TVS Motors, a really steady performance, about 12 to 13% growth over the last 6 months, and that continues in this month as well. Apart from that, the company has also regained its number 2 market share in the electric vehicle space, dethroning Bajaj Auto for the number 2 position. It currently has about 21% odd market share, and with the new lower priced variants such as the iQube, it essentially is looking to have better EBITDA margins in H2 as well. The third one is of course Eicher Motors, another big highest ever sales in one particular month for the company at about 1.1 lakh units. Now that's a growth of about 31% versus growth expectation of 22% by analysts. Now this is the first month of double-digit growth since April, so that's another positive for the company. And finally Bajaj Auto. Now there's a slight negative, domestic sales have fallen 8% for Bajaj Auto for two-wheelers specifically, and that might be one of the key reasons reacting negatively for the stock today. We spoke to the management and they have said that the festive season outlook is looking much better than they had anticipated earlier, just 1 to 2% growth, and now they're anticipating 6 to 8% growth. But overall, all these players are seeing pressure in the market today, especially because of multiple factors that might not be in hand. But overall, the sales are quite positive for most of these two-wheeler makers.
Right. Thank you so much for that, Puneet. Now, on to some stock-specific action. Pharma stocks like Sun Pharma and Cipla are buzzing in trade today because of various developments, and Varsha is joining us with more details on this. Now, Varsha, let's first start with Sun Pharma. It has been down by over 4%. What's the backstory?
Well, yes, so if you see shares of Sun Pharma are under pressure now, this is because of their one product, that is Lexel-V. Now, a US District Court of New Jersey has granted a preliminary injunction in a patent dispute case over its hair loss drug, which is Lexel-V. Now, Sun Pharma can't launch this product until court ruling or patent expire. Now, this drug is used to treat hair loss. Now, the Sun Pharma has actually disagreed with the decision and they plan to appeal for the same. Just to give a little bit of background, they actually received US FDA approval with plans for the same product, with plans to launch in July and August, and the expected sales were around 200 $100 million over the next few years. But now that has come in halt. Now Lexelvi was actually initially developed by Concert Pharmaceuticals, which Sun Pharma acquired in Jan 2023 for $576 million. Let's see what brokerages are saying. Though the stock is under pressure, but the brokerages are actually positive on the stock. If you see Citi has maintained buy with target price of around 2080 with 12% upside, and they say that Lexelvi launch gets delayed, which is a setback to their specialty division, and delay may have impact on the near-term earnings, that is 3 to 6% of EPS, and they value Sun at 37 times March 26 EPS. While MK is also bullish on the stock, they've rated buy with target price of 2,350 with upside potential of almost 31%. Now they say that Lexelvi's EPS contribution in FY26 is not that meaningful considering the launch linked cost, and the patent expiry and potential settlement support for FY26 launch will be as a base scenario according to MK. And they expect $40 million in FY26 from this product and $124 million in FY27, which is expected from this drug.
So now, while Sun Pharma has been down by around 3.5%, on the other hand, Cipla is up 1.5%. What, according to you, is creating the buzz around this stock?
Well, on Thursday we had a news wherein US FDA has classified Goa facility as voluntary action indicated for Cipla. On Thursday the stock was up around 10%. Now this is the second best classification that a plant can get from US FDA. Let's see what brokerages has to say on that. If you see that Nomura on Cipla has upgraded buy from hold. Now the target price is set at 1800, which determines 16% potential upside. Now the Goa facility, according to them, has cleared by FDA as VAI, boosting potential approval for the limited competition drug called Abraxane, which is a cancer treatment drug. Now a company will also focus on inhalers, injectables and peptides and ARVs in US with expected growth of FY25 to 27 according to brokerage house. Now the higher valuation has been aligned with sector trends and regulatory progress, and Cipla stock, if we see, is up 29% over the past year but has lagged behind Nifty Pharma's 54% rise. And lastly, if you see, risk reward view favors Cipla with expected returns of 6 to 21% in 1 year, and the key risks according to brokerages are lower than expected growth in India and weaker US revenue and higher pricing pressure.
Thank you, Varsha, for that analysis. Now, Azad Engineering jumps over 8% after signing a 5-year pact with Mitsubishi Heavy Industries. Anushi is joining us to tell us more on this.
Right, so Azad Engineering is buzzing in trade today. Now, this is after the company has signed a 5-year pact with Mitsubishi Heavy Industries, and this pertains to supply of power turbine energies for about a 700 crore of a contract consideration that we are looking at. The execution period, as mentioned above, remains in the range of 5 years. But other than that, there have been other developments also for the company, wherein they've got a business award from US-based Honeywell Aerospace for high complex components. So phase 1 of these award also stood at about $16 million. So taking these orders in consideration, if you look at the company's overall order book, that has exceeded 4,500 crore as of November 24. Even if you look at some of the other key highlights of the company, they're developing a new facility which will start to add to the top line from FY26 onwards. That is 10x the capacity from what the current capacity holds. So with this, they have also reaffirmed the revenue growth guidance of 25 to 30% in FY25, and margin profile will remain in the 33% to 36% of a range. But to know more about what has happened, we also spoke to the management of Azad Engineering, Mr. Malkani, and he had this to say about the company's outlook forward.
Azad's relationship with our global OEMs has been there since our inception. So we started our journey with Mitsubishi. Talking about the current order, we started a journey with them but in 2012, and 2012 till today, I think there are several milestones that we've hit. The business that we are into, we manufacture critical parts that are mission and life critical. So the qualification cycle is really long. So over the last about so many years, we've spent a lot of time trying to qualify part after part, engine after engine, and today we've reached a point where we've qualified most of the parts for Mitsubishi, and we are quickly ramping up. And as a commitment to our clients, we set up a foundation stone. Mitsubishi had laid a foundation stone for the new plant, which we are dedicating for them. This is a testament to it. So this long-term contract is them tying us into capacity, because for them, we are a growth supplier. Our wallet share is barely anything today, about 1% of our overall addressable market. So we are looking at building this up from here and quickly growing from 1% to 2 to 3 to 5%. So this has been, our thing. And this is a significant one because today, as a best cost and quality supplier of critical parts to Mitsubishi, I think we are in the beautiful position where we're catering to the likes of these engineering companies, these large engineering companies, to cater to their global demand. So I think the market is huge, and I think this is just beginning of how we are able to scale ourselves. We'll be able to scale ourselves. So this is where it is, and this is not just with Mitsubishi. If you see this in our business, we've been signing long-term contracts across our product portfolio, whether it is in energy, aerospace, defense, or oil and gas, all the sectors that we are operating out of, because now the capacity is coming up. We are building the 10 times larger capacity, and sometime in the next financial year, we'll start producing our parts out of the newer facility. So it's all linked to what we've been talking about for these many years.
Right. Now, while that was the latest update on Azad Engineering, primary market gears up for a busy week. Mahima is standing by in the studio to tell us what all do we have lined up.
Right. So in terms of the primary markets, this week will remain completely action-packed. But before that, just to give a brief about how 2080 panned out for IPOs, where in 2080 somewhat, 85 companies raised around 1.21 lakh crore via IPOs in the main board space. And moving on, in 2081, in the first week itself, we will be witnessing 4 new main board IPOs which will open for subscription this week. And they'll be raising approximately 18,534 crore in the first week itself, and this amounts to roughly 15% of the 1.21 lakh crore raised by the 85 companies in somewhat 2080. Now moving on to what IPOs are set to open this week. First one is Sagility India, where the issue size is roughly 2,107 crores and the price band is set between 28 to 30 per share. In terms of the issue size, it's an OFS of 70 crore shares by the promoters of Sagility BV, and it is affiliated with the EQT Private Capital Asia. Now, in terms of how the IPO will pan out, where in terms of pre-IPO, it has raised around 366 crore by selling 2.61% stake to 9 institutional investors in October around 31st itself. Moving on, the next IPO that will be in focus will be Acme Solar Holding, where the issue size is 2,900 crores. The price band is set between 275 to 289 per share. The issue dates are between 6th of November to 8th of November. It's a fresh issue of 2395 crore and offer for sale stands at around 505 crore. In terms of the next IPO in focus, it will be Niva Bupa Health Insurance. The issue size for this particular IPO is again 2,200 crores. Issue dates between 7th of November to 11th of November. It has a fresh issue of 800 crores and OFS of around 1,400 crores. And the price band for this particular IPO is set between 70 to 74 rupees. The next in line is the most awaited IPO, that's the Swiggy IPO. And for particulars of Swiggy IPO, the issue size is 11,327 crores. The issue date, the IPO will open between 6th of November and end on 8th of November for subscription. The price band for Swiggy is set between 371 to 390 per share, and the offer for sale from the 11,327 crores stands at around 6,828 crores, and the fresh issue for this particular IPO is 4,499 crores. Now, in terms of how Swiggy's IPO has been so far, in terms of pre-IPO, a lot of celebrities have invested in Swiggy. We have Ramdev Agrawal, Amitabh Bachchan, Rahul Dravid, Madhuri Dixit, Karan Johar, who have shown interest in the Swiggy IPO in the pre-IPO segment itself. So all of these investors have already shown interest in the Swiggy IPO, and of course the retailers will set to show their interest on 6th of November till 8th of November. Now, how the funds will be utilized by the Swiggy management? Well, they'll be repaying the Scootsie amount of roughly 1,343 crores. They'll also be using some fund for their tech and cloud infrastructure of around 703 crores. Marketing spends will be approximately 1,115 crores, and they aim to reduce their debt of 137 crores also via the proceeds that they will receive via the IPO. Overall, in terms of valuation picture as compared to Zomato, Swiggy is valued at $11.3 billion and Zomato's current market cap stands at roughly $26 billion. So Zomato's market cap is almost double of what Swiggy is being valued at right now. So that's a plus point overall also for Swiggy. However, Swiggy is around 4 to 6 quarters away as per analysts from being EBITDA positive. So that is one of the key metrics to watch out for when it comes to the Swiggy IPO. So this is the overall view of how IPOs will pan out in this week overall in the main board space.
Well, thank you so much for that, Mahima. Looking at that picture, it looks like quite an exciting week for a lineup of IPOs. Thank you. Now, as we wrap up on Diwali celebrations, let's take a look at the worsening air quality index in New Delhi and Mumbai. New Delhi's AQI touched 317 as of 8 a.m. today this morning as a blanket of smog plagues the capital. Meanwhile, in Mumbai, the AQI has marginally improved after plummeting to poor category. My colleague Juhi Jadhav joins in for more details.
Well, absolutely. If you go to see post Diwali, the air quality, especially in Mumbai, is a bit worsened because the air quality is disturbed. Today morning, if you go to see, there was a smog enveloped the entire city, and the temperature had also risen. The temperature currently in Mumbai is 36.5, which is a bit higher than the regular temperature. The highest temperature that was recorded in Mumbai was 35, but now it has increased. The main reason for this is said to be Diwali, and due to Diwali, the firecrackers that were bursted. Due to this, the air quality has also deteriorated. Also, BMC has issued certain measures on the construction sites because the dust that goes in the air because of the construction site affects people, and this has also worsened in the health of few people.
Right. Thank you so much for that update, Juhi. Now, that's all the time we had on this edition of Market IQ, but stay tuned to NDTV Profit for more news and updates.
Market veteran Ramesh Damani puts on the cephalogist's hat to get you the insight you need on the US presidential battle of the century. Will Kamala Harris claim a historic victory, or will Donald Trump march back into the White House?
According to polls, if Biden and Trump were running, I think Trump would have handily won. He was almost measuring the drapes to the White House even before the election.
What are the stakes for India and its investors?
The road to the 1600 Pennsylvania Avenue goes through Pennsylvania this time.
Tune in to US Election Watch with Ramesh Damani exclusively on the NDTV network.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Hello and welcome to the Mutual Fund Show. I am your host Neeraj Shah, and in times like these, it's very important to get the right advice to try and understand what should you do with your mutual fund portfolios. Is it time to do some rebalancing? Is it the right approach to think of rebalancing, if at all? If you're putting in fresh money to work, what are the kind of funds that you should put your money to work? Because I'm guessing one thing is a given, that these times don't last forever, and therefore there should not be any change to the investment strategy if you have. There could be, or maybe there could be minor tweaks to it, but the process of investing, which a lot of Indian investors have gotten into a habit of, which is the systematic investing, should probably just continue. Is that true or no? Let's talk about this with Mrin Agarwal and Rishabh Desai. Both of them join me on the show today. And both of you, thank you so much for taking the time out and being with us, because you know, it's an important day to be doing this show, because portfolios are reeling under pressure. Whether you're a stock market investor or a mutual fund investor, looking at your portfolios today, you must be a bit ruffled about how they are performing. So Mrin, before we talk about the how to rebalance, what should an investor do? Is this a good time to rebalance? Is it a time to sit tight? Or is it a time to continue the investment strategy as earlier, as difficult as it may be?
So good afternoon, Neeraj, and nice to be on the show today.
Thank you.
Well, as such, I think what is really important is to, first of all, build a portfolio that can withstand different market conditions. And, you know, it's very difficult if we have to keep changing our portfolio strategy or even doing the tweaking on a regular basis based on the news that's there in the market. It's going to be very, very difficult to actually manage a portfolio like this. So I would say, yes, we will talk about a couple of things that you can check at this point. But as such, I think if you have got your asset allocation right, and if your portfolio is as per your asset allocation, then I think you should just sit tight.
Rishabh, what would your view be?
Hi, Neeraj. First of all, thanks so much for having me on the show. It's been quite some time since we last did a show together. Yes, I think I more or less agree with what Mrin had to say. Like, you know, sticking with one's goal, one's time horizon, and most importantly, knowing your risk appetite and asset allocation is something what we advise our clients to do. I mean, if you have a long-term time horizon, then sticking with your risk appetite and your asset allocation is something what makes sense. So to answer it very simply, you know, sitting tight, sitting put during these volatile times makes more sense. You know, another thing, what we recommend our clients to do is to diversify well. You know, a lot of people, you know, concentrate on product selection, category selection. But, you know, it is very important to diversify across different styles if someone is venturing into pure equity, like growth and value and contra. So, you know, that really helps in kind of like mitigating risk. And, you know, I wouldn't say, see, if someone is investing in pure equity, of course, there are going to be double-digit drawdowns. But at least, you know, in different market cycles, different products and different styles will outperform. So it's very important to diversify across different styles as well, Neeraj.
Okay, so, okay, Rishabh, let's start with you on this then. Is there a change of style that you are prescribing with the markets the way they have behaved in October or the way they behaved in October? So come November, the first few days, should people change their portfolios to a style which according to you might work better? And why is that so?
I think, you know, what we recommend, and this is my personal portfolio as well, Neeraj. See, I invest 50% in growth and 50% in value. Right now, growth can consist of, say, like momentum and like pure value. Momentum and pure growth-oriented strategies. And the value segment can consist of, you know, value style and contra style as well. So I think investing 50% in growth and momentum and 50% in value and contra is something what I personally follow. You know, I really don't need to bother too much about rebalancing too frequently, you know, when markets fall, because see, currently markets have just fallen around 10%, which is very hardly. If you see the mid and small cap space, the valuations are still very expensive, right? So I think following a 50% growth and 50% value strategy is something what I would do.
Sorry, one more follow-up. Actually, let me first go to Mrin. Mrin, I heard your opening answer. I'm just trying to understand. would you do some rebalancing, some fine tweaking, or are you comfortable continuing with what your strategy was, let's say 3 months ago?
Actually, Neeraj, that really depends upon what the investor has done. The issue that we really see today is, as always, trend chasing. And people have taken very high exposure to sector and thematic funds, for example, or they could be overexposure to, for example, mid caps or small caps where valuations are stretched. So the tweaking is going to really depend upon the stance of the investor. As such, I do recommend rebalancing only once a year at the end of the financial year. But at this point, if you are feeling uncomfortable as an investor, the first thing that you need to be asking yourself is that, are you ready for market volatility? Because of 10 to 15% drawdown every year is very normal, firstly. Second thing is that if you are not comfortable with this volatility, then you need to look at your portfolio and you need to have a look as to where you have a exposure that you want to cut down. So is it small cap? Certainly, I would say that if you're holding these sector funds and thematic funds, which has been the largest category that investors have acquired over the last 1.5 years, I think those are the funds that you should certainly look at exiting irrespective of the return. So clearly, it's a question of the investor's stance and whether they have the ability to stick on or not. And that said, investors should also keep in mind that equities are meant for the long term. So a little bit of volatility in the short term is not really going to make a difference as long as you have the ability to remain invested for the long term.
Okay. So, Bryn, let's try and understand. Let's assume it's an average investor who's watching us right now with average risk appetite and an average time horizon as well. So let's say the time horizon is not necessarily 1-2 years, but right now we are trying to gauge, or even people who might have shorter term goals, but this show is dedicated to people who have a proper mindset in mind of having to look at or investing with a 5-year, 7-year, 10-year period under an ideal case scenario, right? Should thematic funds be out of the window for the time being? Let me ask pointed questions to try and understand this. Should thematic funds be out of the window, or are there thematic funds which you're happy having?
I never advocate thematic funds. So yes, thematic funds should be out.
Okay. Rushabh, what about you?
I agree with Mrin.
Okay. That's
I really don't see any value addition in sectorial and thematic bets, Neeraj. See, unless and until if someone is investing in a product like Nasdaq 100 or a FANG Plus index, that's very different, because they are taking global exposure over there. And in today's time and age, I think having global exposure is very important. But see, if you see the thematic and the sectorial funds today, I mean, if I diversify well across flexi cap, multi cap, mid cap, and small cap, automatically, sectorial and thematic rotations is going to happen from the fund manager side, right? So I really don't see a lot of, cluttering your portfolio with too many funds. And of course, see, there has been plenty of liquidity over the past 2-3 years. Returns have been phenomenal, and investors are more or less pumping in money looking at to the past returns. So I think, following a consistent methodology, right? See, we are in this business day in and day out. So we can take probably sectorial bets or thematic bets, but a regular investor may not understand, when to invest and when to exit. See, there are two things. One is entering at the right time and exiting at the right time as well. I mean, look at the China market today, right? I mean, China is more or less like a theme what someone would want to invest, or look at the media sector. It is still negative today. So I think thematic bets is something what retail investors should completely avoid.
Okay, thematic funds should be avoided. So that's the first one. A lot of people are talking about slightly exotic options, and I'll come to those before I come to normal. So people buying into China ETFs, people buying into global funds or global ETFs as well. Is that an option currently while India is looking so volatile? Rushabh, I'll start with this one with you.
Absolutely. I think global diversification, especially in the US economy, is very important. I mean, if you see, look at the 10-year data, Neeraj. See, 10-year data clearly tells us that Nasdaq 100 has actually outperformed most of the broader Indian indices, which is the Nifty 50, Nifty 500, right? So I think having one foot abroad, especially in the US economy, looking at the giant nature, looking at the consistent returns, looking at the transparency what the US economy have. I mean, there are so many sectors and companies what India has not even seen. I mean, we are still developing, especially in the technology space. Look at Facebook. Look at Alphabet. These are like Apple. These are giant, super giant company with global presence. And let's not forget, how much ever we want to discuss that the dollar is deteriorating, but see, today dollar is a global currency. I will not deny that, and it's going to take a very long time for the dollar to come down the rail or come down from the primary currency, at least at this point of time. So I think having some global exposure, especially in the US economy, is something what I strongly recommend, Neeraj.
Rin, would you concur, and is it only US, or would you look at China ETFs? Would you look at some others?
I would concur with Neeraj. I'm sorry, I would concur with Rishabh. And yes, I think US is a great market. In any case, it makes up a large part of world market capitalization. And as Rishabh pointed out, some great investments out there. So certainly I would look at some diversification into US markets.
How do you do this, Brin?
I'm sorry, Neeraj?
How would you do this diversification? An average investor wants to know how to take that exposure. What would you say?
I would say look at a S&P 500 ETF or look at the FOF route, either through the international fund, of course, through the mutual funds, not through direct stocks, because again, if you're going to try and identify stocks directly out there, one is, the whole aspect of what you buy, but more than that, the tax reporting of foreign stocks in India is quite tedious and complicated. So, of course, through international mutual funds.
Okay, and is there, are there specific funds, Brin? I'll come to you, Rishabh, with the same question. Are there specific funds? These need not be an exhaustive list of recommendations, but indicative list of some of the funds that people can look at and study.
I would say the S&P 500 index fund is a good option if you want a more broad-based option. Because again, when you look at NASDAQ or when you look at FANG, it's primarily directed towards technology stocks. So I would say pick up a S&P 500 index that's available. And of course, study the tracking error to know how well the fund is actually optimizing the investment.
Rishabh, what about you?
I more or less agree with what Mirin had to say. See, there are two ways to look at this, Neeraj. One is, unfortunately, there is a offshore limit by the RBI. $7 billion US is the MF overall limit, and it's kind of exhausted today. Okay, so maybe there will be many funds which may not take additional lump sum money, maybe SIP, but not lump sum money, especially in S&P 500 or Nasdaq 100. See, what happens is that when investors try to buy ETF, when there is a restriction, the ETFs can also go at a premium because they are traded in the secondary market. So that is also something what investors really need to keep in mind, is that go for either pure index funds or the FOF route. Let the AMC manage that for you, because if you try to buy the ETF, you really need to see at what price the ETF is being traded. You don't want to buy an ETF which is trading at some 4-5% premium, right? It'll not add much value to your portfolio. So I think keep your portfolios very simple, keep your products very simple. It'll be much more easier for you to track and monitor. So I think if someone wants to invest abroad, Nasdaq 100, either in the index fund route or the FOF, or also investors can look at Indian mutual funds with a combination of Indian equities and foreign equities, for example, like Parag Parikh Flexi Cap Fund or the SBI Focus Fund, because even Parag Parikh Flexi Cap Fund do still have around 17-18% towards the US economy. And I think around SBI Focus Fund does somewhere around 9-10%. So I think including these funds which have Indian equities plus US equities should do the job.
Okay. So Before we take some queries, I just have one more question. Would you guys advocate bringing in hybrid funds, balance advantage funds at the current juncture, or was the right time when the Nifty, on hindsight of course, or was the right time when the Nifty was at 26,000? Min, the question to you first.
See, again, we can't time markets. So I would say, again, it really comes down to the investor. If you cannot take volatility that's there in mid caps and small caps, of course, you have the option of investing in large caps through the ETFs, or you have the option of adding in the balance advantage funds as well. Now, balance advantage funds can be added at any time, because the beauty of the balance advantage fund is that it keeps doing the rebalancing between debt and equity based on various quantitative parameters. And ideally, when markets are overvalued, then it tends to reduce the equity allocation. So I think, again, these calls cannot be taken basis volatility in the market or basis news that is coming out. This is a strategy that people have to decide, how much volatility they can take, how much risk they can take, and decide basis that. But yes, it's a good time for you to do that check in case if you're feeling worried about your investments right now.
Okay. And Rishabh, what's your view here?
Neeraj, see, if someone wants to play defensive, right? I think the best way to do is to be more aggressive during market corrections. See, what happens is during market corrections, you are going to accumulate more units, number one. Once you accumulate more units in the future, see, markets, we have seen that, the downfall or the negative periods have been much more lesser than the positive periods in the equity markets, right? So I think once the units have been properly accumulated during bull markets, the returns will be enhanced. And most importantly, once that volatility phase is waved off after a couple of months or maybe a year or two, the future downside will be very well protected during future market correction. So I think number one, if someone is investing in pure equity, I think the best way to play defensive is actually to be more aggressive and invest or pump in more money during market conditions, market corrections. See, if someone wants to go into dynamic asset allocation funds or balance advantage funds, one should be very clear why they are entering in these products. One is that they cannot stomach volatility. That is a good way to go into balance advantage or dynamic asset allocation funds. Number two is that they don't want to time the markets. They don't want to keep on rebalancing from time to time. And they want to leave that to the fund manager to do the job, right? From equity to debt and debt to equity. So once someone has a moderate risk appetite, someone who cannot stomach too much of volatility, and someone who does not want to time and rebalance on a regular basis, I think balance advantage funds and dynamic asset allocations funds are meant for them.
Okay, let's try and get in some queries going. G2 is the first question is from G2. Don't quite know the age, but G2 is ready to invest 50 lakh rupees into mutual funds with a long-term view. Considering current market conditions, a good time to invest, or should G2 wait until the US election outcome is over? Well, G2 is just a couple of days out, but he needs guidance on timing and strategy. Mrin, you want to help?
So as I said, you can't time markets. First thing to keep in mind that long-term view means that you should be in it for at least 7 to 10 years. So that's my definition of long-term. Secondly, in terms of strategy, well, again, it depends upon how much risk you want to take. But I'm presuming that you're looking only at equity mutual funds right now. I always suggest that take a combination of index, like a Nifty 50 index fund, a flexi cap fund, a mid cap fund, and a small cap fund, because in this, you're getting exposure across the different market cap segments, as well as some amount of international exposure. Of course, provided you choose funds like Parag Parikh, which have international exposure. But I think one of each of these categories is honestly good enough. In the portfolio, it will give you large cap, mid cap, small cap, and international exposure. And always remember that it's very important to be diversified among fund houses as well. So don't choose all funds from one fund house, among market caps. And at the same time, remain invested in this for the long term. That is what is really important.
Okay. Rishabh, is your advice different?
I think, investing around 50-60% into flexi cap and the rest can be divided into mid and small caps. This is something what I would recommend because it gives a good blend of both these spaces, which is the large cap space and the mid and small cap space as well. So I think, first of all, staggering investments is something what I would recommend because we don't know where the markets are going. I mean, the earnings have also been quite flat on a year-on-year basis. So I think we may see some kind of stagnation or the correction could continue for some more time. So I think don't just look at the US elections. It's a combination of everything, which is the global picture and plus the domestic earnings of how they are panning out to be at this point of time. So I think staggering investments over the next probably 3 months or so, this is something what I would recommend. So 50-60% into flexi caps and the rest can be divided into mid and small caps.
Okay. Second query is from Aman Mehta. Aman is 33 years of age. He says I invest 1.24 lakhs a month. Interesting number. 1.24 lakhs a month through an SIP route and is looking for long-term wealth creation, ideally a CAGR of 15%. Is requesting a review of the portfolio. The goal, Mrin and Rishabh, is a 15% CAGR, as I said, and the portfolio has PPFAS flexi cap, which is about 31,000 rupees a month, SBI Contra 31,000, HDFC mid cap 31,000, and Tata small cap 31,000. So those are the 4 funds, 31,000 each, 1,24,000. Is this a good portfolio or does it need some changes? Rishabh, I'll start with you on this.
Neeraj, I think overall it's a brilliant portfolio, good blend of growth and value. It's not too cluttered. Perfectly what I had actually thought, Parak Flexi Cap and SBI Contra are like Flexi Cap strategies and one mid cap and one small cap. I think just one change I would like him to make is the HDFC mid cap opportunities fund is a giant fund today. It's around more than 60,000 crore fund. So I think the AUM, especially in the mid cap space, can hinder the future performance. So I think I'm not telling him to redeem from HDFC midcap. I'm just telling him to stop the SIP in HDFC midcap and start an SIP in a moderate AUM midcap fund. So probably I would suggest him, instead of HDFC midcap, I would suggest him to go for an Edelweiss midcap fund. I think that's the only change I would recommend. Otherwise, the portfolio looks perfect to me.
Okay, portfolio looks perfect. And Mrin, very quickly, your advice before we move on to the next query.
So I concur with Rishabh that the portfolio is fine. I think somewhere he needs to possibly look at moderating his the returns expectation. I do see a lot of investors who think, SIP, if I do, I'll get 15%. So I think it's better if you have a slightly lower lower return expectation of, let's say, 10 to 12% over, having this goal. It's nice to have a goal of 15%, but yeah, that's the only point that I'd like to make.
Okay. The next query, Mrin, is from Abhijit Das, age 22 years, wish to start investing 10,000 rupees a month into SIPs with a 10% annual step up. Horizon of 20 years. Can you suggest some funds?
Well, firstly, I'm happy to see that he's having this step-up plan in place because one of the key things which I advise on is to focus on the corpus because we are resuming average returns of 10 to 12%. So then a good way to actually build corpus is the actual annual step-up, right? In terms of funds, given his age being 22 and the fact that he has an investment horizon of 20 years, I would say take some good risk, take higher risk and look at mid caps and small caps. So maybe like Mire mid cap, SBI small cap. These are a couple of funds that I would suggest.
Okay. Very quickly, I'll try and take one more query, and Rishabh will have to make this quick. But Rajesh Chaudhary, age 36 years, is investing 90,000 a month through SIPs across 10 funds. 24-year time horizon, expectation of 14% CAGR. Please review the portfolio. Rishabh will have to make this quick. The goal, as I said, 14%. The funds on your screen, PPFS FlexiCap 10,000, Mira Asset Consumer 10,000, HDFC Midcap about 10,000 in HDFC Manufacturing, about 5,000 coupled with the HDFC Pharma, Nippon India Growth, Nippon Multicap, HDFC AMC, Nifty B. So about 9 funds.
So there are two things, Neeraj. One is there are too many funds, which I would recommend to trim down. Number two is that he's concentrating on certain AMCs, which is HDFC and Nippon. I think diversifying across different AMCs and different products is something what I would recommend. I'm not a very big fan of the sectorial and thematic funds. So manufacturing, pharma, consumer. I think these are the funds I would like him to kick it out from his portfolio. Stick with 4 or maximum 5 funds. I don't think there should be more than five funds in one's portfolio, in one's core portfolio, especially on the equity side. So probably stick with FlexiCap fund. Introduce one more FlexiCap fund, like probably say Franklin India FlexiCap fund. He can stick with Nippon India Growth Fund, and I would encourage him to introduce one more small cap fund, probably say like Kotak small cap fund. But just stick with 4 or 5 funds, 2 or 3 FlexiCap, 1 mid cap, and 1 small cap, Neeraj.
Got it. Okay, both of you. That's all the time that we have on the show. Thanks so much for taking the time and being with us and giving us your advice. Really appreciate your time. That's all the time that we have on this leg of the mutual fund show. Stay tuned to NDTV Profit.
Market veteran Ramesh Damani puts on the cephalogist's hat to get you the insight you need on the US presidential battle of the century. Will Kamala Harris claim a historic victory, or will Donald Trump march back into the White House?
According to polls, if Biden and Trump were running, I think Trump would have handily won. He was almost measuring the drapes to the White House even before the election.
What are the stakes for India and its investors?
The road to the 1600 Pennsylvania Avenue goes through Pennsylvania this time.
Tune in to US Election Watch with Ramesh Damani, exclusively on the NDTV network.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just
Hello and welcome. You're watching Market IQ here on NDTV Profit. I'm Harsh Saita. Quick check on where markets are at. Some bit of pressure, but holding on now around the 1.5% lower on the Nifty 50 benchmark. And pressure, of course, still very much there. Let's pull up the contributions in terms of which stocks are contributing to these losses. And on the positive side, far and few, right? Just look at Dr. Reddy's, Cipla, Tech Mahindra, less than 5 points in terms of, or rather, less than 6 to 7 points in contributions overall from those 3 to 4 positive contributors. And you look at the negatives, Reliance Industries, if you can pull up the intraday chart for that one, and followed by HDFC and ICICI as well. Some of the heavyweights really packing a punch. 3.3% lower on Reliance and holding fort around that zone. HDFC Bank has now slipped over 1% lower, and ICICI Bank also down around 1.4%. So the heavyweights coming to the fore in terms of dragging the indices and the benchmark especially lower. That's how it's essentially playing out. Let's pull up the Nifty mid-cap as well as the small cap. The Nifty mid-cap down 1.3. So some bit of outperformance there. And the Nifty small cap also down around 1.9. So some bit of underperformance there. But the Nifty mid-cap and small cap has recovered from the day's lows. But the recovery very small. I mean, hardly visible essentially on that intraday stock chart. Let's pull up the advanced decline as well. See how that's essentially playing out. The VIX is spiking 7% now, and the advanced decline, there you go. The VIX up around 7% thereabouts, but the advanced decline, 400 advances now. So slight bit of improvement, maybe 100 stocks or so have switched sides from declines to advances since the morning. But nonetheless, the breadth of the market looking increasingly weak. In terms of quickly on the sectoral heat map, if we can pull that one up, 1% lower on the bank, Nifty, 0.5% lower on IT, and around 1% lower on Pharma and PSU Bank as well. But outside of that, you're seeing losses really clocking on some of the other indices, especially look at the Nifty Energy down 3%. And the Nifty Realty also down nearly 3%. So some of those indices really taking a knock in trade today. But let's stick to the energy index. We have Mihika here to give us more context on what's happening, especially on the Nifty oil and gas front. Mihika.
You have the Nifty oil and gas down about 3.8% intraday. When you talk about the top losers, you have companies like IOCL, BPCL, HPCL, and Reliance Industries. And the Indian oil marketing companies have fallen over 4% intraday. Now, when you talk about what's not working for the OMCs, well, up first is the volatility in Brent prices. While they do stand lower on a one-year basis, they have seen almost a 4% uptick in the past week itself. And the OMCs also posted a weak Q2 earnings. They have extended LPG losses. Now, they did announce a commercial price hike by 62 rupees for the 19 kg cylinder. However, when you talk about, while this could offer some relief on the LPG losses that the companies have been facing, they have been facing majorly losses on the retail part of it, which is currently played on a subsidized race. So the market's not, you can see while this would be positive for the realizations, the stocks have corrected. When you talk about what's not working for Oil India and ONGC, well, production outlook remains uncertain. The companies are yet to post their Q2 results. And lastly, when you look at the city gas company pack, well, IGL, MGL, GGL all fallen 2 to 4% on an intraday basis. One of the major headwinds for the sector is the lower APM gas allocation, which impacts their operating costs and thereby their profitability. Analysts also expect near-term margins to remain under pressure, and the PNGRB notice to end network exclusivity is also a key overhang.
Okay, thanks for that, Mihika. So some bit of pressure creeping in on those indices, but we also have Azad Engineering. The stock on a day when indices are under pressure is doing very well. You had an order win come through. Anushi is here with all of the details on that one. Anushi, you spoke with management as well, so give us some context.
Right, Harsh. So Azad Engineering, as we speak about that, it is in buzzing in trade today, and this is after the company has signed a pact with Mitsubishi Heavy Industries, and this is for a consideration of about 700 crore that we are looking at. So this current phase that they've described as a 700 crore of order is for supply of power turbine engines, and the time period for the same is about 5 years. But other than that, also there have been a lot of recent developments in the company which needs to be focused on. First is the company had received a business award from US-based Honeywell Aerospace as well for high complex components, which was about a $16 million of an order that we are looking at. So considering these recent order wins, the company's order book, according to the management, now stands at about 4,500 crore. They're also developing a facility which is about 10x the times of current capacity which is there, and this will be operational from FY26 onwards. So a lot of incremental revenue that we are expecting from there onwards, so which will also help the company maintain its near-term to medium-term outlook of about 25% of a growth, 25 to 30% of a growth that is mentioned. Other than that, if you look at the margin profile of the company, they've guided for a 33 to 6% of EBITDA margin. So this is all that is happening in Azad Engineering, Aerospace and Division also on a strong pickup as we go forward to the other quarters.
Okay, so that's on Azad Engineering. Stock is up 10.5% in trade, so doing very well. 5-year pact with Mitsubishi, driving those numbers, or rather the stock price higher. But Anushi, stick with us. We also have Max Estates, very interesting note coming through, and lots of developments also coming through. They've hiked their guidance as well. Just talk us through what Investec's view is on this one.
Okay, so Investec, they've reiterated the buy rating on this stock, and this is at a target price of about 700. So 25% of an upside that we are looking at. A lot of key details that they've highlighted in their note which stand out. First is the FY25 guidance, which they've raised about 4,800 to 5,200 crore as compared to 4,200 earlier, and this is after the company Estate 360 launch, which garnered a much higher response to their pre-sales as they had anticipated earlier. So this this along with the expected GDV of about 4,800, company is set to beat its FY25 guidance. What we should look out for is also the launch of 4th tower, that is Estate 128, which is set to aid the FY25 numbers also. Other than that, the company has also received the NCLAT approval for its Delhi 1 project, and this is in Sector 16B, spanning about 2.5 million square feet. If you look at the GDV value of this one, that stands at about 1,500 crore. The company also, post its QIP conclusion, they're sitting on a cash surplus of about 1,400 crore, which is aimed to be used for augmenting the development pipeline further and for looking at the other ingredients which will help to scale their GDV pipeline, that's the gross development pipeline, even further. So at 1.3x the NAV size, Investec believes that the company's risk to award ratio still remains on the favorable side. So this is what is happening in Max Estates as well.
Okay, so plenty moving. Max Estates up now almost 2.5% in trade on the back of that. But PVR Inox numbers came through, and if we can have the intraday chart, we saw, or rather are seeing quite a bit of pressure where the stock is concerned. Rucha is here to break down the numbers as well as give us perspective.
Hi, thanks Harsh. So PVR Inox is down about 8.5% in terms of intraday low levels, and the volumes are trading at 3.5 times its 30-day average. Now, this is largely on the back of underperformance of the film industry, and the latest movies are also not doing well for the stock as such. Well, the 2Q earnings say that the revenue was down about 19% and margin came in at about 29.5% versus 35.3%, and it posted a net loss of 11.8 crore versus a profit of 166 crore. Now the results came in back about 3 weeks ago, and if we look at the performance since the results, we'll see that the stock is down about 11% in last 1 month and is down about 10% in last 1 year. So in last 1 year, the stock has not given much of returns, but when we look at the analyst recommendations, 16 have a buy rating, 4 have a hold rating, and 2 have a sell rating on the stock. But the return potential over here is healthy at about 24.5% for the stock. But last time during the earnings time, when we spoke to the management laid out few strategies such as the passport strategy, the re-release strategy, which is really doing well for PVR Inox, and it also stated that the second half will largely be better because of lineup of good movies. But we'll see whether they are able to maintain up to the mark as stated by the management or not.
Okay, thanks so much for that, Rucha. Quickly switching focus to Sun Pharma. That's another stock under some bit of pressure, 3% lower in trade, of course off the day's lows, so some bit of recovery on that one. But Varsha here to give us context on what the order from the New York District Court means for Sun Pharma.
Well, thanks Harsh for that. So we are seeing pressure on the stock. Now this is on the back of only one product, that is Lexelvi. Now the US District Court of New Jersey has granted a injunction in a patent dispute case against its hair loss drug, that is Lexelvi. Now what does this mean? Sun Pharma cannot launch this product Lexelvi until court ruling or patent expiry. Now this drug is used to treat hair loss. If just going on the background, so actually they received this US FDA approval with plans for July to August launch, and the expected sales were around $200 million for the next few years. If you see, the Lexelvi was actually initiated by, developed by Concert Pharmaceutical, which Sun Pharma acquired in Jan 2023 for $576 million for the same product. Now, well, now the Sun Pharma cannot launch this product, and this is the reason we are seeing the pressure on the stock, because the market size or the revenue potential was actually good when it comes to this product. Now let's see what brokerages are saying. Despite the pressure in the stock, brokerages are actually bullish on the Sun Pharma, wherein Citi has maintained buy with a target price of 2080 with upside potential of 12%. Now according to them, Lexelvi launch gets delayed, which is a setback to their specialty segment, which was actually the growth driver for the business. Now delay may have impact on the near-term earnings of 3 to 6% of EPS, and this may impact competitive dynamics as well. But they are valuing Sun Pharma at 37 times of March 26 EPS. While MK, if you see, again bullish on the company with target price of 2,350, upside potential of 31%. Now they say that Lexelvi EPS contribution in FY26 is not that meaningful considering launch linked cost for the product, and the patent expiry and potential settlement support in FY26 is actually is the base scenario that they have expected, and they are expecting $40 million in FY26 from the product and $124 million in FY27. This figure, so basically $200 million is expected from Lexelvi in next 2 to 3 years.
Okay, thanks for that, Varsha. But stick with us because Cipla is the other one in focus. Now this one ran away in trade on Thursday, Varsha. Again up 1.6% in trade today as well. Your sense with regard to what's happening here?
Well, on Thursday, there was this news wherein US FDA had classified Goa facility as voluntary action indicated, and that's the reason we saw 10% uptick in Cipla on Thursday. Now, this is the second best classification that a plant can get from US FDA, but let's just look out what actually brokerages are saying. So, we have Nomura, wherein they've upgraded to buy from hold. They've raised their target price with 16% of potential upside. They say that the Goa facility, which is actually an important one from a product perspective. So Goa facility clears FDA as voluntary action indicated, boosting potential approval for limited competition drug called Abrixin, which is a cancer drug. Now a company is also focusing on inhalers, injectables, peptides and ARVs, which will be actually, these are the driving growth for Cipla for FY25 to 27, and the higher valuation is aligned with sector trends and regulatory progress as per the brokerage. Now Cipla stock, if you see, is up 29% over the past year, but has lagged Nifty 50 Pharma, which is up 54%. Now risk reward is actually, risk reward is favoring Cipla with expected returns of 6 to 21% in 1 year. But they've also highlighted the key risk, that is lower than expected growth in India, weaker US revenue and higher pricing pressure. So that VAI status which the company has got, this is actually driving the stock price that we are seeing.
Okay, thanks for that, Varsha. So Cipla obviously doing very well again in trade today, 1.5% high on a tough day of trade. Puneet joining us as well because M&M is the top gainer on the Nifty 50 today, also the top contributor on the Nifty 50 in terms of positive contributories. So Puneet, give us context, M&M, the numbers overall, as well as what brokerages seem to be suggesting or taking away from those numbers.
Well, definitely, it was a positive set of numbers, and for a change that the market is reacting positively on an auto number, because we've seen, two-wheeler makers also report decent set of numbers in this particular month, but the stocks are down today in trade because of larger issues. So for M&M specifically, it was a really strong month. 25% growth reported by the company in this particular month. And when we make it a comparison with someone like a Tata Motors as well as Maruti, that's the stark divergence that you can see for this SUV maker. For Tata Motors, it was roughly about 0.4% fall in sales, so largely flat compared to the last year. Maruti grew about 3%, but that stark divergence for M&M is one of the key things that's driving positivity for the stock overall in the market as well. Now, we do know that they launched the Thar Roxx also in this particular quarter on 15th of August. That got roughly 1.7 lakh bookings in just the first hour. And just for context, the company sold roughly about 60,000 Thars last year. So, 3 times of their annual capacity or annual sales of the older model is what they got just in the first hour. So that's one of the key things as well. Apart from that, as you rightly said, we had a couple of brokerages that came out with a note today on it. Goldman Sachs was the first one. They have a target price of 3,600 on the stock, 27% upside from the previous close. So a good upside from this current market levels as well. And they have mentioned that the company's new SUV order backlog with battery EV launches is also one of the key positives on the stock as well. They've also said that the launch as well as backlog of the company in terms of order book is much higher compared to its peers as well, and they're expecting a 20% EBIT and 100% free cash flow generation for the company over the next 3 years. The essential part is that Kotak has also upgraded the stock to a buy from an ad rating earlier. They have a target price of 3,150, which is slightly low from the previous target price of 3,300. Now, they said that the M&M is continuing to expect and generate a lot of growth going forward as well and outperform the industry across the benchmark, including the peers of Maruti as well as Tata Motors. They've also said that the successful new launches as well as brand development has been one of the key strategies post Anisha era, and that seems to be continuing and bearing fruit as well. Apart from that, they've said the tractor segment has been one of the key things as well. It showed roughly about 25% growth in this year as well, and they have maintained that they've just slightly cut their target price in this particular year. That's basically because of lower LCV volume, but traditionally the PV business has been doing very well. So overall, slightly higher discounting period going on, but very positive by both these brokerages on M&M, and results are expected on the 7th, and it's expected to be a bumper result in this particular quarter as well.
Constructive on M&M, both brokerages, but more importantly, M&M's fallen from those 52-week highs. Thanks so much for that perspective, Puneet. Let's switch focus. Acme Solar Holdings set to launch its IPO on the 6th of November. 2,900 crore crore IPO. The price band is set at 275 to 289 rupees per share. And Sajit Mangat of our team spoke to the management of the company. Listen into a slice of that.
We are going to use the primary proceeds for repaying the debt of our subsidiaries. And of course, as we reduce the debt, it will help us grow and execute the capital expenditure we plan to undertake in next 2 years.
Give us a sense of your balance sheet, Ankit. What is the kind of consolidated borrowings or debt on your books as of now?
So as of June 24, our consolidated debt in the book is roughly 9,200 odd crore, and our net worth is around 1,940 crore as of June 24.
Okay, and is it possible to give us how much of that debt will come down by?
Yeah, so basically the business model that we have is for every project, right, that gets financed, we raise financing, right? It's a continuous process. But now as we speak about this particular IPO, our primary issuance is 2395 crore. Out of that, roughly 1795 will be used for repayment of one or more project subsidiary. So you can see essentially from this portion, 1795 project loan will come down. But for the balance project that will be commissioning, of course, we'll be raising debt to fund those projects as well.
Give me a sense of the kind of business that you operate today in terms of operations. How big is it and what is the kind of projects which are work in progress or under construction?
Sure. So, Sajit, we are an independent power producer. We are the pure play renewable IPP, independent power producer, and we are in the business of supplying power long term to government entities. We solely supply power to government entities, and we have been doing it for last 30 years. So we are an integrated player who develops, bids, develops, finances, and operates the power projects, all the renewable power projects. We have been only in the solar space for the last 13 years. And we are focused on this space because the generation in solar is much more predictable than other sources of renewable power.
So last 13 years, we have executed close to 3.7 gigawatt peak of solar projects. Of course, we have divested around 1.8 gigawatt peak of solar projects. So we have around 1.8 gigawatt peak of solar projects with us today. And as we speak, we have energized a 1.2 gigawatt plant in Jaisalmer, which is 1.8 gigawatt peak of capacity. So aggregating that, we have around 3.6 gigawatt peak of energized projects. And they are all selling power to government entities. So for the 1800 megawatt peak we had before this new plant, we had Solar Energy Corporation of India is our main customer. And in terms of the operations span across 13 states, 12 states of India. We have plants across India wherever, because historically, as you see, the states used to call the bids for their own procurement. And 2015-16, we had Solar Energy Corporation, which came into being. And then the procurement of electricity became centralized. And that really led to a large growth in the sector because the credit rating of the procurer was immediately elevated because SECI is a AAA entity. And starting 2024, government has really elevated the program in terms of 50 gigawatt procurement every year. And these 50 gigawatts will be procured by 4 central government entities, which are called Renewable Energy Implementation Agencies, being SECI, NTPC, NHPC, and SGVN. So going forward, all of our projects are with these 4 entities. So whatever we are constructing beyond 2025, which is more than 2.5 gigawatt, is all with these central entities. And the historically, it was around 50% of our capacity was with state and 50% was with center.
Well, plenty of very interesting IPOs, and among a swathe of that, you also have Niva Bupa. But as we wrap up the show, let me quickly go across to a slice of that conversation with the company. Aiming to raise around 2,200 crore in the upcoming issue. Sajit Mangat again spoke with the management of the company regarding their plans with regard to the money that they're going to be raising. Listen in to a slice of that.
In terms of the objective of raising this 800 crores primary, Sajid, our purpose as Niva Bupa is to give every Indian the confidence to access the best healthcare. So we're very excited about investing, in the growth opportunity of health insurance in India. And this 800 crore, is to support our growth plans over the years and to meet our solvency requirements. That is the main reason that we're raising this money during this issue.
Your solvency is already around 2.4, if I'm not wrong, at the end of June. How much will the solvency go up by? And when you say that it's for the growth requirements for the next couple of years, how many years are we talking about?
So yes, our solvency will go up, and to some extent we will be overcapitalized because of this primary raise. But the idea is to take care of future growth requirements, and we believe that as we execute well, we will continue to be able to grow and also become self-sustaining as a company with this capital increase, Sajid.
My understanding is that Bupa and your other promoter, Fettletone, is offloading shares as part of the OFS. Fettletone becomes an investor and it gets declassified as a promoter post this allotment. And how much stake will be Bupa holding after this fundraise?
So Bupa, as you know, Sajid, is a long-term shareholder. They are more than 80 years old as a company, and their only reason for existence, so to speak, is for the customer. That's their corporate structure. The only reason Bupa has an offer for sale in this issue is to accommodate FII headroom. As you know, FDI cap is 74% in India, and to accommodate the considerable interest that we're seeing with FIIs, Bupa has agreed to an offer for sale through the issue. But that's the only reason that they are bringing down their shareholding. True North, as you know, is private equity. They have completed 5 years of their investment here, and there is the remainder of the offer for sale is coming from True North.
What will be the FI headroom, if I may ask, as part of the entire process?
So Bupa will, after this, OFS will be at 56%. So 74% is the FDI limit. So that's the kind of headroom we have.
And True North will not bring in any FI limit, right? Because it's a AIF based out of India in that sense. I understand that Fettleton has sold 10% stake to Axis Bank. So how much Axis Bank would be getting as part of the proceeds?
So Axis is not a direct shareholder in the company, Sajid. They are only through Fettleton. So whatever is the dilution that will be there for Fettleton, in proportion of that, Axis will get diluted.
And what will be the Fettleton stake after this?
That will be in high teens.
Okay. And they will be holding the entire thing through an SPV for some time.
That's correct.
Give me a sense of the kind of business growth that we are seeing, because in Q1 we saw net loss, and I understand that is because of some of the seasonal factors that came in. But how is the business growing in? Because we've seen that Q2 from some of the industry players that are there has been a very tough quarter and very highly competitive quarter for many of them.
So as far as business growth is concerned, as of August, and this is publicly available information, Sajid, our growth rate is about a shade over 30%. So we continue to grow well over market growth rates. Our Q1 financial results are out, and if you look at our Q1 numbers year-on-year basis, we continue to grow at 30% plus, and there's also been a significant improvement in our overall operating metrics, and this is publicly available.
Market veteran Ramesh Damani puts on the cephologist's hat to get you the insight you need on the US presidential battle of the century. Will Kamala Harris claim a historic victory, or will Donald Trump march back into the White House?
According to polls, if Biden and Trump were running, I think Trump would have handily won. He was almost measuring the drapes to the White House even before the election.
What are the stakes for India and its investors?
The road to the 1600 Pennsylvania Avenue goes through Pennsylvania this time.
Tune in to US Election Watch with Ramesh Damani exclusively on the NDTV network.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
simplifying futures and options trading.
Don't.
It's tough out there. You don't need me to tell you that because it is looking weak. The only respite, if you will, from the brutal selling that we've seen today is that we are off from the lows of the day, if that is any solace. The intraday of the Nifty will show you that we are no longer as weak as we were sometime during the lows of the day. Though I must say the Bank Nifty is steadily headed lower, and it was down about 0.6, 0.7%. Now the Bank Nifty is trading in or around the lows of the day, if you will, about 1% lower. So here there is a small issue, of course. The VIX has jumped up in trade, so India Volatility Index is certainly higher. Was about 7-8% and still about 6.5% as we speak. And the market breadth has looked terrible, really. But Tamara will speak about the broader end of the spectrum. Just get the advanced decline ratio once before we get to the heat map, because the market breadth has a yawning gap and it's only stayed wide. So 1:4.5 or 2:9 maybe in favor of the decliners. Let's get the heat map there too. Maybe 2 or 3 stocks. Oh, okay. There's 7 stocks in the green. M&M and Tech Mahindra standing out. There is Cipla. So M&M and Cipla both have a brokerage note to themselves. But aside of that, hardly any solace there. On the flip side, look at the kind of cuts. It's not really 7-8% to a heavyweight, etc. It's across the board. You're seeing some serious gashes with upstream oil plagued by ONGC and Reliance Industries, and even BPCL, so downstream, upstream oil and gas, as a sector which has been one of the worst performing sectors in our series gone by. Also has a tepid day today. Hero MotoCorp brings up or sums up what's happening to autos. So Hero, Bajaj Auto looking very wobbly in the session today, and consumption names like Titan as well as news specific names like Sun Pharma also down. So net, when Reliance, HDFC, etc. are all looking so wobbly, you wouldn't have anything else, the market do anything else but stay lower. Tamanna, broader markets though under a vicious grip of a sell-off which is not quite abating.
You know, it's very tough to find the silver lining today, Neeraj, and unfortunately it has continued its slide. There seems to be no factor which will actually give any real relief. So while we're looking at the small cap about 2% down, we should pull up all the sectoral indices for a second just to give you a sense of how painful the market is today. The India VIX is the only thing which is in the green, which is not a good sign at all. That's up about 6%. Energy stocks, oil and gas, energy being hit the most. Slight bump up in crude prices. Remember, OPEC Plus has decided to push forward its date for production increases from December. They were supposed to start in December. They've said they'll push it by a month. So you've had an increase in crude prices, but does it justify the kind of cuts here? Perhaps not. Some impact on your HPCL, BPCL because of LPG prices, but really no real reason for this. The Nifty reality, look at that, about 3% down. Infra stocks, media stocks. I mean, there's nothing which has been spared. The broader indices really taking the brunt of it. In fact, IT relatively looking better, one of the weaker segments from the morning. I want to just pull up the market breadth for a second before we go to the top gainers and losers in the broader market. No point of talking about specific stock stories because this is today a wide sell-off. Look at that. 413 advances to 1,775 declines, and that gap is only yawning. Look at some of the key gainers and losers, and you will just see, maybe if you're looking for a reason, those who have declared results even a few days ago, the market really coming down heavily on those companies whose numbers were not up to the mark. I mean, that's probably one of the reasons that Poly Medicure would be seeing an 8.5% cut. Vodafone, complete pullback. It was, remember, up in the Diwali Muhurat trading session. No reprieve there. PVR Inox, one would have thought decent kind of an upside, and for the Diwali movies, Singham, etc., but no relief there at all. And Imami, is this a consumption story? Is this something else which is hurting it? Not too sure. Brigade, Bharat Dynamics, there is really no relief here. On the other side, some stocks which are showing a spot of green, and let's talk about some of them. Gillette, again, good number. So if I had to draw some kind of a reasoning for this, perhaps that could be one. Fine Organics, also decent set of numbers. So maybe that's why we are seeing this kind of a bump up in few stocks, but they're far and few in between, to be honest. What are the key reasons for this sell-off? Before I hand back to Neeraj and we continue with all of the conversations, we need to talk about what is happening. Disappointing Q2 earnings. The reason we've picked this as number one as a reason, even though there's so many global issues right now, because the underlying problem and weakness in corporate earnings doesn't go away. Let's move on and see some of the other factors. Nervousness ahead of the US poll definitely is one. It's too close to call. Market intelligence tells us that a Trump win would be preferred by Indian markets. Does that happen? Does that not? We do not know. The US Fed meeting outcome, I don't know why it's bothering the street so much. We had conversations this morning. It was very clear that no matter who the next US president is, a 25 basis point cut is something that the Fed is pretty much clear it's going to do by the 7th of November. And the sell India, buy China strategy is a big one. Remember, important set of meetings in China this week, which will decide on what is their fiscal measure to boost up their economy. Will that lead to even a greater outflow of foreign funds from India into China is the big question. So these are some of the factors, Neeraj, but whichever way you may slice and dice it, the fact that this is a very tough market to be in, and the question is, what do you do here?
Yep, let's ask our guests this question. What are they doing in a scenario like this? Kunal Shah, Senior Technical and Derivative Analyst at Sharekhan, with us on the technicals and the derivative positions. Kunal, good having you. Thanks for joining in. The news somewhat not quite starting off on the best footing on the first full day. But what to do now? 1.5% lower, not at the lows of the day, but certainly under pressure. What do you do on the benchmark indices?
Good afternoon, Neeraj. I think definitely this is something what was expected from the markets, where we were advising our client as well that at least in the mid cap and the small cap space, don't try to be very aggressive in this market. If I talk about Nifty, even there the weakness is visible. On the technical charts, if I talk, then Nifty has already given a head and shoulder breakdown on the technical charts. The target for the pattern comes at around 23,500, 23,400 zone, which again coincides with the 100 DMA of the Bank Nifty for the Nifty as well, which is placed at 23,456. So I expect this fall to continue towards 23,500, 600 zone to test that 200 DMA for Nifty index. Post that, we can see a good recovery in the markets towards again 24,000, 250, 300 levels on the upside. So my sense is still we are in the last leg. Probably this last leg will still continue. The mid cap and the small cap space is something which I will say that it is an avoid even at the current levels. We might see further correction on the downside. So be very stock specific on mid cap and small cap. But index, I think more 300-400 points on the downside, max 400 to 500 points on the downside is what I see from the current levels. And post that, we can see good recovery on the higher end. For the Bank Nifty index, now this has been the resilient, but you can say all credits to HDFC and ICICI for maintaining those levels for the Bank Nifty. If they would have not been there, then Bank Nifty would have been much lower right now. So for Bank Nifty, I think 51,000 is what I'm looking at. If that is breached for the Bank Nifty as well, then we might see further correction towards 50,000 levels as well. So Bank Nifty, it's a wait and watch situation over here. Nifty is still on a sell on rise. If whatever pullbacks you get, utilize that to sell. We can test levels of 23,600 to 500 on the downside.
23,600 isn't that far, right, Kunal? So, okay, but fair call. You're playing from a trade perspective, 250, 300 points. You would want to bat for that. I heard you say a different tone for the Bank Nifty. Would you go long today on the Bank Nifty if you're a high risk trader?
No, definitely not, because two things, Neeraj. One is if we look at the rollover data, Bank Nifty witnessed decent rollovers compared to its 3 months average as well. But still, Bank Nifty on the higher end is facing rejections around that 51,700, 800 zone if I talk about the spot levels. So till the time we are not surpassing that decisively, I don't see Bank Nifty going on the higher end. And if that 51,000 mark is taken out decisively, then we will see that 1,000 point fall in Bank Nifty as well. I think Bank Nifty is still in a wait and watch. I'll not be on the buy side. I'll not be on the sell side. If the levels get breached, then our trade would be activated. But for Nifty, it's active. It's a sell on rise. Whatever rallies you get, utilize that to sell the market.
Okay. Kunal, as difficult as it may be, what are the stocks that you're recommending this afternoon?
See, I think pharma is a space where one should be in such volatile markets. So over here, first pick on the buy side would be on Syngene. So Syngene in this weak market has been showing a lot of strength. The stock has maintained a support of 840, 830 zone on the downside. In fact, in today's weak market, on the daily chart, if you see on technicals, it has formed a hammer candle on the verge of a breakout above 20 DMA. So clearly short-term momentum could build up in the stock. So this is a buy from the current levels, keeping a stop loss of 842, looking for targets of 900 to 920 on the upside. The second one will be on the sell side, and I think that comes from the IT space. IT is looking weak, and here pullbacks could be utilized again to sell the sector. For me, the first pick over here would be Birlasoft on the sell side. So Birlasoft has already given a breakdown below that 550, 560 zone, which was the support. So now again, if you get pullbacks into Birlasoft, utilize that to sell Birlasoft, keeping a stop loss of 565 and looking for targets of 520 to 500 on the downside.
Okay, let's go across now to Puneet on what I think, it's tough to pick one sector that is doing badly, but let's pick out auto because auto has been in focus. Puneet, all the auto sales numbers are out. Some didn't look as bad as the others, but nevertheless, that's not really helped the nifty auto and key auto companies, is it?
Yeah, definitely. But, the numbers weren't so bad. When you look at it was actually pretty good numbers. I think just getting a hit on because of the whole market correction and the magnitude of factors that you highlighted at the start of the show. So when you look at the two-wheeler specifically, Hero MotoCorp 18% volume growth, Eicher Motors 31% volume growth compared to last year. Somewhere like a Bajaj is the only one which is missing just about 2 to 3% volume growth on an overall basis, while TVS is another big winner, 13% volume growth in this particular time frame in this month, specifically in October. And I just looked at the data on Vahan as well. So this data you see on your screen is of course wholesale data, which goes from the companies to the dealers. When you look at the Vahan data as well, the retail sales have been quite positive. So while Hero has wholesale 6.7 lakh units in this particular month, they've also retailed 5.7 lakh units. So that's another positive. Eicher Motors is another one which I took notice of. 1.1 lakh units sent to dealers. 95,000 was sold on on their retail channel as well. So that's another key positive. While TVS and Bajaj, legacy players maintaining inventory of about a month to like 35 days. So, it's a big positive because inventory correction might be something that we'll, get a lot to know about in this week itself, because companies are expected to report results as well. Mahindra comes on 7th, Tata Motors comes on 8th. So we might get a little more flavor on the inventory, but overall, the numbers are quite positive. I also want to bring in a tractor segment, the first particular month in this particular fiscal year of double-digit growth, and it's, performed very handsomely. So Escorts is the one which I want to talk about. 20% growth in volumes in this particular year. It's a build-up going into the Rabi crop season. M&M also another key player in the tractor segment as well. About 29% growth versus just about 16 to 17% growth that was expected by analysts. So the tractors and the two-wheelers are key big winners. Within the four-wheelers, it's of course just Mahindra that's driving the growth. 25% growth in this particular month itself, and that's on the back of 20% growth in the last 2 months also. So overall, they've built up inventory, and that's retailed faster as well in this particular month. So another key positive, while commercial vehicle is a sector that's not picking up at all. We've seen Ashok Leyland report a 10% fall, but overall I think the tractor segment and the two-wheeler segment goes very hand in hand with lower inventory, newer launches, as well as faster sales that we've seen in this particular month. So it will be important to see whichever results are still left of what happens, and I think commentary from both Mahindra and Tata Motors by the end of this week, both expect to report results, will be something to watch out for.
Okay. We in fact spoke with Bajaj Auto's Rakesh Sharma on the sales numbers for October, and he talked about his focus on the 125cc category and the growth outlook for the second half of the year. Listen in.
In our area of focus, which is the 125cc plus segment, in this 30-day festive period, compared to the similar period last year, our growth in retail terms is above 20%. And at an overall level, it is, 11 or 12% in motorcycles. In electric vehicles, it is in triple digits. Now, so that is what the festive is. Now, obviously, a festive period, if the average sales in a month is about 8.5%, 9%, for the year, arithmetically speaking. The festive period is about 12%. So obviously there is advancement or postponement of sale, which bumps up the sale like in the festive, like you're saying. But when you start to see the festive could have gone worse, and then that would have put some question marks about the months to follow. But I think the customers coming back to the purchase cycle in such strong numbers indicates that after the sort of dip which is expected in November and December, things should be looking good, back to the kind of forecast we were doing of 6 to 8% for the fiscal.
So that was a view coming in from Bajaj Auto. Kunal, anything in the auto pack that you're seeing attractive at these levels? M&M, of course, is the only outlier, but anything else?
Definitely, from the current levels, if I look for the entire autos as a sector is looking quite weak. So I think it's a sell-on-rise rally for the sector in whole. Today, the sector has taken the support at 200 DMA, but I think even that will be eventually breached on the downside. So I think utilize pullback to again sell the sector. We might see further downside for the auto sector towards 23,000 mark. So for me, yes, apart from M&M on the technical charts, nothing is looking great at the current levels. Even in Tata Motors, TVS Motors, or an Aisha Motor, these all are looking weak on the chart. Pullbacks could be an opportunity to sell them.
Okay, well, let's get in. A big market voice. Prateek Aggarwal, MD and CEO of Motilal Oswal Asset Management Company, Johnson, on the show today. Prateek, so good talking to you today. At the outset, a very happy news somewhat. Unfortunately, it's not quite starting off in a good note, Prateek. Before we talk about the long-term, Prateek, what's the cause for the concern today? We heard talk of some margin calls getting triggered, some other reasons, but it's come as a surprise to a lot of people, the ferocity of the down move today.
Yeah, so that's been a surprise to us as well. Maybe to some extent, the motor trading, the spaces which were buoyant are correcting, so that happens on a lower volume and more domestic participation versus institutional. So some bit of that may be happening today. But yes, the sharp downtick was not expected. What one also needs to look at is arbitrage funds and their ability to keep absorbing large blocks, especially in the space where F&O exists. If the arbitrage yields fall, the attractiveness of that space versus the usual debt funds reduce, and that can impact the ability to absorb large blocks also. So maybe some bit of that also happening.
Wow. Okay. You reckon that could, okay. Prateek, you reckon that could also be a technical factor. Now, if that is indeed the case, would that be long-lived or would it be a fairly swift corrective move because of, essentially the arbitrage funds led piece that you spoke about?
No, so when the selling pressure is high, the premiums reduce. If the premiums reduce, arbitrage returns would fall, and that will cause that space to be less attractive versus let's say a liquid fund or an ultra short-term fund, and that sets in its own dynamics. It can change very quickly if there is some positivity and we get a day or two of market up move and the premiums get restored. So that is how it is. Now arbitrage used to be a not so large space, but now two funds together maybe 1 lakh crore with rest of the funds also of a reasonable size, though smaller. But we have got two very large funds.
Prateek, hi, good afternoon. Tamanna here. I'm just wondering what the strategy right now is. Are you sitting on the sidelines waiting for a further fall? Is this the time to start deploying cash or wait?
No, so we as a house typically stay almost fully invested. I keep saying this, we are focused high conviction house. Our single position is minimum 2.5% by design. which means 2 to 3% cash is one position cash. So enable trade, we may have that kind of cash, but that's about it. So we stay fully deployed. We are currently fully deployed, but we are deployed in spaces where we see earnings growth trajectory to be very high. Not for 1 quarter, but for 2 to 3 years, a large delta over index. Our belief is over time, market follows earnings growth, and I think that is the source of outperformance. So we are not there in many spaces. So this result season hasn't been too good, especially for index-heavy spaces. Well, we are not there.
What would you look at? Anything that you think is now at the right valuations? I mean, if you look at some of your banking majors have taken quite a tumble, especially in the private bank space. Anything there which is now beginning to look attractive, Prateek?
So I have a differing view there. In any economy, when the economy is being tested, it is just the start of a emerging market kind of a phase. Banks are the easiest way for foreigners to enter into a country, and one finds bank as a part of total market cap, bank as a part of index, increasing over a period of time and then peaking out. To have an index which used to be 35-36% lenders, can it get higher than that? Okay, is point one. As the economy diversifies, as people have other sources of capital, private equity markets, etc. Banks don't remain the same commanding position that they used to have, and that should be reflected in their position in the index as well. Second is valuations itself. Now, just look at it. We have some cases where the market caps may be 2x the lending book. Think of it. Market caps are 2x the lending book. So you lend $100, your market cap increases by 200. Is that sustainable? It does prompt you to think. So while a lot of people would say, on P's they look cheap and etc. Maybe banks are just simply making too much of money, and over time, with so many of them doing practically the same thing, competitive intensity should result in lower margins. But whatever it is, our view on banks is a tad different from that of the street. So our funds are actually reasonably low on banks, and that's worked for us. Maybe a quarter hence, maybe 2 quarters hence, when the NIM pressure reduces and we start to see them deliver earnings growth in excess of the index earnings growth, we would up the banking exposure, but as yet we are below 10% in most funds.
Prateek, one follow-up. There are murmurs of the index hitting levels of 22,000 as well, and not surprising people. This was not in the realms of conversation when we were at 26,200 just about 40 days ago. So now, one, could it be possible? And anything is possible, of course, but do you believe it's realistic? And what could be the factor? Would it be the earnings-led disappointments thus far, or is it something else if indeed we are headed there?
No, so one, I don't believe we are headed there. Two, I think the market has digested most of the difficult news, difficult phase that was presented before it. So, the result season, everybody knew monsoons are very good. If the monsoons are very good, we tend to work a tad lower. For example, coal would be mined a tad lower. Etc. So there is a small slowdown in economic activity. Now, post monsoon, the reverse happens. You get a good crop, the farm incomes go up. There is cheer all around. So it is one phase to the next. Then in first quarter, you got general elections. Obviously, government spending did not happen. We looked at government balances with RBI high and liquidity in the system being low. Now you have seen the deficit figures in the first half well under control, which means in the second half government spending should also increase. Third, you were looking at very large NFOs, IPOs, QIP kind of a supply of paper. Now, some of the largest are behind. One or two are left. That's about it. So, one more source of investing, which was probably reducing the flow to the secondary market, would also be out of the window. So many things which impacted market sentiment over the past 2 quarters are now behind us. Yes, one new thing has emerged, which is US bond yields moving up and sharply. So just a month back, there was cheer. They had cut rates by 50 bips. Bond yields had come down to 3.75. And people thought there would be more cuts, and we will get even lower. But now, as we speak, they are at 4.3 in the US, and that is what is causing a lot of money outflow from the country into probably back into the US. So I think that is something that we need to look at. As we see bond yields there stabilizing, I think the selling pressure here should also stabilize. That said, we do believe the bulk of the selling pressure, in terms of intensity, is probably behind us. We can't be getting 7,000-8,000 crore a day kind of outflows. I think if 3,000 to 4,000 crores a day kind of outflows happen, it should prove to be way more sustainable.
Okay. Thank you so much, Prateek, for joining us. It's a tough afternoon, but we'll have to wait and see what the next few days are looking like. Mainly, OMC and gas stocks also in focus. They are sinking in trade. Mihika joining us now with what the key triggers are for the fall. Yes, Mihika?
You have the Nifty oil and gas down about 3.8% intraday. When you talk about the top losers, you have companies like IOCL, BPCL, HPCL and Reliance Industries, and the Indian oil marketing companies have fallen over 4% intraday. Now, when you talk about what's not working for the OMCs, well, up first is the volatility in Brent prices. While they do stand lower on a one-year basis, they have seen almost a 4% uptick in the past week itself, and the OMCs also posted a weak Q2 earnings. They have extended LPG losses. Now, they did announce a commercial price hike by 62 rupees for the 19 kg cylinder. However, when you talk about while this could offer some relief on the LPG losses that the companies have been facing, they have been facing majorly losses on the retail part of it, which is currently played on a subsidized race. The market's not. You can see while this would be positive for the realizations, the stocks have corrected. When you talk about what's not working for Oil India and ONGC, well, production outlook remains uncertain. The companies are yet to post their Q2 results. And lastly, when you look at the city gas company pack, well, IGL, MGL, GGL all fallen 2 to 4% on an intraday basis. One of the major headwinds for the sector is the lower APM gas allocation, which impacts their operating costs and thereby their profitability. Analysts also expect near-term margins to remain under pressure, and the PNGRB notice to end network exclusivity is also a key overhang.
Okay, well, that's OMCs for you, though. It's pointless singling out any one bucket because everything is done really, really badly. The only contrast is, interestingly, that two-wheelers are down under pressure today, and we have a four-wheeler name in Mahindra & Mahindra right at the top of the pile when it comes to the Nifty 50 gainers. Nevertheless, we'll take a break on that note. On the other side, try and get you some trading ideas, more trading ideas. Kunal is with us, of course. Joining us will be Siddharth Khemka on the fundamentals.
Market veteran Ramesh Damani puts on the cephalogist's hat to get you the insight you need on the US presidential battle of the century. Will Kamala Harris claim a historic victory? Or will Donald Trump march back into the White House?
According to polls, if Biden and Trump were running, I think Trump would have handily won. He was almost measuring the drapes to the White House even before the election.
What are the stakes for India and its investors?
The road to the 1600 Pennsylvania Avenue goes through Pennsylvania this time.
Tune in to US Election Watch with Ramesh Damani, exclusively on the NDTV network.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Lord Street deals, finance and policy news that could shape your tomorrow, the newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy.
Back with India market close, and let's get before we get to this, let's just get the intraday of the Nifty, because for whatever it's worth, we are now above 24,000 on the Nifty. So should pull up that piece before we get to this. Not that it's big solace, but I think today the street was scared that we will close below 24,000. If you remember, viewers, Kush Bora in the morning said that if a close happens below 24,000, that's a big negative. Now again, different people may view this differently, but you certainly view this as an afternoon of a little bit of a recovery from the lows of the day, for whatever it's worth. So this is one part. I do want to see if we can pull up the European indices and just see what they are doing in trade today as well. There are some internal pressures, of course, because of which India has reacted the way it has. Europe is absolutely flat. So the world markets are not gyrating as badly as the Indian markets have corrected. So a bit of recovery that should be cheered for sure. Okay, we'll get to that and some specific stocks which might be bouncing. So we'll show you some breakout alerts as well. But before that, I think an important piece to note is what the US election impact could be on the US Fed impact. So Gavekel Research has put out this note, and they put out the two scenarios. Obviously, Kamala Harris win versus Donald Trump win. Kamala Harris win, they say the Fed could choose to sit on its hands, not literally, but just do one rate cut. And even if they do that and then do anything further, Democrats won't bash the Fed for exercising its autonomy, because that's their allegation that Donald Trump will harm the autonomy of the US Fed. Let's move on. So they say that if this victory happens, that the Fed may signal that further rate cuts will be data dependent, and the scenario is bullish for the US dollar and possibly for treasuries as well as growth stocks. Now what happens in the case of a Donald Trump victory? Again, Gavekel view, but they say that the Fed will deliver the expected November cut, possibly following up with a cut in December, even if the economic conditions may or may not warrant it, because the Fed will want to show that it's autonomous. It is something that Fed has guarded very, very zealously, their autonomy. And if they don't do that, then it will open up the Fed to accusations of political meddling. They also say that it's uncertain whether Jerome Powell will choose to stay on after this victory, what to happen or no. So it's really interesting because this one election outcome will have multifold impact on multitude of things and not just the US economy, and hence it becomes so important to look at and analyze.
You know, very, very interesting, Neeraj, on what the Fed could do. I don't know if the Fed is going to change its stance depending on who is POTUS, and by 7th of November, you might not even have a full picture, because remember, it's possibly going to be quite a close contest, but we have also pulled up what the key promises are from both sides, and that becomes important as well. Trump, for example, is saying universal tariffs on all imports from all countries. He wants sweeping immigrant deportation programs. He wants to deepen corporate tax cuts, so that perhaps good from the corporate's point of view. Kamala, on the other hand, Kamala Harris wants a hike in corporate tax rates, a federal ban on price gouging in the grocery sector, and she also wants subsidies and tax credits for housing, childcare, and other segments like that. So which one is better for India, which one is worse, really becomes a big question. Siddharth Kemka joining us now, Motilal Oswal Financial Services. Siddharth, great to have you on. A bit of recovery in the market perhaps in the last few minutes, but do you think that you will wait and watch before saying that there is some relief happening?
Yeah, hi, good afternoon, Tamanna. So if you see, yes, I think what Neeraj was saying, that the entire street is hoping for a close above that key psychological level of 24,000. But nonetheless, today's market definitely shows the weakness, the inherent weakness that we are going to witness. So I'm not too sure how the technical levels are going to support, but definitely if you look at from a fundamental perspective, there is not much of support. We are in the midst of the earnings season, and we did an interim review of shorts for the coverage companies, and for the 166 companies that are within our coverage, we saw earnings declining by about 8% for the quarter so far, which is lowest in the last 17 quarters. So you can see the kind of pain we are seeing in the quarterly results, and the pain is also there in a lot of large cap names, and we have seen the punishment that the market has given. So I would hold on to my horses and say that the market is likely to consolidate for some more time. There are global headwinds in terms of who will become the next US president, what will the US Fed do, and following that we also have the RBI, and when will the RBI rate cut cycle start. So I think the major event trigger for the market would be the budget, which would now be only in the 1st of Feb, where we could find some solace in the terms of the government spending, which has been lacking in the H1 of this financial year, and which is a major factor driving the slowdown in the economy. So I would say that the market is likely to consolidate for some more time.
Okay, so Siddharth, is there anything that you would want to pick up right now? Some of the heavyweights really getting pummeled today, especially on the banking side. You have RIL as one of the top losers. Would you wait to find the bottom in this market right now as far as the heavyweights are concerned?
So it's very difficult to say where the bottom is. My approach would be to look at the results. Companies where the results are already out and they have come out good, that is the space or pockets where I would like to be in. For example, we got very strong numbers from ICICI Bank. So I would say that that's a good stock to keep accumulating. It's very difficult to keep an hazard on what the results may come, and we have seen the kind of disappointment and punishment once the results are out, and even a slightest of miss, the market is very harsh this time to kind of punish any disappointment in kinds of numbers. So clearly, wherever the results are out, which are strong results, valuations are comfortable, those kind of pockets are places where I would start looking at accumulating over the next few weeks.
Okay, Kunal, just one quick follow up to you. This little bit of a bounce that we've seen from the lows, right? We are no longer 2% lower, 1.23, 1.25%. Are there any stocks which are showing strength which interest you enough to make a small trading position on the long side?
I think PSU banks is something which is looking strong. Probably here we could see some upside in the coming days as well. So structurally, if I look at a long-term perspective, I think PSU banks are showing early signs of bottoming out. We need to have further confirmations on that. But for a trade perspective, Bank of Baroda looks good at the current levels. 252 is where currently the stock is trading. One can keep a stop loss of 247 and look for targets of 258 to 260 on the side.
Okay, there's a little bit of a pickle for Sun Pharma individually as well. The stock has certainly fallen post the US court putting an injunction on the launch of one of the company's drugs, apparently in the hair treatment space. Varsha Johnson with the details. Varsha, 2.5% lower. Is this a big deal or is this a one-day event that will pass?
Well, Neeraj, for short term, yes, it is kind of a big deal because the product which the court has banned, they were expecting almost $200 million of revenue. Now, the US District Court of New Jersey has granted a preliminary injunction in a patent dispute case against its hair loss drug, Lexelvi. Now, Sun Pharma cannot launch this product until court ruling or patent expiry. So basically, the company has disagreed with the decision and they plan to appeal further. Now, US FDA had given approval to Sun Pharma for this product with plans for July to August launch, and the expected sales were around $200 million over the next few years. Now, just to give a background, Lexelvi was initially developed by Concert Pharmaceuticals, which Sun Pharma acquired in Jan 2023 for $576 million and so basically because of this product, management was expecting good revenue from this product, and even analysts were expecting almost $200 to $250 million of revenue from this product. So maybe the launch will be delayed. So because the expiry of the patent is around December 26, so they won't be able to launch this product before that. But a few of the brokerages are actually bullish on this company. So